NewsBuzz.com.
Good morning, everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. And this morning we are looking at some green arrows. Dow futures up by 200 points. NASDAQ indicated up by 100. The S&P futures up by 27. This comes after the idea that Scott Bessent is going to be traveling to Switzerland to meet with some of his Chinese counterparts. And that had markets feeling a little bit better about things as soon as that announcement came out.
Okay, I'm going to tell you about Jensen Huang. I wasn't going to tell you. Everybody's been waiting. NVIDIA CEO Jensen Huang making some new comments on the market opportunity in China, even as the U.S. government clamps down on transfers of American technology to that country.
It would be a tremendous loss not to be able to address it as an American company. It's going to bring back revenues, it's going to bring back taxes, it's going to create lots of jobs here in the United States. And of course, we just have to stay agile. Whatever the policies are of the government, whatever is in the best interest of our country, we'll support and we'll stay agile and keep moving on.
Huang making those comments to CNBC yesterday on Power Lunch, another phenomenal brand of CNBC. He said he sees China as a $50 billion AI market in 2 to 3 years. It's coming up, Andrew.
It's coming.
Ross Sorkin.
It's coming.
What a brand.
It's coming.
Speaking of branding.
You can try.
You'll negotiate for me or not? 5%?
I'll work on it.
Okay.
We'll get you an Uber. That's what's up.
Yeah,
Get you an
that's
Uber.
about as good. And not even one of the good ones.
We'll talk to Devin
Not
at
even one
7 o'clock. He's got an Uber.
One with dents on it, not even one of the. What's the best one?
You want Uber Black? No, but we'll negotiate.
Is there
Uber,
something?
Uber X for you, sir?
Anything better than
We'll get you
Uber?
Uber Comfort. How about Uber
Are
Comfort?
there really that many things?
Yeah, there's a couple different kinds. Depends where you are in the country.
What's the best? I want the best.
Probably Black SUV.
Black, the likes of which has never been seen.
Coming up, inside the mess at Newark Liberty Airport. Lots of Ubers hanging out there. We'll get you a car to Newark. The delays, the problems with air traffic control, and frankly, can anything be done about it? That's the question. We've got some answers, hopefully. And after the break, we're going to speak with former acting FAA Administrator Billy Nolan. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back. Check out shares of chipmaker AMD. The company gave a strong current quarter revenue forecast as it reported first quarter sales and profit above analyst estimates. CEO Lisa Su saying those results came despite tough regulations on advanced AI chip exports, and AMD expected to lose $1.5 billion in revenue through the end of the fiscal year because of those export controls. The stock moving higher on the back of the news, close to 2% right now. You don't want to miss an interview with Lisa Su. That's going to come up at 9:30 a.m. Eastern Time with our friends on Squawk on the Street.
Squawk on the Street, an additional branding of Squawk Box.
There you go. Strong brands.
We're very versant in all of the different squawks.
Very innovative as well as we go up the steep side of the mountain to new heights. You're going to keep doing this?
No.
Probably. Renewed calls for a mass overhaul of the air traffic control system following a tense 90 seconds of no communication between air traffic controllers and pilots at Newark Airport last week. Transportation Secretary Sean Duffy is expected to announce details of a plan tomorrow. Joining us right now to talk about all of this is former FAA acting administrator under President Biden, Billy Nolan. Billy, I just want to say there's a lot of people who are very concerned about whether it's safe to be traveling here. What do you think?
Yeah, good morning, Becky, and thanks for having me on. So the bottom line up front is that the system is safe, but certainly it could be more resilient, and that's what we're hearing from Secretary Duffy, and that's what he is working on. We've got a very much of an aging infrastructure that has been addressed in incremental ways for the past 2 decades. So when I look at all of this, the first thing I would say to the flying public is that our system is safe. There are redundancies in place, but it is an aging system, and it is literally hundreds of systems that the FAA controls that all need modernizing.
The modernization projects have been underway for forever. They're not supposed to officially end until the year 2030 to get these systems up to speed. Is there something that can be done more quickly?
There are. I think first and foremost, I commend Secretary Duffy for his leadership. I commend acting Administrator Chris Rochelle and that team, right? But the House is committed. Senator Cruz gave a speech back in February talking about his commitment and a Senate Commerce Committee commitment to doing this. Senator Graves on the House T&I side expressed the same sentiment. It looks like they're ready to give a good deal of money versus the the $1 billion or so that have sort of been allocated toward modernization. We've just got to stop this this incremental approach to it, and now is the time for really strong leadership, industry engagement, and we've just got to move faster so that the flying public can just have this sense of confidence that this system is continually safe, but it's resilient as well. So you just don't have a 90-second outage and these prices like that.
It's not just the system. It sounds like it's a shortage of air traffic controllers or air traffic controllers that are burned out by this or frustrated and walked off the job. Look, 5 of them apparently took the 45-day leave that they're allowed to take after trauma in a situation like this. Chuck Schumer is saying that DOGE was part of the problem with this. Is that the case? I don't think anybody wants to hear politics on this. I just think they want to know what's wrong and how to fix it.
I don't believe that's the case. Look, I think, certainly I've talked to the FAA, I've been in contact with folks there, the folks who man controllers, there have been no controllers let go to my, that is clearly my understanding. I believe that to be the case, that some of these are in support roles. All that aside, Secretary Duffy is taking absolutely the right approach. It's time to move forward. It's time to move forward in a big way. This is something that's already been articulated by the president. So let's do it. Let's, forget, to your point, let's forget name calling. Let's get this done and make our system the best that it can be.
There was a report from NBC. Tom Costello there was told by an air safety official that nobody should be going near Newark, that they would avoid Newark at all costs. Would you fly through Newark at this point, Billy?
I absolutely would. Look, Scott Kirby, CEO of United Airlines, I was in conversation with other CEOs just yesterday. And And what I can tell you is that Scott runs an incredible airline at United. Newark needs work. It's a level 2 flight control airport. What does that mean? That means that a lot of the constraints in place are voluntary. I believe the FAA, DOT are looking at whether to change that to a level 3. But flight control airport, what that would mean is that the controls would be more rigid. People would be able to game the system, if you will, to ensure that whatever that number of slots, that's what you would have. Now, that would reduce some level of competitiveness, if you will. I mean, that's what others would say. But when you look at what needs to be done in Newark, until we really get this Northeast corridor fixed, until we get the kind of investments that we need to make the system even more resilient and the ability to handle more efficiently the increases in traffic that we're seeing across the nation, it might be time to go reconsider that.
Is this a situation that you think can be fixed quickly? If so, how quickly? And are we facing a summer of lots of these hours and hours and hours of delays?
Well, there's this very much of a collaborative approach, and it's been that way at the FAA forever. There are, briefings every couple of hours with industry. So at the National Command Center, there's this level of interaction. All that aside, and the airline's ready. We run a safe operations. We run a safe NAS. As you're all aware, we do anywhere between 45 and 50,000 commercial flights per day, moving nearly 1 billion people. These years, and we've come roaring back, well beyond what we had with the downturn in COVID. All of that aside, what are the things? The Secretary is working on, how do we address the controller situation quickly? You can do some bonuses there. He's talked about having folks stay on. We'll see as he lays out the plan tomorrow. The rest, the structural pieces will take more time, but we don't have any more time to waste. So that means, having the money coming from Congress, working with the best and the brightest to build out America's system that's fit for purpose for the next 30 to 50 years. And then all of us come together just to make sure so that we can, not come on to you and talk about other things and not say that, wow, we've seen this happen or we've seen that happen. The American people expect more and they deserve more.
Billy Nolan, thank you. That's very reassuring. We appreciate it.
Thank you.
And coming up, we're awaiting quarterly results from Disney and Uber. We'll bring you those results, plus the market reaction, followed by a first on CNBC interview with Uber CEO Dara Khosrowshahi. Squawk Box. We'll be right back. Conclave was a Universal film, wasn't it?
Was it?
Roman Catholic cardinals getting to work today on electing a new pope. They're gathering in the Vatican's Sistine Chapel for the election called a conclave. Following the death of Pope Francis last month, only one ballot is scheduled for today. No pope has been elected on the first day of a conclave for centuries. The cardinals burned their ballots after voting. Black smoke, obviously, signals no new pope. White smoke means the church has a new leader. It was 2013, it was 5 votes for Francis, and he got a strong majority in the end, 85. You only need 2/3. The Cardinals, you got to be under 80, I think, to vote. Conclave makes it. I saw it at the film festival in Telluride before it was really out. Ray Fiennes was mind-boggling in it, and it just makes it a lot more interesting to see behind. I mean, it was very, I think, realistic behind the scenes, and you can't really. It's very looked down upon if you like try to get the job. If you are campaigning to do it, but then they do sort of. But they do talk to Cardinals that are on their side on how to do it.
Political behind the scenes.
Very political behind it. It was fascinating. If you haven't seen it, you should see it quickly because you'll know what's going on over the next couple of days. And people don't. Francis is kind of a rock star type and very liberal and very progressive. And there's a whole movement in the church that wants Latin masses and a lot of things to be
Latin masses in my lifetime, basically.
Right, but they want it to be brought back further, a little bit. Now Disney earnings, that's probably more important, I guess.
Well, this
is it
fascinating.
really?
We're going to keep watching this. We're going to keep watching this too. Disney is just reporting its earnings. It turns out that number is $1.45 a share. That's the earnings per share. That beat expectations of just $1.20. So a big beat on that. Actually, the stock's up by more than 8% on the news. Revenue coming in at $23.6 billion. That is better than the street was expecting too, $23.1 billion. Disney is raising its full-year earnings outlook above its prior guidance, which also beats the street's expectations. The Disney Plus streaming service added 1.4 million subscribers from the prior quarter. That beat the company's own forecast of a slight decline. It also says that it expects a modest increase in subscribers in the current quarter. At Disney's parks, attendance was higher, room nights were higher, and guest spending rose as well, and right now that stock is up by about 6%.
But what does this tell us? Does it tell us about advertising? Does it tell us about
the
theme
economy.
parks?
People are still
Does it
in
tell
the
us about the
parks.
economy? Does it say anything about is it too late? Is it too early to see any effect of the tariffs? Does it tell us about
Well, I gotta
streaming?
check
Is it
exactly
being
what the
successful?
numbers- I don't know what, but their guidance for the full year is better than expected.
So is
they
it the
feel
economy
confident about
okay?
it.
Or it's too early to tell?
We don't know.
But it's multifaceted. It should be something to drill down on.
And we will. And we will. When we come back, we're going to go inside the decline in drug stocks sparked yesterday by the appointment of an industry skeptic to a key FDA post. We'll bring you that story right after the break. Squawk Box, come right back.
Novo Nordisk's stock is higher this morning on first quarter results. We're going to look at a longer term chart and check that out in a second. The company said it anticipated sales of its Wegovy weight loss drug would improve in the second half of the year. That's what I'm talking about right there. As the availability of copycat compounded drugs is phased out. Joining us now, Emily Field, Barclays, head of European Pharmaceutical Equity Research. You can cover, I know you cover a couple of American names, or you can at least speak to them, Emily, but this is your fort, European drugs. And that is a sickening chart. I don't know, I guess that's compounding and competition. Even though they said it'll be a little bit better, you still think compounding competition is a problem. You're not ready to pound the table on buying this, are you?
Well, we do still recommend the stock. However, I think what's really going to start to get the party going again is seeing if they can generate prescription volume growth in the U.S. when compounding goes away. We've all kind of underestimated the impact that this has had. It's scheduled to go away on May 22nd. So really, it's over the summer, it's going to be put up or shut up for Wegovy. Either scripts come back, or I think people are just going to assume, well, Lilly's going to take this whole market.
What describe that? Looks like a black diamond slope there at Aspen or something. What really happened over the last? Because these are hot as a pistol. If you don't have an obesity drug, then you look like Moderna or Pfizer. But even having one didn't help here.
Yeah, I mean, for these guys, it's, I hate to use a cliche, but it's almost been like death by 1,000 cuts, right? Like right before Christmas, they had data for their next generation version of Wegovy. It's called CagriSema. They promised greater than 25% weight loss, came in at 22.7. Does that make any difference to doctors? No, but when a company misses expectations like that, they're gonna get hammered. And then as we got into this year, this phenomenon of compounding, Wegovy scripts, instead of going like this, like they did a couple of years ago, they've just been like this. We get no data on compounding. We're assuming that that's where a lot of the volume is going in the US, because you can just walk into a med spa, walk out with a prescription, or sign into Hims online. Well, not anymore. And so that's just led to a pretty sharp decline in Novo's multiple. This thing can trade at 40 times when it's beat and raise, beat and raise, beat and raise, but that party kind of ran out of steam in the second half of last year.
Emily, is there a safety difference between any of these drugs? Is one of them considered better than another? I mean, 22.8% or 22% loss versus 25% as a consumer, I wouldn't particularly care. What I would care about is if there's one that has worse side effects.
Yeah, exactly. And, that's the beauty of these drugs, and why we're still big believers in this longer term, is that for the most part, there's been no known very serious long-term side effects. And really the major side effects for both Novo's drugs and the Lilly drugs are gastrointestinal discomfort, vomiting, diarrhea, constipation when you first start them, because it's sort of rejiggering your gut in a pretty aggressive way. But for most people, if they can get through that few weeks of discomfort, then they kind of settle into a steady state, and those side effects go away. Of course, fewer gastrointestinal side effects could be how players differentiate down the road. But from a clinical data perspective, they're all pretty much in the same ballpark for now.
Some crazy. It just struck me, but there's some gallbladder thing too, and people probably think I was on one of these things because I wasn't, but now I could go on one because I don't have one anymore. But rejiggering your gut is not a big sales, not something that you'd want to put on your advertisements. Let's rejigger your. Let me ask you about two other issues: tariffs and how it's going to affect European drug makers, and also the idea that maybe they need to start innovating again, and that you're not going to get a free ride, you're not going to get price controls on all the U.S. innovation that's exported over there. They've sort of had a free lunch. Does that make you more positive on European pharma or less positive?
Well, I mean, when it comes down to the tariff issue, of course, we still don't have any clarity yet. But one thing that we've been positively encouraged by is that we saw some of these big CapEx announcements from a lot of the American players over the last few months, Lilly, Johnson & Johnson, and it was sort of radio silence from the European guys. We've since seen Novartis, Roche, and then Novo talked about it this morning, not a formal announcement, but they're talking about really amping up their investment in the U.S. And then on the other side, to your other question, there was a letter to the FT from the CEOs of Novartis and Sanofi, basically addressing that same issue of saying that Europe is not, paying for innovation. They're not getting access for drugs, and there does need to be something to level that playing field. Whether it's Americans perhaps paying too much and paying a bit less, or Europeans paying too little and needing to pay a bit more, it does feel like something's got to give over the next few years on that front.
Yeah. So you get to travel over there to cover all these stocks? I mean, was that the idea? I mean, that's pretty smart, right?
I'm from Chicago, but you get to visit some pretty interesting places covering the European companies. Basel,
yeah. Ireland, probably.
Copenhagen.
Yeah. Copenhagen. See, you're not. You're pretty smart. All right, Emily, appreciate it. Thank you.
Thank you.
See you next time. Okay.
We got some earnings to tell you about, and we got the CEO actually just a little bit from now. Uber reporting earnings of 83 cents per share, beat estimates of 50 cents, so that's a beat. Revenue of $11.5 billion, missing though the expectations of $11.6 billion. So current quarter guidance for gross bookings and adjusted EBITDA coming in mostly above estimates. Right now you're looking at the stock off on the back of that news. I imagine off of the revenue miss. We will keep our eyes on all of this. Off about 5.5% right now, and we're going to get to talk to the CEO, Derek Khosrowshahi. That's going to happen in just a few minutes right here on CNBC in a first on interview with us. So we'll try to get a sense of what's going on. We keep talking about what's going on with the economy. You see Disney's earnings on one end. By the way, these Uber earnings are good earnings. It's just, I think, a little bit of an expectation story.
A lot of growth.
A lot of growth. So, sort of what do the analysts think is going to happen? Meantime, it is now just past 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Tilton, along with Joe Kerman and Becky Quick. Among today's top stories, Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer. They're going to be meeting with China's lead economic representative, and they're doing it in Switzerland, neutral place, this weekend. Bessent expecting the first conversations will be, in his mind, more about de-escalation than actual trade or tariff negotiations. So I don't think we should expect necessarily something on Monday to come out of this in that there's a new tariff arrangement on the table. It's just maybe the talks get to be pursued more in earnest. So we'll see.
Couldn't get any worse than 140%, and China calls it a joke.
That is true. India, though, this is something to watch. Talk about tensions, maybe more than that. India launching strikes in Pakistan in response to last month's attack by Islamist militants on Hindu tourists that killed 26 people in India's Kashmir. Now, Pakistan said at least 26 people were killed. This is some of the worst fighting between the nuclear-armed countries in more than 2 decades. And there are some worried deeply about this. The iShares MSCI India ETF falling earlier, though, worth noting that it has recovered. And then take a look at shares of Disney. We were talking about this just in the last hour. The company reported profits of $1.45 per share. That's on revenue of $23.6 billion. Both topped expectations. Disney raised its full-year earnings outlook above its prior guidance, also beating analyst estimates, and that stock up about 5% on the back of that news. So a lot of different sort of indicators as to what's going on in our economy. Of course, they have not just the media and streaming business, but the parks, and maybe an indicator that consumers are healthier than some had been worried about.
In the meantime, let's take a look at the futures this morning. We are continuing to pick up gains here, adding to the gains we'd seen earlier. The Dow futures are now up by about 300 points above fair value. S&P futures up by 36. The NASDAQ up by close to 140. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. And Dom, what's on your radar?
Good morning, Becky. Good morning, Andrew and Joe. So we've got a tech-themed morning mover so far. Hardware is the focus here. We're going to start with shares of AMD, which are almost higher by about 2% at this point, after the computer chip maker beat on both earnings and revenues and then gave a better-than-expected outlook for the current quarter. AMD is, though, still expecting roughly $700 million in lost revenues because of export controls in the second quarter. and about $1.5 billion in impact for the full year. Nonetheless, AMD shares up nearly 2%. And we'll stick with computer chips and turn to shares of Marvell Technologies, lower by about 7% right now after the company postponed its investor day for next month, citing a dynamic macroeconomic environment as global trade tensions spark some of that uncertainty. Marvell is also narrowing its current quarter revenue guidance, tightening it on both sides so that the midpoint still stays the same. So on balance, you got a stock that's down 7%. And we'll finish with Super Microcomputer. Shares are lower by about 5% after missing top and bottom line estimates for its most recent quarter. The current quarter guidance is also falling short of some expectations. The computer server maker is citing, quote, economic uncertainty and tariffs that may have a short-term impact. Those shares are just about up 2% for the year overall. But tech hardware, Becky, a huge focus this morning. Maybe that AMD stuff driving some of the positivity. I'll send things back over to you.
Okay, Don, thank you very much. We'll see you in just a little bit.
Coming up, Uber CEO Dara Khosrowshahi is going to be our special guest. We're going to get into those quarterly results that just came out, talk about competition, expansion, changing employee benefits, and more when he joins us right after the break. Don't go anywhere, Squawk. Returning after this.
AI meeting agent.
Welcome back to Squawk Box. Uber reporting better than expected earnings, but revenue fell short. Shares right now, take a look. You're looking at 82.50 on the stock, down about 4%. Joining us right now, first on CNBC, is Dara Khosrowshahi, he's Uber's CEO. Dara, it's great to see you this morning. Look, it looked like a beat across the board, actually a big beat. Stock not reacting maybe the way you'd want it to, but maybe expectations were marginally too high. I don't know how you think about that.
Yeah, it's tough to track daily stock price changes, Andrew, but I think the results were spectacular. Our transaction growth, over 3 billion trips served, both on rides and eats, was consistent with last quarter at 18%. Gross bookings growth came in very, very healthy as well, similar number. And then adjusted EBITDA was up 35% on a year-on-year basis, over 2 billion in cash flow. So the company continues to execute well. And, you know, the stock price has performed really well this year in a tough market. And, you know, we'll have our good days and bad days, but hopefully the good days will outnumber the bad days. We're very happy with the results and the momentum of the company.
I was going to say the margins on the mobility business, meaning those folks who are getting in the cars, is, you know, a standout. How much pricing pressure, if you will, or opportunity power do you really have?
You know, pricing has been an area, you know, we want to keep our rides business as affordable as possible. And if you look at the growth rate between kind of last quarter and this quarter, our gross bookings growth rate on mobility slowed down because we didn't take price. So last quarter, for example, price increased by 4%. This year, pricing was essentially flat. And that's really for two reasons. One is we saw the insurance costs. Insurance has been a huge factor in terms of inflation, not just in transportation, but also home insurance, as you know. We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the US slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to our consumers.
What do you see in terms of the mix between the mobility businesses, the ride business effectively, and the eats business at this point? So if we were to look today at a pie chart in terms of what the business looks like, mobility versus eats today, and you sort of look a couple years out, what do you think that looks like?
Well, listen, it's like a Ferrari racing a Lamborghini. They're both going incredibly quickly. Mobility grew 19% on a year-on-year basis. Delivery delivered a second growth rate of 18%. The two are, you know, pretty close to the same size. Mobility is a little bit bigger in terms of gross bookings, but our mobility and delivery businesses are hitting on all cylinders. I think it's going to be a great race, and I can't predict the outcome.
There does seem to be, though, a bit of a war going on in both the delivery and mobility wars. Lyft announcing it's going to go international, so this has become an international war, if you will. DoorDash yesterday saying they're buying Deliveroo, so there's a whole sort of host of things going on. You're buying a business in Turkey. How do you see that all playing out?
Well, we see these spaces, both the mobility and delivery spaces, they're trillion-dollar-plus markets. Competition is natural. For us, we've been in an enviable position in that we built most of our global footprint organically. We built these businesses, over the past 15 years, brick by brick, trip by trip, so to speak. And we've always said that the platform advantage that we have, both being in mobility and delivery, and our global scope, really having exposure to all of these different economies, has been an advantage. Now that you see our competitors have to buy their way into the international markets, it shows you that our strategy is working. I'd much rather go organically. Turkey for us was one of the largest unaddressed markets in terms of delivery. Trendyol Go is a terrific business. They've got a great team, great tech team, and we just couldn't resist going into Turkey. We've had a lot of success there in terms of mobility, and we hope to duplicate that with acquisition and delivery.
Mentioning DoorDash, we're going to actually have Tony on later, the CEO of DoorDash. You are suing that company,
yes.
Claiming that they are involved in coercive tactics, quote, to reduce restaurant consumer and consumer choice. Where does that stand, and why did you feel like you had to go to court?
Well, we wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, et cetera. It's delivery as a service. We think that should be an open market. And right now, we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give our merchants more choice.
Talking about anti-competitive moves, the FTC, you faced a lawsuit from them, which says that you're charging consumers, or have been charging consumers, without their consent for a service called Uber One. I don't know if I still am signed up for Uber One. I might be, I'm not sure. And maybe that's the problem, I don't know. But where does that stand, and do you think there's an opportunity to settle that case?
Well, it's a bit of a head scratcher for us, Andrew. You know, Uber One has been incredibly popular. We've got over 30 million subscribers now to Uber One. 60% of our gross bookings come in our Uber Eats business come from Uber One members, and that continues to grow. You know, the suit alleges that, you know, some people don't realize that they're signing up, or cancellations are difficult, but I'd encourage you to go experience it yourself. It's very, very simple. You take a couple of steps to be able to cancel if you want. And the good news for us is Uber One growth indicates that consumers are seeing the reward in this program and the savings, and our Uber One business continues to grow at very, very high rates.
What are you seeing in terms of the consumer, the strength of the consumer? Obviously, there's been lots of concern and worries given all the tariff conversations and everything else going around the country. We haven't really seen it in the economic numbers. Has it shown up in yours, or are you seeing anything sort of moving forward?
You know, we watch the same news you do, Andrew. And the fact is, as evidenced by our results, we don't see any consumer slowdown at this point. Our audience growth up 14% is very consistent with what it was last quarter. Frequency is now at 6 trips per month, continues to be at highs, and our frequency continues to increase year on year. We don't see consumers trading down, you know, to more affordable restaurants, or pulling back from any of our services. So we haven't yet seen any signs of consumer weakness. I'd say the only kind of shift that we've seen in spend is a bit more travel spend internationally than in the US, but otherwise the consumer remains strong. And we're in a couple of categories, food and transportation, that tend to be quite recession resistant anyway. So far so good, but we're watching the consumer very, very closely.
Talking about the consumer, what about rides in and out of Newark, given all the commotion that's happening in the air, or maybe lack of commotion because there's not enough planes coming in and out of there?
Yeah, it's really unfortunate what's happening, and it is showing in the volume. So if you look at New York airport volumes, they're trailing that of what we see nationally, and that's reflective of what's happening in Newark. It's unfortunate. Hopefully they can get that resolved as quickly as possible.
That's over the last week?
Since
that started? Wow.
It's really in the last couple of days. New York airports generally are weaker than airports around the nation. And you know, this is what Uber's all about. We are an everyday use case, so we have a pretty incredible pulse on what's happening in every single local city.
Hey Dara, Andrew was trying to figure out what I should use for Uber if I lose my driver. I'm told is there a seniors new program or something?
You know, there's an ability for you to simplify your app, and also, you know, if you want Andrew to call an Uber for you, he can call that for you, and he can track you, you know, and really take care of you.
Don't take me into like some. So he could track me then. Will you?
Yeah, Andrew, I think you should be calling Joe's Ubers.
I'm going to be calling I'm going to put him within. It's going to be like we're going to set up a trust.
Well, we were trying to figure out which one to use.
I'll be operating the trust for you.
I think I can get a discount. Can I get a discount or something if I ever? It's from
an additional service, Joe. It's making sure that you're safe and sound wherever you go.
There's no discount. There's no senior discount.
Over 55 is where I'll be there soon.
Okay, but most importantly, what I'm going to get you, Joe, eventually.
Yeah.
Is an autonomous vehicle.
That's going to drive you. We're getting one for myself. We are. I'm doing that, Dara.
So, Dara, my question to you is: I know you're launching with Waymo in Austin. You got Elon Musk supposedly launching. I don't want to say supposedly. He says he's launching in 2 or 3 months from now. His service. How do you see that competition playing out?
Yeah, we're already launched in Austin, Andrew. You can experience Waymo on Uber yourself. We've got almost 100 cars in Austin, and the launch has been absolutely incredible. Consumers are opting in; they love the product. Waymo's safety record is second to none, and the Waymos are really busy. The average Waymo in Austin is busier than 99% of our drivers in Austin as well. So the service is working live. This is a huge market, $1 trillion plus market. More autonomous vehicles means safer streets. We'll be watching kind of the pilot from Tesla as well. It looks like it's going to be a limited launch, but this is not going to be a winner-take-all market, and I think more autonomous investments coming into the industry is only good for everybody, and hopefully it'll make for safer streets and consumer delight as we're seeing today in Austin. That's pretty awesome.
So who else, though, besides Waymo? I mean, is Tesla, to you, the next big competitor at this point?
Well, I think we work with Waymo, obviously, and there are many other players out there, but Tesla's certainly going to be a competitor. We're, for example, working with Volkswagen to bring their ID Buzz wagons to Los Angeles. We're working with May Mobility in Texas. We ride in many, many international markets along with Pony and Momenta. There's a lot of investment in many competitors in this marketplace because it's going to be an enormous marketplace, and the vast majority of those competitors are partnering up with Uber to commercialize the service safely.
Okay, and then separately, let's just talk about what's going on inside of Uber in terms of the culture and employees. You've changed the sort of benefit mix, trying to get people back in the office. What's happening here?
Yeah, listen, we want more people in the office. We provide a really flexible kind of work experience where we want you in the office Tuesday, Wednesday, Thursday. Those are anchor days. So when you're in the office, everybody else is in the office. You can work together. You can get to see your compatriots in arms, so to speak. Monday, Friday, you can come to the office or work from home. We think it's a great policy, and it's the right mix of giving our employees flexibility, but also getting them to the office for those all-important teamwork tasks.
I didn't know that prior, at least in prior years, you had offered a sabbatical program as a benefit. You had to be at the company for 5 years. You've moved that to 8.
Yes, and we think that's incredibly generous as it is. Listen, we want people, again, in the office. We want them working hard. Our company is executing really well, but we need to be at the top of our game, and that means people working together in the office.
Okay, but what about the folks who basically took the job with the understanding that they were going to be remote, and that was sort of cool with the program, and now it's shifting on them?
Yeah, I think that's tough, and we're talking with those people one-to-one, making sure that we make accommodations as can be. But that is different for people. That's a different adjustment that they have to make, and they've got to make their own choice. Do they want to come to the office, or is working remotely really important for them? The good news is, the economy's still really strong. The job market is strong, and people who work at Uber, they have lots of opportunities everywhere. We want them obviously to take the opportunity with us, to take the opportunity to learn. But this is a company where you have to work hard. We're not going to make excuses for that, and you have to work hard together, and that's the kind of environment we're trying to build.
Okay, final news you can use. I've been talking to a lot of drivers, and I always look at my score. We've talked about the passenger score, and it seems to me that in New York, in particular, that the drivers in New York are less inclined to automatically just give over the 5 stars, and that just about everywhere else in the country, the drivers are giving the 5 stars, and so the New Yorkers have a lower rating than the rest of the country. Is such a thing true?
Andrew, do you want me to make excuses for you?
Maybe, but I've actually now been asking around about this.
I will tell you that New Yorkers are tough judges. They're tough judges when it comes to their sports teams, and they're tough judges as it relates to their passengers as well. I think it's something that's wonderful about New Yorkers. So you're going to have to up your game, Andrew. You're just going to have to be super nice.
Do the drivers in New York also have tougher ratings? Do they have lower ratings than elsewhere?
I think that passengers in New York are kinder, but we've got drivers who are demanding, and they should be.
So, Dara, here's what happened. I happened to be in California, took an Uber, and the driver said to me, "You must be from New York." And I said, "What?" And I said, "Well, And I said, "Why did you say that?" And he said, "Because New Yorkers always have lower ratings."
How low is your rating?
That's, by the way, drivers. These drivers are pros. They know the marketplace. They understand these things. So yes, they do know that New Yorkers have lower ratings. Or
You got to grade us on a curve, though.
I can't. I cop to the senior thing. I can't believe you're copping to this. That you got like a 1 or something. But so wait a minute. I think
I'm still high 4s.
Okay, but the vast majority of the country does think that there is a degree of rudeness among New Yorkers that people in the rest of the country do not think.
No, they're getting high scores. A New Yorker in California will get a 5 stars. You're gonna.
Well, maybe you're on your best behavior.
You're losing the rating here in the city. It's a pleasure.
So you're in the high 4s. What would you like to be?
5 or 5. You want to be like 4. You want to be like 4.95 or something.
You willing to disclose your actual?
No, I'm not.
Are you below 4.5?
No, I'm not below 4.5.
What's a bad score?
Yeah, what's a score that will make a driver not pick you up?
4.5 is bad. You don't want
4.5 is bad.
Yes.
You're a 4.51.
I'm better than that.
4.51 is bad.
I'm not 4. I'm much better than that.
But you're not disclosing what you are.
Because, well, Dara, what do you think the lowest number is? It's like acceptable.
4.5 is not acceptable.
No, I'm not 4.5.
It depends. We do grade it on a curve. So city by city,
you do?
different cities have different personalities. Yeah, of course.
Oh, really? So hold on.
We're a very local business.
So hold on. So New Yorkers' score is actually, so my number is actually higher than it should be? Is that what you're suggesting?
No. New Yorkers on average have lower scores because New Yorkers tend to be tough judges on each other. It's a good thing.
Do you know your car service rating? Think if you had one of those.
We got to run. We got to run before this conversation really becomes a problem. Dara, it's great to see you, sir. Congratulations on the earnings.
Thank you.
Look forward to seeing you soon.
Thanks. Take care.
Higher than that. It's still higher than that. Coming up, an exclusive in the next hour, we've got DoorDash's CEO. That's coming up at 8:45 Eastern Time. They are going, as we just said, head-to-head with Uber and so many others. We'll come right back.
Time now for today's Aflac trivia question. What year did Microsoft release the first version of its Windows operating system? The answer when Squawk Box returns. The answer to today's Aflac trivia question. What year did Microsoft release the first version of its Windows operating system? The answer, 1985.
Welcome back to Squawk Box. 278 points. We were almost up 300 a little while ago. We lost 389 yesterday, if you're keeping track. Dow up 278, NASDAQ 124. There might be some thawing with the China
Maybe
trade.
some de-escalation.
Maybe some de-escalation. Scott Bessent headed to Switzerland with Jameson Greer over the weekend. Let's look at treasuries, which are back to almost 4.3 actually, but it felt good at 4.15. Moved up a little, but kind of in a range right now. Gold's been moving higher again, along with and Bitcoin joining in the fund this time, almost 3,400 now, but down today. But Bitcoin up almost 2%. Coming up, the Fed decision on the way this afternoon. Former Dallas Fed President Robert Kaplan, now Vice Chairman of Goldman Sachs, will give us his thoughts on the rate path, inflation, state of the economy, tariffs. Spark Box coming right back.
You download Dave.
All right, welcome back, everybody. I want to get to our next guest. Joining us right now to talk markets, tariffs, the Fed, deal making, and much more is Peter Orszag. He's the CEO of Lazard. He's also former director of the Office of Management and Budget under President Obama. And we've been discussing all these important issues just as you sat down, Peter, including your incredible rating that you've got of
Yeah.
4.89.
Yeah. Almost 4.9. Right?
Getting there, you
That's
know,
pretty good.
step by step.
And it has nothing to, now I'm finding all this out. If you,
Not about tips.
it's after you tip.
I didn't
can't-
know that, but I
So
guess
you've been
I
really
wasted
good
Well,
tipper.
now you can yeah,
The tipping part
I
is
want
not
that money
the issue.
back. We have to. I'll call up Uber.
Peter, let's talk about I guess maybe the most pressing situation today, and that would be where things stand with the trade tariffs, this meeting that is set up with China in Switzerland over the weekend. How are you reading it?
Look, we have I think the pause was beneficial for a variety of reasons.
90-day pause.
The 90-day pause, but the administration, we really need to get to yes with, someone. I think the meeting with the Chinese is encouraging because that situation is not sustainable. But it's not just with China. We need to get to yes with the EU. This really comes down to, I mean, we talk about 70, 80, 90, 100 countries. It really comes down to maybe a dozen. It's the EU, it's the UK, it's Canada, Mexico, Japan, India, China, and a few others. It's
South Korea,
not
maybe.
the Falkland Islands. We could kind of survive if we don't have a trade agreement with, but we need to get to framework agreements with the most important trading partners in this 90-day window. So that
We're not going to get
it.
that with China.
No,
wouldn't
but
anticipate.
let's talk about China. I mean, I think my expectation is we're going to get to a average tariff rate of somewhere between 30 and 50%, either because there is a Xi-Trump summit ultimately and there's a deal. I think that's less likely, or because we just wind up exempting more classes of goods from the tariff rates, so that you wind up with somewhere between 30 and 50 on a weighted average basis. We've obviously already done that with electronics, and we may need to do that with other categories also.
That's pretty interesting because that creates these clear winners and losers, and maybe disincentivizes
And also,
the idea of trying to bring manufacturing back here.
yeah, well, and also very strong incentives for transshipment, which we were already seeing. So when you have wildly varying tariff rates, there is an incentive to ship through Malaysia or through other countries that may have a lower tariff rate with the United States, and administering that or monitoring that is very difficult.
What do you hear from business leaders you're talking to at this point? How
Desperate
optimistic?
for clarity, desperate for some stability, because we've got strong underlying drivers both of the economy and of deal activity, and then this headwind of uncertainty as this plays out. But it varies by sector. I mean, obviously industrials, transportation, consumer products, much more affected. The oil majors and the hyperscalers have a different set of dynamics.
I'm more worried about a slowdown or inflation, or equally worried.
I think the Fed's in a tough spot. What I would say is I don't think the Fed's going to be cutting rates. It obviously can cut rates for one of two reasons: either confidence that inflation is coming down, or concern about the
Or
economy.
both.
Yeah, but I don't think the Fed is going to be cutting rates in 2025 because of confidence that inflation is coming down.
You don't.
No. So any rate cuts will be bad news.
That's a very interesting perspective. So if markets are up right now because they think the Fed is coming to the rescue, that's a miscalculation.
Well, no, but the rescue might be that it's bad news.
Right.
It's a miscalculation.
I would not read into that anything
Yeah.
positive. That would suggest
Yeah.
the Fed is concerned about the state
I
of
mean,
the
in a
economy.
perfect world,
I mean-
wouldn't you want rates as low as you could get them if there was no inflation, just to spur activity and just, mortgages and
Sure, yes, but
and it even helps inflation when rates are down.
I don't agree with that part. But
You know what I mean, though. If you're paying less on your mortgage.
Turkey
you're
tried
paying
that,
less.
by the way.
Right,
It
but if
didn't work
you're,
out.
I understand that it spurs economic activity, which
Yes.
in the long run could bring more inflation, but if you're paying less on a floating rate mortgage, and if you're,
yeah, look, I think everyone would be in favor of lower rates to the extent that they are
Zero would be nice.
consistent with stable inflation. And there are signs that inflationary expectations are
Oil.
ticking up a little bit.
what about oil?
Oil helps. Lower price of oil helps on headline inflation, obviously.
Can I just ask you about the regulatory environment?
Sure.
Because part of the whole argument about our economy taking off was going to be that the regulatory environment sort of just opened up in this big way.
Yep.
You work with companies
Yeah.
that consider all sorts of transactions that would otherwise be regulated or at least need a regulatory approval. Has your complete, has there been a shift in terms of how you think about that, or no?
Well, we were always a little bit more measured in terms of there would be a move away from the biggest bad kind of perspective. I think that is happening, but it was never going to be, anything goes. The biggest change, in my opinion, will still be with regard to vertical deals as opposed to horizontal deals. There was always antitrust enforcement against horizontal deals. The biggest shift under the Biden administration was the way that they handled vertical deals, and I think in general those will be, you'll go back to a more traditional perspective there, with the exception of in the tech world where the dynamic.
Okay, now I got a more complicated question for you.
Okay.
If you are a client that's going to go up against the government potentially, do you use one of the law firms that did a deal with the administration, or do you not? And when the client calls you and says, you have a choice. You can use Paul Weiss, or you can use Skadden, or you can go use, they made deals with Trump, or you can go use Wilmer Hale, which is effectively fighting the administration and so far winning. You choose, you tell them what?
You know, the choice of advisor, the choice of a law firm often is a little bit less about the institution, it's more about the specific person. So there's not one answer to that question because it depends on who the person is at the various law firms that you're considering and whether your trust in that person outweighs the kind of macro background on this firm or that firm. I don't think there's one answer.
Peter, did you see the OMB director on yesterday? Did you get to see that interview?
I did not.
It's a skinny budget. Do you know what's in it? What did you think of the priorities? I think defense goes up 13%. I think air traffic controllers, believe it or not, they're going to spend some more money on that. Seems like a good idea at this point. But a lot of other things there's going to be some cutting.
Look, my biggest concern is the focus on non-defense discretionary, which is really where all those cuts are. There's a lot in there that actually does help spur economic activity. So slashing the budget for the National Institutes of Health, for example, when we want to be a world leader in research and spur activity in the biotech sector, doesn't strike me as, that's not what I would do.
Is there movement? But I've been a little surprised that we haven't heard from more CEOs, business leaders, others about those very concerns. If you talk to universities, they will tell you that. If you talk to research institutions, they will tell you that. Is that because there's not as much concern in the industry, or because people in the industry are keeping their heads down because they don't want to be the next target?
Well, there's also a president's budget doesn't always get fully enacted, and so there's it's still early days. I would say in general, there's obviously a lot moving on the fiscal front. A big reconciliation bill, the president's budget. There are a lot of different moving pieces, and it remains to be seen. I would also highlight, and I'm saying this as someone who, even as a former budget director, got a little sick and tired of the Chicken Little and the boy who cried wolf. I think we need to be paying much more attention to our fiscal trajectory today than the concerns over the past decade. We're at 7% of GDP, as far as I can see.
Going up from there.
The debt to GDP ratio is high. We've got
spending's high, 27%, 26%.
Well, spending is higher than revenue, which is what generates the.
Yeah, but it's usually 17 and 20, not 17 and 27.
But my point is, this is not a good situation, and it is encouraging that the administration is saying the right things about concern about the fiscal trajectory. But I think this is different in terms of the risk factor is much higher.
I know you have to run, but that's like taking too. You don't want to see cuts in places like the NIH. The cuts are being done too roughly, but you're very worried about the gap in our spending versus the revenue we're taking in. Like those are hard to match those things up.
Well, I have put forward in the past a whole bunch of different things on entitlements, Social Security, and Medicare.
Okay,
I also
you're talking
think
about the
there's
stuff they're not talking about.
Yeah, well, that's where the money is.
Yeah. That's a tough question.
They keep saying it's not us that is cutting this short. Where do you have to go so quickly? They're saying he's got to go. He's got to go.
I have to go get my Uber rating up there.
But they're saying that they'd let you stay till 9 o'clock, but it's no. Peter has to leave.
I don't know where
You
that's
might have
coming
a client
from.
meeting.
You start work at 7:43.
I started before that. I'm up early.
We appreciate having you
Can't
here.
sleep.
Please come back.
Conscience bothering you from those Obama years, probably.
He's
I
heading
sleep
over to
okay.
All Whites
I
right
sleep
now.
okay. I sleep okay.
Let's come back because I want to dig in to what you're talking about with the entitlements and what we see happening with that. Thanks a lot,
Happy
Peter.
to.
Okay.
See you.
Squawk Box will be right back.
Coming up, some crypto-related bills may be hitting a roadblock over the Trump family's latest ventures in the sector. We're going to have an exclusive report on that in just a moment. Beautiful live shot of the Capitol right now. And then later, DoorDash's CEO is going to be talking to us about his spending sprees to expand internationally. That's going to happen in an exclusive interview at 8:45 a.m. this Eastern time this morning. You do not want to miss it. We're coming right back. Welcome back to Squawk. A landmark bill on crypto now facing some new hurdles. Some lawmakers needed to pass that legislation are raising concerns about the Trump family's various ventures in the sector. We're going to get straight over to Emily Wilkins, who joins us from Washington this morning. What's going on?
Hey, Andrew. Well, yeah, crypto bills are hitting a roadblock as key Democrats are being growing outraged at how Trump and his family are set to profit from their crypto ventures. CNBC got a first look at a new bill from Congressman Richie Torres that would prevent Trump and lawmakers from profiting from meme coins and other digital assets.
It's become clear that there is no path to a bipartisan compromise to crypto without addressing the elephant in the room. Like, I think the messages that have been sent, particularly from Senate Democrats, are loud and clear, and we ignore those messages at our own peril.
Now, Torres is one of the most pro-crypto Democrats in Congress, and he tells me that he still wants to see these crypto bills on stablecoin and market structure move, but he and other Democrats are now sounding the alarm after Trump announced that those who have bought the most of his meme coin would be invited to a dinner with him, and a stablecoin launched by Trump will be used by an Abu Dhabi investment firm for a $2 billion investment. Now, Republicans are planning on moving ahead with the stablecoin bill, noting that it sets the rules of the road and it does put regulations in place. Senator Cynthia Lummis, one of the bill's co-sponsors, did tell me, though, that Trump's investments are making bipartisan compromise more difficult.
I do think it's possible that that is an outlying issue that's hanging over the heads of some Democrats.
Lummis said she met with some of the holdouts yesterday. Negotiations are ongoing, and at this point, the Senate is still expected to vote on a stablecoin bill tomorrow. Guys, we'll see if they wind up getting enough Democratic support to get that 60 votes needed to advance the bill.
Emily, I want to thank you. Fascinating. We'll keep our eyes on all of it. I'm sure you'll be bringing us more as it progresses, or not.
Hopefully not. Coming up, tapping into the global energy markets, OPEC Plus recently decided to up production starting in June. President Trump heading to the Middle East next week. What will this all mean for the price of crude going into the summer? It is right around 60. Will it be 50 or 70 by the end of the summer? We'll get into that next. Squawk Box returns in just a minute. Crude prices back to around $60. I was getting excited, like 57, but are still off about 17% since the start of the year. For more on the sector, let's bring in Lima Croft, RBC Capital Markets Global Head of Commodity Strategy and a CNBC contributor. Should I be hoping for 50? Maybe not. It's bad for domestics.
Well, it's bad for U.S. producers. We've already had several U.S. producers coming out announcing they're cutting CapEx.
Yeah.
So, I mean, it's not great for Texas. So, certainly, you know, for retail gasoline prices, for the consumer, it's good. But again, for the U.S. industry, not so much.
So, we always try to say, well, is it supply or is it demand? It's never one or the other.
It's never one or the other, and it's a combination of concerns about the trade war involving China. So watch for negotiations this weekend. If it looks like we have an off-ramp in the trade dispute with China, positive for crude. Watch what's happening with OPEC. One of the reasons why we have come down in prices is we've had surprise decisions by OPEC members to start putting some more barrels on the market. So that's the supply side of it.
What's behind that?
So do you have children, Joe? You do.
I do.
So you know when your children sneak out at night repeatedly, what do? You ground them.
It was a while ago.
A while ago. Maybe it's more of an Andrew issue.
We try to sneak out.
You sneak out.
Parents,
but you have several countries within OPEC Plus that have not been abiding by their quota. And I think there's frustration on the part of Saudi Arabia. Like, look, we're carrying the burden of the adjustment. Hey, Kazakhstan, you should do a better job of getting your production down like the rest of us.
How about Russian oil? Nothing's changed, I guess. It's always been out there.
It's always been out there, but we've talked about this, Joe, before. Like, the decision was made to allow Russian oil to stay on the market. Like, we made the decision very early on not to sanction oil. The Europeans went ahead with sanctioning oil, and then we did price caps. And price caps, I think, were really designed to keep Russian oil on the market. We really feared a multi-million barrel disruption, so they were an offset for the EU sanctions.
Iran? What's going to happen?
Well, I think this is interesting because I think there is some viewpoint diversity within the Republican Party over what a deal with Iran should look like. You have some that say Iran should shut down their entire program, ship out the centrifuges, ship out the missiles, like Libya did in 2003. And there are others who say, like, let's just do the 2015 agreement with enhanced monitoring, let them have a civilian nuclear program, and like cut it, call it a day, remove sanctions.
No motivation in this administration to take care of the nuclear sites. And they've dissuaded Netanyahu, and that's a signature of J.D. Vance and some of these guys of pulling back on things.
I think the Republican Party is divided on this. I don't think there's a single view on this. I think you have a Marco Rubio who has been much more, publicly talking about the need for Iran to dismantle their program. Talking about, maybe we should have a military strike. That's a view you've heard from like a Tom Cotton, a Lindsey Graham, a Ted Cruz. But then you do have a J.D. Vance, Tucker Carlson, young conservatives like Kurt Mills saying, like, look, America first means that we should not become involved, in a region that might not be a core national interest of the United States.
Right. So it is 60 where we should be and where we're going to stay, or?
Well, I think, we need to see where we land on trade dispute with China. We need to see where we land in the Iranian nuclear negotiations, because let's say we don't get a deal. Let's say the Iranians don't take a deal. Let's say the things fall apart in that situation there. That is certainly escalatory, and you have to watch OPEC as well. Like, are we done adding barrels, or are we going to see more supply coming on in July?
What do you think Trump's telling the Saudis?
Well, I think President Trump obviously likes a lower price point. And President Trump, we didn't even discuss this. This was supposed to be his first foreign trip he's taking next week. The Pope's funeral upended that, but this is the first major foreign visit he's doing to Saudi Arabia, Abu Dhabi, and to Qatar. And so the question is, like, are there going to be significant deals we should be watching for?
All right. Funny you mentioned Abu Dhabi. Thank you, Halima.
Thank you.
Nice to see you.
Nice to see you.
All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. In our headlines this morning, U.S. Treasury Secretary Scott Bessent and Chief Trade Officer Jameson Greer will meet with China's lead economic representative this weekend in Switzerland in what could be a first step toward resolving the trade war. It's the first confirmed meeting between the two sides. Uber reporting better than expected earnings of 83 cents a share. That beat estimates of 50 cents, but revenue of $11.5 billion missed the expectations of $11.6 billion. Here's CEO Dara Khosrowshahi talking about pricing power earlier on the show.
We saw some relief in terms of insurance increases. We passed that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the U.S. slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to our consumers.
Got some breaking news out right now. David Faber joins us right now with that. Good morning, David.
Yep, we're going to have some special guests as well for you, Becky. You guys have been covering Disney's earnings this morning, of course. Better across the board, direct-to-consumer looking quite strong as well. And the parks and experiences holding up. Well, on that note, we have the news to share that the Walt Disney Company and Miral announced plans for a Disney theme park and resort in Abu Dhabi. It would be the company's 7th theme park resort, and it will be, as you'd expect, of course, all things Disney including a lot of new experience as well. So let's get to this news and let's find out exactly what's going on behind it. Joining me now is Disney CEO Bob Iger and Josh D'Amaro, the chairman of Disney Experiences. Both gentlemen, of course, are in Abu Dhabi. Guys, good to have you this morning. And congrats on the announcement. Bob, let me just start with you. Of course, why Abu Dhabi? Why now?
Well, first of all, let's start with the region, then we'll focus on Abu Dhabi. This, in many respects, is the UAE is the crossroads of the world. About 500 million people that are income qualified, meaning they can afford to visit one of our parks, live within a 4-hour plane trip here. And about 120 million people will actually come through Dubai and Abu Dhabi this year. And it's estimated that 39 million people will visit Abu Dhabi by 2030. So when we say crossroads, we really mean it. In addition to that, when you consider Abu Dhabi, you have to appreciate the fact that they have shown a great interest in arts and creativity. They build not only modern, but very, very high quality buildings. They've been very methodical about how they've planned their land. And most importantly, they love Disney. And we've also discovered that many people in this region love Disney. Josh and I have visited here now 3 times in a very brief period of time. And in all of our studies, we've been more than pleasantly surprised at the Disney affinity here. It's really quite something. So we're quite excited. This is the right place. By the time it opens will be the right time. And this is really a momentous occasion for the Walt Disney Company.
Yeah, well, I can imagine that it is. You know, you say by the time it opens. Bob, when do you expect that this resort will actually open?
Well, we're not pinning down a date yet. It typically takes us between 18 months and 2 years to design and fully develop, and approximately 5 years to build. But we're not making any commitments right now. Obviously, we're all eager to get started. Actually, our Imagineers have already begun the process of design, and we've been in deep discussions with our partners at Morale, who I should also say have proven to be great partners already. Another reason that we're here is finding the right partners and being able to negotiate the right deal. But we're all very eager to get going. You know, we'd love to be able to cut the ribbon as soon as possible, but we're going to build this big and we're going to build this right.
Yeah. Well, speaking of that, Josh, let me come to you. Obviously, our audience and many of your investor base always want to know, well, what's this going to cost? I see, you know, in your press release that I have in front of me, the new resort will be fully developed and built by Morale. Disney and its legendary Imagineers will lead creative design and operational oversight. So what is the arrangement here? Can you explain what that actually means?
Yeah, I'll start, David, with the fact that, as Bob said, we were incredibly impressed with Morale when we came to visit Abu Dhabi. They're very sophisticated. The way that they've built up this tourism industry here impressed us, and we knew immediately that we had a great partner on our hands. And as we started the negotiation, where we ended up was Disney will be responsible for all creative endeavors, all design, just like all of our experiences and parks around the world. We'll obviously lend our hand in operational expertise. We want guests, whether it's their first time in a Disney park or if they've visited our parks around the world, to feel that same Disney magic that they'd feel at any one of our parks around the world. Morale will fully fund this project. They will build the project. Again, as I said, they've done phenomenal things here in Abu Dhabi. And then ultimately, when it's fully built out, they'll operate it with oversight from us as well. So we feel very good about this deal. We feel very good about the partner and what we're ultimately going to build here in Abu Dhabi.
Yeah, Bob, you know, it is a different deal for Disney, isn't it? I mean, again, as Josh just said, you're not actually putting out any money. So, I mean, should we see it as a sort of a branding licensing deal where you have control to a certain extent? How do you kind of frame it at this point? And how is it different from the deals you've done or the other parks, obviously, around the world where oftentimes you use your own capital to build it?
So this will be our 5th location outside the United States, and no two are the same in terms of the deal structure. The deals have all been tailored to the market, to the partners, to the available capital, and also timing-wise from a Disney perspective. So as you know, we announced some months ago a decision to turbocharge the business that Josh oversees. And by that we mean investing significant amount of capital across the world, really, but More importantly, we're going to invest roughly $30 billion in the United States to expand Orlando and California. And what this deal gives us the ability to do is to continue to invest the way we said we'd invest, particularly in the U.S., which will be obviously job accretive, while at the same time expanding our reach to a part of the world that we really have only reached superficially. We talk about Disney Affinity, but it's a long trip to get to one of those 6 other locations, and this will basically put a Disney theme park really right in the backyard, so to speak, of a whole new consumer base. But this deal made sense to us in part because the available capital, and it also allows us to continue to invest the way we talked about. And also we've structured in a way that, and Josh described it, that not only will we have total say really in the design and development, or design and creative rather, but we'll have considerable oversight as well. So it's slightly different than the other deals that we've done. Tokyo would be probably the closest, where the Oriole Land Company put up all of the capital for that. This is a slight variation of that.
Okay, from an economic perspective, and I don't know to what extent you can detail it here, or we'll have to in terms of in filings, but is it then going to be ultimately a percentage of revenues, of earnings? I mean, you know, what can investors expect here beyond obviously spreading the Disney brand? But in terms of the actual numbers, Josh, how is that going to work? Can you give us any idea?
Yeah, David, I think you hit it on the head there. Essentially, this will be royalty based, and so we feel very good about the specific deal arrangements here. We won't go into all of that today, but we feel like with the demand that this will drive to the region, the ability to reach brand new guests in this region of the world, particularly younger guests in this region of the world, on top of the royalty setup that we have. It's a really good deal for Disney. We won't go into any more detail than that now, but we feel good about the deal.
And David, another thing to consider is that every time we've built a park in another region of the world, it has lifted the Disney brand considerably. So we saw this in Paris years ago, and obviously in Japan, where our brand is one of the strongest brands in Japan to this day. We've seen it in Shanghai and the impact on the rest of China and in Hong Kong. This will have a very positive impact on the perception of the company, on the brand, and actually on many of our businesses in a region, again, where we haven't had a brand flag planted as significantly and as deeply as this one will be when it opens.
Yeah, Josh, again, referring to the press release here, again, your 7th park, you talk about it in terms of blending contemporary architecture with cutting-edge technology. And deeply immersive entertainment experiences in unique and modern ways. What does that actually mean? What are you going to be doing here, perhaps, that you haven't done or aren't doing in your other 6 parks right now?
Well, you know, we've been operating for 70 years now. In fact, Disneyland's 70th anniversary is this summer. And so every time we build a new resort destination, we have an opportunity, kind of from a greenfield perspective, particularly here, to build up with all of the latest technology in mind. And as we know, particularly over the last 2 years, 3 years, 5 years, a lot has changed. And what this will allow us to do, David, is really lean into the tech side of experience. Take all the great stories that we have and deliver them to consumers and fans in completely new ways, dynamic ways, immersive ways, and ways that will keep them coming back time and time again. And so by virtue of the fact that this is our latest resort, it will be our most technologically advanced.
Yeah,
and I think that's also consistent with Abu Dhabi today, David. This is a place that is investing heavily in new technology, particularly in AI. They're very technology forward as a region as well. And when we had an opportunity to really begin our design efforts, we thought, well, we want to build something that's consistent with what Abu Dhabi is. Yes, they respect their heritage and their legacy, as does Disney, but they're very forward-leaning. And the images that we provided you, I think, speak volumes in terms of what we're talking about. When we talk about a theme park that is modern, we really mean it. This will not look like any other theme park that we built. Obviously, it'll have a lot of our IP, and there'll be a lot about it that is familiar. Certainly, Mickey Mouse is going to appear as Mickey appears in places all over the world. But you look at the architecture here, and you look around at Abu Dhabi's planning for the future, this park will be very consistent with that. And that's exciting to us.
I'm sure it is. Speaking of planning, Bob, how long have you actually been talking to the UAE Abu Dhabi about this? How long has this been in the works in terms of the planning behind it?
Well, I started exploring this region and sent representatives of Disney to this region sometime in 2017, 2018. We thought it was time that we start basically learning more. And then, of course, COVID hit, and there was a CEO transition at the company. And then when I came back, the morale people, the chairman and the president, visited Josh and I in Burbank at our offices and made an impassioned plea and a pitch that was very impressive. And from that meeting, Josh and I decided, well, as I always say, if you don't go, you can't grow. So we got on a plane, we flew to Abu Dhabi in September of 2024. We were very impressed. We certainly started to get excited. Josh and I started doing some sketches on the plane of what we might design. And then we came back in February after talking with our partners and consulting heavily with the Disney board. And that began the negotiation, and it moved actually very quickly. Both of us were committed to getting this done, getting it done on a timely basis in a manner that worked for both sides, and here we are. So I'd say it's been quick, but it's been something that's been on our minds for probably the last 7 or 8 years.
You know, they've already got a SeaWorld, they've got a Ferrari World, they have a Warner Brothers World, a Water World. You know, there's a lot going on there already. Is there, is there a competition that is of concern to you at all in terms of you coming into this market, this particular island where all of these resorts already are?
Well, I think our results this quarter indicate that Disney is very special and different in a way. We stand very tall, and nothing against our competitors at all. You know, they built some great things over time, and people certainly love them. But this is different both in terms of the Disney theme park experience, the quality of the experience, the Disney IP, and I will also say this is far more ambitious than anything that's been built here. And that will be reflected not just in the size and in the quality, but in the sheer scale and in the, I think, diversity and I guess the array of experiences that will be offered. We're not talking about anything small or anything in a box. This will be a significant theme park that we're putting here.
All right, yeah, so any you want to elucidate on that anymore, Josh? I mean, is it going to be 3 times the size of Warner Brothers World? I haven't been there, so I have no idea how much space that takes out. But how large are we talking about?
Yeah, it'll be much larger than anything that's currently here now. And I think to Bob's point, and you can see it in some of the renderings that we've released, we're being incredibly ambitious in terms of the architecture, use of indoor and outdoor space. One of the great things about the piece of land that we'll be building on is it's right up against the water, and so we'll be pulling water into this resort. We really haven't had an opportunity to do that anywhere else in the world. So this will be incredibly different from anything that's around it, and I think ultimately what this will do is be additive to the tourism market here. And so by virtue of Disney being here, I think kind of all boats will rise with the tide here. But this is going to be a really special project.
Yeah, you know, Bob mentioned as well, sort of pulling, and I know you guys talk about the fact that I think it's a 4-hour flight from 1/3 of the world's population. But you do have parks in other parts of the world. Any concern, Josh, at all that you do pull attendance away from some of those parks that may be closer to people who come there?
No, we think there's a big opportunity here. Of course, we do entertain guests from this area of the world in our parks around the world. But for every one theme park visitor that we have around the world, there are 10 more that we know actually want to participate in Disney experiences, but they just don't have an opportunity to do so. And that's most clear in this part of the world. So these markets are incredibly relevant to us. As I said a little bit earlier, they're younger markets, the Disney affinity is high. So I don't really see this as a risk from a cannibalization perspective to any of our other resorts around the world.
Yeah. Bob, obviously you had earnings out this morning as well. I think later in the morning we may get a chance to talk with your CFO a bit more about those. But some may be surprised that experiences, parks, everything is held up as well as it has. Cruises, are you surprised given the economic dislocation perhaps that many have feared that things look as good as they have? And I'm just curious as well how you sort of see them in terms of future bookings right now.
I wouldn't say that we're surprised. We're certainly pleased. You know, we've been watching a pattern for some time that suggests that even with consumer confidence somewhat down and some issues in terms of the economy, that people still believe that a Disney theme park experience is really special, and they do whatever they can to preserve that experience, to get, you know, to have the chance to visit. And I think that's what we're seeing. They're just incredibly resilient. And I think, again, that speaks volumes for what Josh and his team have built. And in addition to that, how they manage it. The experience is quite special. And, you know, as we think about what we're doing here, you know, we're mindful of that as well, which is why, while we certainly are aware of competition, and we don't really make light of it, but we have a lot of confidence in our ability to rise above and to really shine wherever we build.
Yeah, I'll add to that, if I could, for a moment. It's not only, David, about how the parks are performing in the quarter, but you know, we have the opportunity, particularly at Walt Disney World, to look forward at future quarters. We have 30,000 rooms at the Walt Disney World Resort, and so bookings continue to look strong for us. And I think this is, you know, we've been investing aggressively in these theme parks. There's always something new for consumers to come and check out, and so we feel really good about where we stand right now.
Even with the opening of, well, still my parent company's Epic in Orlando, is that going to be a challenge at all, Josh?
Listen, I think anytime something opens up in Central Florida, we get more tourists coming in. If you just go back 10 years ago, David, and you look at how we've been investing, every single one of the theme parks that we have at Walt Disney World, it's essentially a can't miss. Like, you're not going to come into Central Florida and not go visit Star Wars. You have to go see Pandora. You're going to have to go to Epcot and see all of the new investments that we've made there. So as new families come in, tourists come into Central Florida, we feel that we're going to benefit from that, and the numbers would suggest that's actually happening.
Yeah. Josh, while I got you as well, obviously, given everything we followed during the day here, certainly involving geopolitics, China in particular, any diminution in attendance at Shanghai at all as a result of perhaps rising anti-Americanism in that country?
No, this is something we track very, very closely. Volumes in Hong Kong and in Shanghai remain at record levels, quite frankly. There is no detection of anti-Disney sentiment in the area. Again, we've built amazing assets both in Hong Kong and Shanghai, and we've continued to invest on that front. So, you know, although the Chinese consumer is a bit unstable right now, from a volume and demand standpoint, our parks are very healthy.
All right. Josh, Bob doesn't really do sketches on the airplane. Come on. Really? Sketches? He's doing sketches while he's sitting there? Yeah.
He absolutely does.
This is where AI is a powerful tool, David.
Yes, I've been learning that as well, Bob. Finally, people are going to see the two of you together, Bob, and think about succession. Does Josh have an upper hand here, given everything that's going on and obviously efforts that you're making there?
David, clearly you know that you're not going to get an answer to that question. We're here to discuss Abu Dhabi, and since we're announcing earnings, or we've announced earnings, we're here to discuss that as well, and we'll just leave it at that.
Yeah, all right. Well, I'm going to leave it there as well, given I think we've gotten a good amount of time. I guess the final question, Bob, for you is, I mean, you're going to be long gone when this park is completed. I know you wouldn't tell me when, but it's got to be at least 5 years, right, before people are going to be in attendance in Abu Dhabi, correct?
Yes, longer than that, yes.
Longer than that.
But, David, there are many projects I'm working on that will be completed. You say I'm going to be long gone. I'm not sure I like the way you put that, but
no, I just like to bother you a little bit. You know
after I retire again.
That's exactly
yes,
right.
I do.
I got to get a little dig in there somewhere.
I'm a big believer in managing this company for the future in the long run, and this step is a big step in doing that.
All right. Guys, certainly appreciate it. We'll be obviously talking, Bob, about earnings a bit later as well. The stock is up nicely, largely on the strength of those numbers as well, but certainly some big news to come along with them. Guys, thank you so much for joining us this morning. Appreciate it.
Thanks, David.
Thanks, David.
David, want to thank you for bringing us that great interview, making some news this morning.
Push it up, Daisies. What did he say? What did he say? I don't know. What did he say? That was David. What was that, Faber? I mean, God, I'm afraid to talk to you.
I didn't say pushing up Daisy.
What'd you
talking
say?
about?
What'd you long gone?
I like to remind him sometimes.
Long
that
gone
life is
from the
fleeting.
company. He's in the pro. Did you see him? He
He's
seems
amazing.
sharper than you, Faber. He seems
sharper than me. What do you
That's
want
what
from
I
me?
meant.
Looks better too. I know. Annoys me. That's why I like to remind him he's older.
Yeah. All right. That was a dig. All right. I got it.
Okay, two handsome men this morning, many handsome men.
We're all
and beautiful women, and beautiful women.
yeah.
Okay.
David, thank you.
Before HR calls, we're going to go. Preview of today's Fed decision and what Jay Powell may or may not say about future rate cuts. We'll talk about it, plus an exclusive interview with the CEO of DoorDash. He's going to talk about the competitive food delivery industry and its big new deal with Deliveroo. Love saying that word and so much more. We'll come right back.
P.com.
Welcome back to Squawk Box. Futures have moderated a little bit now, 180 points in the red on the Dow. NASDAQ was up quite a bit more than that as well, so we pulled back just ever so much. Check out the shares of Novo Nordisk. We were talking earlier. The drug maker cutting profit forecast due to lower than expected U.S. sales of its weight loss drug, both of them, Ozempic and Wegovy. The Danish drug maker says it's being hit by generic versions, those compounding versions of the patented drugs, but I expect those copycat sales to ease later this year. And still to come, the Fed is going to be in focus for investors today as the FOMC wraps up its two-day meeting. Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan is going to join us with his take on where rates are headed, where the economy is, what tariffs mean, all of this. We'll be right back.
Xfinity.
Welcome back to Squawk. India attacking sites in Pakistan, it said, were part of a terrorist infrastructure following an attack by Islamist militants on Hindu terrorists last month that killed 26 people in Indian Kashmir. Now, for its part, Pakistan saying it had shot down 5 Indian fighter jets. It amounts, though, to the worst fighting between the nuclear-armed countries in more than 2 decades. Pakistan saying at least 26 people were killed, 46 injured in those strikes. And we should mention separately this morning, United Airlines announcing that it has now called off its flights to New Delhi for the day, citing escalating tensions between those 2 countries as well as subsequent airspace restrictions. So this is something we need to be watching. And I mentioned we were talking about it out in LA at the Milken Conference, a whole bunch of investors really concerned that this could actually escalate in ways that we have not been, frankly, talking probably enough about.
But no flights to New Delhi or Newark.
Right.
That's...
Yeah, actually they are flying back to Newark, but I mean,
Well,
nuclear war or
canceled
or Newark Airport.
5 flights a day. It's
Yeah.
yeah.
You ever fly out of it? I mean, it is.
Yeah,
I thought.
Andrew and I both flown
I mean,
in
it's
and
the
out of it
baggage
this week.
claim that gets me. It's like it can be as long as your flight.
I'm more concerned about the New Delhi situation.
I am too. I know, but we're talking about United flight. I mean, that's kind of a small point of what's going on. Yeah, they both have lots of nukes.
Yeah.
Lots of nukes.
All right, still to come this morning, DoorDash making some big news over the past few days, expanding their delivery service and buying a restaurant booking platform. DoorDash's CEO, Tony Xu, will join us in just a bit. Up next, though, the Fed is expected to leave rates unchanged But investors will want to hear from Jay Powell on the state of the economy, tariffs, and much more about their statement and press conference. Goldman Sachs Vice Chair and former Dallas Fed President Robert Kaplan will join us to talk about this in just a moment. Squawk Box will be right back.
Federal Reserve widely expected to keep rates where they are. Today's meeting following those 2 days. Former Dallas Fed President Robert Kaplan is now vice chairman with Goldman Sachs. And it's good to see you, as always, Rob. Just start with just what keeps you up at night. Would you say that I'm talking about tariffs, is it the inflationary impact or the growth worries or the recessionary impact of tariffs that you think worries you more? Or is it exactly equal?
The one thing that makes me feel a little better is that 77% of the U.S. economy is services, not goods. About 12% is manufacturing, another 12 or 13% is imports of goods. So I think the economy, if we get some clarity, can withstand this from a growth point of view. We're clearly slowing. And if we don't resolve some of these tariff issues, we're going to slow more. But I'm more probably concerned about the cost push and how that flows through to the economy. And again, that's going to be a function of whether we're able to de-escalate with China and de-escalate with these other countries, and we may be able to do that. So what I'm seeing in the economy right now is slowing, but it's pronounced in shipping, it's pronounced in hotel, leisure, tourism. But I hear from other clients, business is it's not great, but it's hanging in there. And I think that's where we are right now.
That sounded like if you take that to the Fed and say here's what I'm seeing, that would be a reason not to cut right now. I think there's other. I've heard the other side is that, you know, inflation, some people think is a monetary phenomenon, and since it's a second derivative, it's not just that first price hike that you'd see. It has to continue and, you know, go up 5, 6, 7% on top of another 5, 6, 7% on top of another 5, 6, 7%, and that would be, I guess, a trade war, a tit for tat trade war. So sometimes I have trouble seeing the inflationary side of things, and I worry more about the growth side, which would argue for a cut with oil at $60.
Listen, everything I've ever read and studied on tariffs, and you know, Texas is one of the largest exporting states in the country. Tariffs tend to slow growth, and they make prices stickier, and so that's why this has been a tricky thing for the Fed to handle.
Right. It's like the worst. I mean, those two things. That you're just describing stagflation. So, what do you think that because there's been such pressure from President Trump, do you think that makes Jay Powell less likely to cut in the future?
No, it doesn't, and it shouldn't. And I think Jay Powell's got two objectives here. One, for the press conference, is to jawbone and make clear that the Fed will remain vigilant in fighting inflation. So why is he doing that? Because he doesn't want inflation expectations to get unanchored. And what I'm seeing actually in the economy, with consumers pre-buying, with businesses starting to put surcharges on bills, I think you're seeing inflationary expectations get untethered. He wants to control that. And that will set the Fed up to be able to assess conditions and into the June meeting, into July meeting, and get prepared to cut. But it's going to be easier, ironically, to be able to cut in later meetings if he keeps inflation expectations anchored now. So he may jawbone tougher, even though I think he's keeping all his options open, and I think they want to get in a position to do something, but only if it makes sense.
The next, I mean, we did see a claims number that, I don't know, but then we saw a good jobs number. No real worries there. What's the next, when do you expect to see something if there is a problem? And the same question for an inflation print. What's the next thing that will let us know what's really going on?
Well, there's a couple of unusual things going on right now. Normally, when you see a first quarter GDP number that's this weak, and I know some of it was due to excess imports, but it was still weak. When you see GDP slowing, you would expect unemployment to start moving up or spiking up. You may not see that this time because the labor force is still very tight, and the lack of immigration, the deportations, the uncertainty about the status of millions of undocumented workers who are in the workforce, I think it's going to keep the labor force tight. So I actually wouldn't shock me if the unemployment number doesn't move up the way you normally see in a slowing. And so then the second thing I'm looking for is less, honestly, in the data. I'm looking to talk to contacts about what their behavior is, what they're seeing in their business. So what I'm hearing right now, and I think that precedes the data down the road, what you're hearing is the word about empty shelves coming in about 4 to 6 weeks. That's why this de-escalation this weekend with China could be very significant. It's ironically not as critical we come to a trade deal with China. I think it is critical that we roll back some of these tit-for-tat tariffs so we can get trade flowing again. Otherwise, what I'm hearing from businesses, you're going to see a lot more stocking out. It's going to particularly affect small businesses who really don't have other options. And so I'm watching the China discussions carefully. And then the other thing is I'd love to see cooling off of preemptive buying and also the surcharging that we're currently seeing. And so as I hope, as we see some trade deals and more clarifications, you'll see the average tariff rate start to cool down, but the jury's out on that yet.
Yep. And you got all of Goldman Sachs. You can call anyone you want and find out what's going on. Hatzi has said, whomever, it's the vice chair of Goldman, tell me what you're seeing. You can do that too, right? I mean, that's always that's
and
a good
we're
place.
talking about that, and we're talking to asset allocators around the world. are watching this very carefully and trying to weigh how they position their portfolios.
All right. Well, that's invaluable, and coming on here is invaluable to have it, Rob. We appreciate it. Thanks.
Good to talk to you, Joe.
Okay.
Okay, coming up next, the CEO of DoorDash on the company's expanding global business, including its quarterly results and, yes, competition in the food delivery sector. That after this.
Join Jim.
DoorDash announcing 2 big acquisitions for Deliveroo and 7 rooms worth billions of dollars. It's an effort to transform its business offering and expand its service internationally. Joins us right now in an exclusive interview. DoorDash's co-founder and CEO. We're thrilled to have him here. Tony, good morning to you. A big quarter, a big sort of moment in terms of just what the expansion of this company looks like. I don't know if we want to go earnings first or we want to go deals first. I kind of want to go deals first.
Your choice.
Let the dealer's choice. So I'm gonna go deals first in terms of just what this ultimately means for the company in terms of how it's going to grow and frankly how you see the competition playing out.
Yeah, I mean, I think what you see is that DoorDash is a multi-product company now that's operating on a global scale. And I think that is in part, I think, what you're seeing. I mean, our aspiration has always been to grow and to empower local economies all over the world. You know, the willingness and the desire of every small, medium, and large retailer to become a digital powerhouse, that's true in San Francisco, that's true in London, that's true anywhere in the world. And so that's really what the nature of these partnerships are about. You know, in the case of Deliveroo, we are adding to our footprint in Europe. You know, should the deal close, we would then operate in 30 countries across the continent and 45 countries globally. In the case of 7rooms, we are adding to the DoorDash commerce platform, where we've white labeled our services such as DoorDash Drive, which you could think of white label delivery, DoorDash Storefront, white label online ordering, and now with 7rooms, white label marketing to help restaurants get a 360 view of their customers regardless of the channels in which they dine with them.
What's the integration ultimately look like behind the scenes in terms of, to the extent there are going to be cost savings, and how integrated will some of these services be or not be? Because I know that you're going to maintain some of the brands and whatnot.
Yeah, I mean, that's something we're going to have to figure out. Obviously, you know, our goal here is to maximize for success. And so while you'll certainly see certain, you know, services and tech stacks integrated to allow, you know, the best, you know, offering, especially the best of scale that DoorDash brings, we also want to learn and navigate all of the different local challenges that we see, given that this is a highly local business. And so it really is a best of both approach, where you're going to see, you know, a consistent service, but we're going to maximize our tailor and the offerings to each respective market.
We had the CEO of Uber on a little bit earlier. How do you see the competition with them playing out? I mean, is that, if you were to put one company on your sort of competitor board, is that it at this point?
No, I think the, you know, competitor I always put on the board is really rising consumer expectations. You know, I think that's always been what's driven us at DoorDash, and frankly, that's always the highest aspiration. You know, what we've delivered for a customer yesterday probably isn't good enough for what we've delivered, what we will deliver for them today. And so for me, it's always, you know, obviously we're careful about understanding, you know, the different peers that we compete with. We don't underestimate anyone. But truly what inspires us and motivates us is the consumer and their rising expectations.
You just mentioned the consumer. I think we're all trying to understand what's going on with the consumer in this economy here in the U.S. and abroad, given the tariff story, and whether these numbers are, you know, the expectations around a slowdown are playing out or not. Apparently this morning it did not seem that way with Uber. It does not appear that way in the context of your earnings, but what are you seeing?
Yeah, well, I think what you're seeing is a lot of fear in the system. I think that is very real. Consumer sentiment certainly has swung negative, you know, in past months, but we haven't seen the order behavior change. I mean, as you referenced, we saw record earnings where we saw, you know, 20% plus growth on our top line on a very large base, and we're seeing order rates of different cohorts continuing to improve as the activity levels grow with the increasing number of use cases, as well as different categories now of delivery that DoorDash is offering.
What's happening to your costs? And I'm thinking about, you've got a pilot program going on in Pennsylvania for this benefit program for Dashers. And I'm curious just how you see costs over time either going up or I doubt going down.
Yeah, well, you know, our belief in programs like the one you referenced, the portable benefits program in Pennsylvania, which we're now taking to other states, is that Dashers ought to be able to have what they want, which is the flexibility of a type of work like ours, and also protection and benefits. And so you're right to say that, you know, in general, costs go up, but what I would also say is that you know, efficiency as well as the ability to produce new features to grow the order behavior in our system, especially as now we are a multi-product company, also grows. And so it's always this balancing act. You'll obviously have to invest in order to, you know, achieve a certain outcome, which then delivers financial results. But, you know, job number one is making sure that we deliver for the customer, in this case, the Dasher.
You know, we heard 2 weeks ago that Lyft is going to go international. They have been a domestic player thus far. You've worked with them before. Do you see, you know, how do you see that piece of the world playing out?
Specifically, you mean within ride-hailing?
Within whether ride-hailing for you ultimately has to get matched up, whether you think you ultimately match up with a ride-hailer ever in a more meaningful way.
Yeah, well, I mean, the first thing I would say is I can't think of any other program or set of services that would be more useful than ones that connect local customers to local businesses. if you take something like restaurant delivery, that has the greatest, frequency of activity, both because of the type of use case, eating, but also because you're connecting you to everything inside your city. So I think for us, the focus is squarely on that, making sure that organically we build the best-in-class products, that we continue to do that and continue to meet the increasing standards from customers. I think with respect to other types of services, we do have partnerships. I mean, you mentioned Lyft. We have a partnership with Lyft that we're happy about in the United States. We have other types of partnerships as well. I mean, that's certainly a part of our ecosystem, but the main focus is organically building great products.
Separately, wanted to ask you, Gatto, because we talked to Dara earlier. Maybe I should show you some tape of what he said. They have a lawsuit, which I'm sure you know about, against you. Let me just play it because I'm curious what you think in reaction to it.
We wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, et cetera. It's delivery as a service. We think that should be an open market. And right now, we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give our merchants more choice.
Tony, what do you make of that?
Well, I mean, as you stated, Andrew, it's a very competitive market, and I think merchants do have choice. I think merchants have chosen, and in the case of B2B services or delivery as a service, I think they've chosen our product. I mean, something that we pioneered and led with in the market over 8 years ago. And what we're focused on is always trying to innovate and bring new products to bear to match increasing standards and expectations from customers. We're not focused on litigation.
But in terms of the lock-in effect, if there is one, and should there be?
Well, there's no lock-in effect. I mean, merchants are choosing to use our service because it delivers the highest quality product at the lowest cost.
In terms of acquisitions going forward, what does that look like for you? We were actually also talking, Uber just bought a business in Turkey. How much of your business you think in the future is going to be just grown organically versus trying to buy into new markets?
Well, most of our work has always been organically built. I mean, as you can tell,
yeah.
our focus has always been on innovating on the product. And so, we actually haven't really made an acquisition since our partnership with Volt in 2022. And so these aren't things that you get to perfectly time. We don't get to choose when, assets are for sale or things like this. But most of our efforts really are focused on product improvements.
And then finally, is a news you can use question for those of us who use DoorDash all the time, including the Sorkin family. What do you think a fair tip is these days?
That's a great question. I think it depends on the level of service. But what we have seen is that customers love to tip, and that's a very American phenomenon, I have to say. Obviously I travel a lot for our work.
Right.
Today operate in but in the U.S., people do like to tip. They don't like to be forced, in terms of the amount or the frequency in which to tip, but they do like to tip.
Right, but Tony, here's my thing. I'm just going to go straight to my own problem. So we sometimes order from like a Sweet Green or whatever. Anyway, sometimes it's not. Sometimes the delivery could be late, but it's not the delivery person's fault that it's late. It's late because it wasn't put on the first end. So then I don't want to not tip or ding the delivery person. So that's why I'm sort of asking this question.
Yeah, it's a great question. I mean, and you're calling out like some of the challenges we face, which obviously is what we have to deal with a multi-sided marketplace. It's not just a relationship between you and the Dasher. On every single order, 3 parties are involved to make that job successful. And so that's something we're working on. We don't always get it right, but those are a lot of the nuances that we have to solve.
Okay. Tony, it is very good to see you. We look forward to seeing you again soon, hopefully in person. And thanks again. Congratulations on all these big deals.
Welcome back, everybody. We've got some news from the FAA on Newark Airport operations. Phil LeBeau joins us with that. Hi, Phil.
Hey, Becky. The FAA out with a statement about steps they are taking immediately to improve the air traffic control system when it comes to the Tri-City area, specifically to Newark Liberty Airport. We're not going to go through every single thing that they're doing immediately, but some of the more noteworthy things that the FAA has said they are doing is, one, they're going to be adding 3 replacement backup telecommunication systems, fiber telecommunication systems, that will add redundancy, if you will, so that there is no loss of communications between the Philadelphia Tracon and Newark Liberty. They're going to be replacing copper connections with fiber optic. That's something that Secretary Sean Duffy has talked about for some time, and they're going to be deploying temporary backup systems at the Tracon facility in Philadelphia. In addition, they're going to be adding some backup flight controllers. Not surprising, Becky, that they are making it clear they're taking immediate steps to improve the situation when it comes to air traffic control.
And you said adding some backup air traffic controllers, the human element side of this?
Well, not necessarily backup. They're adding flight controllers if possible. I mean, but we've talked about this before, Becky. You just can't take somebody who's working in St. Louis, Missouri and say, go to New York and you're going to do flight control. You've got to train them in that area.
Yeah. Phil, thank you. We have lots more to talk about with this. We appreciate it, and we'll talk to you again tomorrow. That does it for us today. We'll see you tomorrow. Squawk on the Street begins right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli at Post 9 of the New York Stock Exchange. Kramer has the morning off. Stocks get a bounce on this news that Bessent and Greer will head to Geneva this week for what's being dubbed an icebreaker with their Chinese counterparts over trade. Fed decision at 2 p.m. Eastern, and more guidance cuts today from Novo, SMCI, and others. Our roadmap begins with these China talks. Futures bouncing on the news. The Treasury Secretary and the top trade official, Jameson Greer, will meet their counterparts in Switzerland this week.
Plus, shares of Disney are rallying this morning. The company reported a perhaps surprising uptick in the number of streaming subs. Also announced its plans to build a new theme park and resort in Abu Dhabi. We're going to bring you more of my exclusive conversation with CEO Bob Iger. That'll be in just a few minutes. And keep an eye on shares of AMD. The company notched stronger than expected first quarter results. Its CEO Lisa Su will join us exclusively later this hour.
Let's begin with the markets. Trade and decision day for the Fed. Interesting news about going to Switzerland, Mike. Although at the same time, the EU continues to say they're going to ready some countermeasures in the event that their talks with the Americans fail.
Yeah, I mean, standoff on every front. The market at this point, having come back the way it did, certainly prices in some measure of de-escalation and the absence of some kind of real economic calamity. So any progress in that direction is welcome. The market has shown a little bit of an instinct to bid for even rumors of meetings and deals. That being said, we're down 1.4% in the S&P this week after a very strong 3% gain last week, after we've come 17% off the low. And to me, it's, okay, short term, overbought. We got back to the April 2nd levels. You regained 60% of all that was lost, and it's a now what moment. At the same time, you still have plenty of negative sentiment to burn off, I think, and institutions probably felt left behind by the rally. So to me, that's why we're in this sort of low volatility way, churning around in this area. Currency volatility has eased up today. That's, to me, the thing to watch in terms of whether it bleeds into everywhere else. Credit's been fine, but currencies has been, that little bit of a tale of capital flight.
We were talking, in fact, yesterday a good deal. I spoke with Sarah about it as well when we were both at Milken, in terms of the expectation in the market that there would be some signs of de-escalation in the next few weeks, and we already have gotten them. But I guess the key question remains, what has the market already priced in terms of those expectations? Obviously, C futures are looking, pointing to a higher open 28 minutes or so from now, Mike. But when I speak to a number of market participants, it's now, all right, what are the tariffs going to be lowered to when we get this de-escalation? And again, that is still uncertain in terms of whether we get it and what it looks like. But is it 50%? Is it 40%? And of course, as is typical of hedge fund managers, they're trying to figure out, well, if it's less than 50, that'll be really good, and then we'll get a bump up in the S&P, maybe a few percent, and the Russell probably more so because it's been penalized more so as a result. But that's the kind of thing that's going on right now. And obviously no surprise that if we that the market already has priced in this expectation to some extent that we will get this de-escalation.
Exactly, although I don't know if there's a way to determine exactly what precise net tariff level and impact on economic growth has been priced in.
One guy, by the way.
Exactly.
So
and by the way,
it depends how Donald Trump feels that morning. I mean,
which also is the argument against, well, the Fed should be proactive and get ahead of this. Let's just imagine the world in which the Fed sets up a rate cut for June. The economic data remains okay, whatever, maybe inflation comes down. They cut in June, and the president says, never mind. And all of a sudden, the pressure's lifted, and I mean, it wouldn't be a disaster to go down 25 basis points and then have the economy do what it does. But I think that's why everything's in play. What I will say, the market is priced in that we are in this in-between phase where either de-escalation and or the Fed coming in to help, and oil being down, and the carrot being dangled in front of the market of the tax package can have enough offsets that a good kind of starting point for corporate America and the economy means that we have time. I think that's what the market is suggesting. We're still down 8% from the highs. The market is still kind of struggling in a little bit of a downturn here. It's just that the absolute worst case has been taken off. We bottomed at the exact moment of maximum tariff hawkishness, and have benefited from all the incremental easing of rhetoric, at least from here.
Some argue that this move to begin conversations actually gives the Chinese some leverage. Right. Because if they wanted to make a ding into stocks, all they would have to say was that was not constructive.
Yes. No, it's a funny game of we have the cards, no, we have the cards. That each side is suggesting that they have no urgency to move, the other one does. But that's right. And if we're just setting the terms for how we're going to talk and what's on the table. I know there was some hopeful reporting last week that maybe the Chinese are preparing some, fentanyl control type package. Use that as the wedge to say we're going to do more here. Maybe we can ease things up. So again, I don't think it's a matter of a snap of the fingers and we're going to unwind it, but it could be, and that's the crazy part of this market.
Well, we've also though, but when it comes to like positioning, for example, I mean, max bearishness is a while back now.
It is.
And there have been taking on more risk of late, so kind of where we are as opposed to where we were.
For sure.
Although long-short hedge funds are basically back to flat.
Hedge funds, it's kind of like a neutral. Yeah, they're no longer leaning against the market, but if the volatility stays low and we keep going up from here, they might feel the instinct to chase, but not yet.
No. Obviously, as you point out, the key question, what do we end up with in terms of if there is a negotiation and where does it end up? How much pain is China taking, for example, versus what conceivably will be the pain felt here in the U.S. probably fairly soon, having just come from Milken and spoken to any number of different chief executives, both on and off the record, on camera and off. I mean, it is a matter of weeks here until things really become tested. They believe, at least when it comes to sort of certain parts of the economy. Guys, want to move on to Disney, of course. The company reported earnings this morning that are being well received by investors. You can see the stock touching 100. We'll see how it opens, but could be up as much as 8+%. That is largely on the back of better than expected numbers, sort of across the board. Perhaps something somewhat surprisingly, for example, the parks, cruises, experiences overall doing quite well. And there was also the addition of 1.4 million Disney Plus subscribers, taking that subscription service, direct-to-consumer subscription service, to 126 million subs, and making it even more profitable. Remember, we've talked for so many years now about direct-to-consumer, of course, and how much capital it consumes. But on the other side of it, if you can get to scale and your costs sort of stay the same, every incremental subscriber is incremental profitability, and investors are watching the ramp up in EBITDA there in particular and are quite encouraged by that ramp up in EBITDA, not to mention profitability, which was up sharply as well at direct-to-consumer operating income up to $336 million. But it can ramp like that, given that's what you want. It's a scale game. Netflix is one, right? Sure, but Disney is fighting for that number 2 position and seemingly doing a pretty good job of it right now. And then we got the park. And then we've got the announcement that we brought to you, of course, at the top of the hour at 8 o'clock on Squawk Box. Bob Iger, Josh Tamar joining me to discuss the plans, or not the plans, what will be the opening many years from now of a new Disney park in Abu Dhabi. It is completely being funded by their local partner. And so they will basically oversee the development, and it will be a royalty based revenue sharing approach, if you want, or based on the revenues. They didn't give any more details than that. We're talking probably 7 years until it sees the light of day. But Bob Iger, of course, as you might imagine, had a lot to say about what was behind it and what the expectations are. Take a listen.
This will be our 5th location outside the United States, and no two are the same in terms of the deal structure. The deals have all been tailored to the market, to the partners, to the available capital, and also timing-wise from a Disney perspective. So as you know, we announced some months ago a decision to turbocharge the business that Josh oversees. And by that we mean investing significant amount of capital across the world, really, but more importantly, we're going to invest roughly $30 billion in the United States to expand Orlando and California. And what this deal gives us the ability to do is to continue to invest the way we said we'd invest, particularly in the U.S., which will be obviously job accretive, while at the same time expanding our reach to a part of the world that we really have only reached superficially. We talk about Disney Affinity, but it's a long trip to get to one of those 6 other locations, and this will basically put a Disney theme park really right in the backyard, so to speak, of a whole new consumer base. But this deal made sense to us in part because the available capital, and it also allows us to continue to invest the way we talked about. And also we've structured in a way that, and Josh described it, that not only will we have total say really in the design and development, or design and creative rather, but we'll have considerable oversight as well.
So interesting, guys, in the sense of, yeah, we're not putting capital up. That lets us spend more capital other places, but we're obviously expanding the Disney brand to a different part of the planet, so to speak, where we're going to be able to attract new people who are going to attach themselves to that brand.
Right, and it's not going to pull from the other regions, and it seems like it works on paper. And I think it also accentuates what sets Disney apart. One of the things that sets it apart from the other kind of legacy media brands. It's still kind of a growth brand. It has the physical theme park business. Yeah, I thought that the numbers for the latest quarter, among all the other things you mentioned, 6 months, first 6 months of the fiscal year, free cash flow is like $5.6 billion. Remember a couple of years ago when they sort of teased fiscal 2024, they would approach pre-pandemic free cash flow, which is like almost $10 billion. Didn't quite get there, it was like 8 and change. But now they're on pace for it.
Right.
So that tells you something. It's kind of this round trip now. It was 7 years ago, that pre-pandemic peak number. But it's very significant. It's the reason the market, I think, views Disney as the obvious second to Netflix in this entire business, right? So Netflix is the one everyone needs to own. It's your primary service on streaming. It's 32 times cash flow, EBITDA. So
Disney is far below
Disney's
that.
10-ish,
Yes.
But then WBD and Paramount are 6 and 7. So that's the market saying who's got the better positioning.
This is going to be the best reaction to Disney earnings in about a year. I think got a Q4 of last year, but it's flat over 10 years.
Oh,
and
sure.
It's flat over 5 years.
Yeah, 100 was a kind of a beacon for a while.
And to your
absolutely.
point, the stock inhabited far higher territory prior to the pandemic in terms of the multiple it was getting to that free cash flow.
Much higher. It's at like 16 times earnings now, maybe a little higher with this pop. But, so it's a reasonably valued stock, but it used to trade at a premium to the market, obviously.
We're going to have a chance to obviously talk. I mean, listen, some of that may be wrapped up in the fact that they're still concerned about the overall economy, people's willingness and ability to spend in the parks, even though, of course, as we indicated, I mean, they had operating income, $2.5 billion. That was up overall. Domestic parks and experiences up 13% in terms of operating income to $1.8 billion, guys. So still quite strong there. We're going to have a chance to talk about a bit more of it with Hugh Johnson, the company's CFO. The earnings conference call, actually, I believe, going on right now, and we'll get him once he comes off that call a bit later.
It's going to be interesting to see a lot of mixed signals in travel between Airbnb booking and Norwegian on the weak side.
Yeah.
Marriott a little more constructive. Win last night saying the trends are okay, but we're actually going to postpone some capital improvements to the Encore because of tariff costs.
Yeah, it seems right now the hardest hit or the areas of greatest pressure are just strictly inbound to U.S. from certain areas. Like if you look at other indications, and I guess corporate is a question for air travel in the second half of this year. But it seems as if Marriott had a pretty strong reaction to its numbers. I think people are geared for worse, but not getting it yet.
Yeah. Meantime, still to come this morning, a change at the FDA that has taken a toll on shares of vaccine makers. Also ahead, AMD with a quarterly beat. We'll talk some chips, China, these U.S. restrictions, and AI with CEO Lisa Su in just a bit. Ton of names to get to. We'll dive into Uber, EA, Rivian, CrowdStrike, Scott News, SMCI, and Novo in just a moment. Shares of vaccine makers, including Moderna, trying to rebound after taking a hit yesterday. That decline was a reaction to the FDA announcing its name Dr. Vinay Prasad as its new vaccine chief. He's an oncologist who has been an outspoken critic of the agency and COVID mandates. He replaces Peter Marks, who led that division for 13 years and actually helped shape what we now call Operation Warp Speed, which brought us a lot of those deliverables during the pandemic.
Without a doubt, and was in part pushed out as a result of that. This is not just about vaccines, though. This is also about oncology. It's about cancer drugs as well. Kind of simply put, Dr. Prasad has sort of believed that it's way too easy to get cancer drugs approved. That, at least, is what those who've been following him closely are telling me. I've not spoken to the man myself. He's been critical of the FDA, as Carl just indicated as well, but the idea that we've been way too lenient in terms of cancer drug approvals, well, if that is the case and he's the man in charge, then you might imagine that it will be a more difficult road that the biotech companies that develop many of these therapies will face. And of course, if that is the case, Mike, then their own funding may dry up. Remember, In many ways, the way it works is you get sort of venture capitalists deciding on any number of different areas of the world that they want to invest in. Biotech is one of them because it can sometimes result in massive returns. If that money dries up, those biotech companies don't get funded. They don't necessarily do the necessary research or some of the get the early data that they need. Then they get sold to big pharma. That's the way it typically works, which then takes the drug through perhaps phase 3, or maybe they've already gotten phase 3 and into marketing and everything else. So this could be a real problem, hence why you might saw the reaction you did.
Sure. I mean, there's like many hundreds of biotech companies. The Russell 2000 is packed with, early stage biotech companies. And the other piece of it is, and this used to be a very steady and strong group in the market. Look at the life science tools and research products to companies like Thermo Fisher and Agilent on a year-to-date basis. Now, a lot of that was also just because of the general pullback in funding. Obviously all those labs being shut down, and so that's just a year-to-date. These used to be really kind of sort of bulletproof blue chip type names. So it is complicating this idea that, healthcare is defensive and maybe it's going to work in this environment. A lot of things getting scrambled.
Nothing compared to Sarepta yesterday. And Prasad's been specifically critical of Sarepta's therapy for, say, muscular dystrophy. Lost a quarter of its value yesterday.
Yeah, exactly. I mean, there's any number of these, single disease, relatively narrow market, real binary situations for these stocks. And obviously, this has been a really volatile one, but one that had a lot of hopes attached to it for many years now.
If you also come down on the pharma side perhaps as well, or limit their ability to profit from drugs, conceivably the price that they're willing to even pay for biotech companies in which they can buy those new drugs goes down as well, because the life cycle of the drug itself perhaps and its profitability over time may not be quite as much. So there are a lot of challenges right now.
To say nothing of people not potentially having cures for diseases, right?
There's that as well, yes. I think there are many cancer patients who would certainly look at this and not be particularly pleased.
Yeah. We'll get to some more movers this morning, including Uber. Pretty interesting guidance regarding deliveries and bookings. Stock's been on the move. Dara Khosrowshahi was on Squawk Box earlier this morning. Pre-market holding on to gains, although off of early morning highs. More Squawk on the Streets. Back in just a minute.
I'm here. I'm right at the orb. Good morning to you. How many more minutes do I got? I got 6. Pick up 6. Don't take long.
C plus.
AMD's back above the 50-day, looks to crack 100 this morning on this earnings beat, but also forecasts a $1.5 billion revenue hit from these U.S. curbs on China chip exports. Shortly after the bell, we will be joined by Lisa Su, the CEO. Don't go anywhere.
Okay. Oh man. Well, just like I said, AMD would be up and Uber would be down. There's been no signs of indication that we're going into a recession or that inflation is rising. None. Not a one. And you got these CEOs coming out scared to death. My reasoning why they're so scared is because we're cutting them off of all that free money that they got. All them billions and trillions. Joe Biden didn't have to give them all them trillions of dollars.
Pressure in the pre-market. Quarterly revenue was up 14%, but still below consensus. Meantime, Q1.
That's what they got that's what they got shares for. So they can, if they need money and they're hurting, they can get it out of share price. Offerings and things like that. But no, the taxpayer had to pay for it. Which I think is crooked as hell. There's Uber. Uber hit my low support that I called out in the video, almost to the penny. I'm going to tell you, I got 2 more minutes. I got to get my tea going. Then we had Disney. Like I said about Disney, Wall Street's in bed with Bob Iger, not me. I figured it would go up. I think I said that. We'll go back and look. But I think I said 99.21. And we'll look at the hour. I think I said we could break 100. But I'm not for sure. Yeah, we broke my last resistance. So as long as we stay above 99.21, we stay bullish. But I was 100% right about that one. Not that I'm bullish on it, just Wall Street's in bed with them. We got less than a minute. I'm going to see if I can get my tea going here. And it should take a second. Do I got a spoon? Yeah. Next time I do my jasmine tea, I'm going to pick through it like that lady did, that Asian lady did when she had hers. I see a flower in there. Okay, let's get it on. Good morning, retail traders. I think we're going to come down at first. There we go. We're almost to my support, so prepare ye in the name of the Lord. We'll get this first scalp out of the way. I didn't have my platform up. I'd be in it right now. Hurry up. God, it takes so long for Tasty Works to load up. Okay, the 564s. Damn it. I missed it. I'd loaded up on that one right there. We got in right around 110. We're at 127. So we're at the 63 right now. We could go ahead and break out of that, but I'm going to be patient here. Damn it. I'm pissy now. Let's see if we can get it. That's what I get for not being ready. My tea was more important. Shouldn't have been. Okay, my alert just triggered. We're at 123. These are the 564s at 119. The lotto. And this is May the 7th. We're at 118, 116. Prepare ye in the name of the Lord. Strike. 564 at 118. It's kind of risky, but I'm in it. La ta da, ta do 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 do. China administration is confirmed to chat with Trump team in the weekend. There's 116. I think I might have got in a little bit early, but we'll see. You could have got in at 116, 114 right there. Let's blank it. 124. So much uncertainty out there. Okay, I'm going to add on right here. $104. Let's do it. Now you need to break out 102. The crowd's going wild at the sports arena. No, Johnny's here today. Hope you've been okay. Come on, baby. If this doesn't hold, I'm going to stop out. Got to hold that orb. My tea is done fermenting, so I need to get it out. Oh, let's... My orb is at 559.67. To 560.75 right now. I'm even at 110. We got a symmetrical flag. Let's break the 21. Oh, here's that Mrs.
I absolutely believe we're still in the very early innings of AI when we think about the opportunity And yes, there are some
AMD CEO.
some bumps in the road, but overall, we're still at the place where enterprises are just beginning to feel what AI can do for them. And then also the PC market is a market that has done extremely well for us, and is a place where, again, people are upgrading their PCs. They want to
110. Let's go.
Technology that has great performance as well as great efficiency, and that's what we have in our roadmap.
Lisa, you can't get away from the questions about tariffs, I'm afraid. I know on the call there were quite a few, and I'm going to go there as well.
Oh, shut up.
Because it is a key part here. I mean, do you have any expectations as to whether there will be sectoral tariffs or what they might be? And I also would be
Shut up about tariffs. This guy is a liberal.
There was some pull forward in terms of demand as a result of fear of potential tariffs.
Sure, David.
I'm not scared.
I think we're all watching the regulatory environment
117.
Carefully. As it
Let's break
relates
it.
to sectoral tariffs, we're in active conversations with the administration as they're thinking about both the short term as well as the
Boom,
long-term
baby.
policy. The long-term policy arc is
Now
we
that
want more U.S. manufacturing. We want more manufacturing.
When scalping the beach trade, you got to realize it's exit time as long as you close in on that double top. Now you have the possibility of breaking out and having a good run. Also on a double top first thing in the morning, but right here is where you want to go ahead and take profit. Scale out, and then if it dips again, you can add on. Right now, I'm telling you. Do you understand? Someone say yes. I'm out at 123. And then if it dips again, I'll get back in. I'm very bullish today. I don't care what these idiots say. What's VBs mean? Does that mean yes? VBs? I got an A. What about my plus, man? Shit. Don't you think you need to correct that? VICTORY, that is Washboardjim's battle cry. As he drinks his jasmine tea, he might have to get up and go pee. First time I've ever had raw sugar. So don't mess with me today. We're at 127. Hit 127. Oh, damn. Orb has just increased. You get that, Funky? What, boy? Let's change that to a bright red, man. Come on, nigga. I said that one time. This lady got, I think we end up calling her a lady. Put a big old piece on StockTwits about me, saying how much of a racist I was. I said, what? Called me a, what do you call it, misogynist? Then I knew it was a woman then. A liberal woman. I love women. Okay. It'll be peace in the valley for Bobo. Oh, there's the knife. Jimmy, let's do it. Get ready. Did you see how they took their profit? One trader did that. Get ready. Anybody hear me? 101, baby. See how important it is to take profit right first. You're trading with scalpers, okay? You're not trading. It's a whole different. This first hour and a half is a whole different game. You got to be on your toes. Come on now, don't be doing this to me. For I am Washboardjim, retail trader. I'm colorblind and I piss off half my liberal friends. We're at 113. So make some kind of business decision. What? Why? Why? Because you're heading towards the head and shoulders. That's why. I didn't get out of it. I should have sold it right there. I had plenty of time. 111. I'll show you what a picture, like one of my best friends back in high school. He hasn't changed one single bit. So it's funny how people can go through life and not change. So far, we're getting a little bit. We broke a little bit below support. Resistance is going to be the 200, I think. So let me draw this up. Okay, now, there's your three white soldiers, and you're getting up towards the head and shoulders. So you want to take profit. Now, or we're going to come up and hit that top of that orb. Do you understand? 116. I'm doing it. Big bad Jim, yeah. And it stood there for about 5 seconds. A plus. I know what S is going to do. He's going to call it quits pretty soon. Unless he's got all day. You want to get, see, we're back down to 102. Old Jim was a mighty old man he was. 118, 119. So got out at a Head and Shoulders. What are you going to have for lunch today? Well, I hate to keep eating hamburgers day after. My target. What did Jimmy say? What did Jimmy say? Does anybody remember? What Jimmy say is we'll get out at the 200 SMA. Hickory dickory dock, the stock run up the clock. The clock struck 9, and I'm totally divine. 131, 127. Thank you very much. This is how you get rich. 1.27 all out. Could be a big mistake, but I don't really give a crap. Taking loss on SPY? What? You didn't listen to Uncle Zimmy? Okay, now I'm going to finish up my tea before I have to go pee. Live now. Jury selection continues for my racist friend Diddy. I heard Michelle Obama's transitioning back to a man. I'm going to tell you my new girlfriend I have a crush on, but I'll never be able to see her live.
I'm going to do a sped up version of Ghost by Ella Henderson. I really want to maybe start something like that. Why am I making it so hard? I don't think I can do it.
Don't make it hard.
I mean, technically that was it. Do I want to put myself through it though? Do I actually want to put a TS in this? I really
You can tell she was a bottle sucker when she was young.
But you have got loads of time. All you do is skiff all day.
Yeah, sure. No!
Well, aren't you going to do it? Girl? I'll say I'm a bottle sucker when I was young. I sucked my thumb until I was 12. One, two, three. So let's go over this, why I've seen that target ahead of us here. You take your trend line, go 1, tubus, and a freebie right to the 200. You see what I'm saying? So if it pulls back, that's going to be another strong buy. Depends on how long it wants to hang around. Now you're above the orb, so you're squeezing between the orb and the 200 here, and we could go higher. But I'm going to take a little break. I don't want to rush myself. We're in the sweet spot. I mean, this thing can go ahead and start to move, but remember, today is FOMAC day. Lorraine Jumps is that girl's name. She makes money. She quit her job and now she does is jump rope for a living. Come on, baby. Give me just one more knife. If you do, Lorraine will be my wife. I don't think I could handle Lorraine, though. She'd be... the way she talks, she would just irritate me. I mean, no lip movement, just go do the dishes. Come on, dip, you beast. She's bullish as could be. 561.76. Here's my knife. Come on, baby. Just one more big old fat candle. Show a little bit of... You can do it. I know you can. Lorene, you're the prettiest girl I've ever seen. You can do. S has got all day for this. Amazon breaking out. Oh shit. 116 to 127. How dare you? There's resistance. 129. I mean, I could have took that, but I did not. I wanted one more. I really wanted to come back down here to 560.20. I think that would be the manly thing to do. Right to the penny. 561.76. It'll be peace. That's the toughest tea I've ever had to drink. I'm going to buy some real fresh tea at my tea house and see if it tastes any different. I like to enjoy what I'm drinking, but God. Just so, I don't know, dry or... I don't know what to call it. Dadgummit. No, you don't. Oh. Come on, pull back. Oh, here we go. Here's a trim line. Here's a trim line. Oh, we got a megaphone. We got a megaphone. Got a couple of them. Here's the megaphone. I'm going to put this in a different color. Come on, Beach. Get your thing ready just in case we do break out. See that? It could pull back to the orb. Your first support's going to be, there it goes, dadgummit. Right back in here. This is very bullish. I'm out of the trade, but right here to here would have been $100 if I scalped 10 of them at 116. It's keeping it under that $1,500 mark. No, my watch is killing me here. This is the watch that Zach Morris gave me. I thought it was very kind of him. It's a Gibson. It's worth about $3,600. Okay, here's my pullback. I'm using the same call. I should be looking at the SPX, but maybe I should have traded that this morning, being I'm so bullish. Let's get it. I really like. Okay, we're back to that support right here, the one that I called with 3 black crows. I'm tempted to buy it. We're at the top of the orb. Are you paying attention, Funk? $112. I called it way in advance. This is more risky. I've got 2 reasons. I want 3 reasons to take this trade. One is the 200. What was resistance now becomes support. 2, this here support line that respected right here and also right here. 3, we're on top of the orb. 4, we're at the 21 EMA. So I got 4 out of 5 reasons to take this stock. He's got.
You're at the 200 on NQ. You haven't broke the 200. You're in a resistance zone on both NQ and ES.
Oh. I didn't think about that. We'll see here.
NQ is literally stuck for the past 10 minutes on
Well, I did.
the 200 and the orb on 1 minute.
Okay.
If NQ breaks that, if NQ opens a candle above that 200 on the 1 minute, then I'm going on.
It is kind of risky. I did say that. We'll see here. But I'm still very bullish.
I mean, the 5 minute EMA 5 says push.
5 minute. Let me look at the 5. On /ES.
Mm-hmm. Yeah. It's already flipped green. I think he broke out. I think it's just going to take a minute. Like you're coming into some big resistance on the ES.
Yeah.
You're still under the 200 on the 5, and the 200 is sitting dead in the middle of the resistance zone on the ES.
Here we go. If you don't feel funky, get out of the trade. While you're still green, I'm going to hold on to this. I think it's good to have an objective. I mean, what do you call it? You can get caught up and get complacent. It's good to have a different perspective. That's why I like trading with Funky. He's my little monkey.
Hey, monkey. Grass monkey.
I'm just ape over you.
Oh, you say the sweetest things.
It is taking some time. Now, we did show a little bit of Amazon liftoff. We retested the orb twice also, 3 times on the 1 minute. I want to look at the 5 real fast. That's what I should have done. Oh man, look at that 3 black crows on the 5 this morning. That's a beautiful setup right there. Inverted hammer off these 3 black crows. That's a no-brainer. And holding up to 63 on the 5 minute. Let's go to the 3. Three minutes, great. Go ahead.
Yeah, I pick it off the ES 5 minute. That bull flag I drew this morning, it touched it perfectly.
Yeah.
The bull flag almost lined up with the bottom of the orb perfectly. So as soon as it touched that bull flag bottom, I grabbed them.
The 2 minute looks beautiful too. But we're waiting for FOMAC, and that's a big reason to kind of. If we get a breakout here, the game's on. And I could get out here and be up $60. Just say, wait. Let it pull back into FOMAC. I don't know. I'm feeling a lot of risk.
See a lot of indecisiveness on the 5-minute candles. There's huge wicks at the top and bottom. You almost got a doji on that last one on the S. On from Orc Touch. There's your Orc Touch. Now you 63 touch on the one.
Yep, this is where I want to jump in it. Add on.
Switch to my multi. Yes.
That's a good size engulfing candle right there. Well, let's get it. We're going to see here. So I brought my costs down. This is still a risky trade, so that's why I said get out of it when we were up. They got 104 and 112. Let's break out now. 117. So, I mean, I can get out of it right here. $118, $119, take profit. I think we can go higher. Now, what? We hit the 50 and the 61. So that's why I added on. That's my third scalp of the day. So 3 strikes, you're out. It'll be peace in the valley for Bobo. Look at this setup, man. I'm telling you. There's no giving up on this trade today. Now, this is what I feel as a scalper, is that we're getting to the point where we either got to break out or have a good solid pullback. This has gone on way too long. So you're thinking what? 5, 10, 15, 20, 25, 30, over a half hour. So in my mind, it's either going to do it now, and I'm going to get pissed off because I had 20 contracts, and this thing might run to 150. There it goes. See? What'd I tell you? You got to set a time. It's either got to do it or not do it.
No, you just entered a resistance zone in ES. That's what that huge week was about. Triggered a lot of stops.
Oh, I'm still watching CNBC. That's a bunch of crap. This chick here, right there, I mean, she's a fox. And I'd love to kiss her lips, but I can't stand her personality. You know what I'm saying, Funk? You ever meet a chick like that? Is your wife around? I'm funny, ain't I? Oh, I see. That's what happens when you grow up during the disco era. Were you a disco duck? I guess you were a little too young for that.
Yeah, I didn't make it to that era.
Yeah. Anybody in here old enough to dance under the disco ball back in the 70s? No? Critical might have been back then. Florence might have been back then. I bet you Florence used to dance disco. Yeah, you're a little bit too early too, Critical. I'm older than you are. You were 12 and I was getting it on. Well, I got my third scalp in, and now we're going to start taking off. SPY next, 562.23. Okay. USA gasoline inventories 1.188 million barrels build versus, well, that don't make sense. Barrel draw prior. So we got to build on gas.
Here's another opportunity.
I'm back at 108. I didn't jump in it. I was gonna. Well, I still got.
I want to see a 63 tap on the gas on 1 minute. It's been doing it pretty regularly. Oh no.
There's a hammer on the 1 minute. Let's see what the SPY SPS says here.
Oh, it needs one good push.
Yeah, it had a hammer too. The pivot point is the 200 right now on the 1 minute.
Yeah, on ES, the
Yeah.
63 and the 200 are stacked on each other.
Yep. So my so if the 63 crosses the 200, it'd be like a golden cross, but you've got the 50 already crossed it on the 1 minute. So it is a golden cross, which means that 50 should hold support, or the 200, the 50 SMA. But I can't quite call it a golden cross because we have an SMA and EMA, but we bounced off the EMA once already, the 63. So this still looks very bullish. In other words.
That's basically what I use it for. The 63 and the 200, I use them the same way most people use the 250 in some cases.
Yeah.
I just use it. I use the 63 because they're doing it on a daily and 4-hour time frame. I'm trying to do it on a 15-minute time frame.
Yep. You can learn a lot by your moving averages by just watching them cross each other. Like we had the 9 over the 21 right here, EMAs. Look at that big bounce we had off that. Then it pulled back sharply, and that's where I called that trade out. And we run it up to the 200 and got out, or a little sooner. These were at 110, 108, now they're at 112. I'm a rock and roller too, S. But I used to clash with my rock and roll friends. I went to all the concerts back then. Kansas and Leonard Skinner and Def Leppard and REO. But I also did the disco stuff. Because it's just all the women. I mean, the rock and rollers didn't have no clue what they were missing out on. I tried to tell them. I got a picture of me getting ready to go to a disco club. Let me show it to you if I can find it. I need to type in disco on it so it'd be easy to find. You can tell I was all dressed up for it. It was back in 1976. No, damn it, Jim. I have bell bottoms. I'm sitting here rolling a joint next to a big bag of cocaine. Got a little angel there on the smoked up. My mom smoked cigarettes, so they were like brown, but that's me. And that was back in 1976, 77. Not there yet. Disco sucks. Him and I are going to go outside and have a little.
Oh, we just worked the green line to the downside.
I mean, we're going to have to go outside, Mr. Critical. What was that?
Yeah.
Speak English. Oh, really? Same to you. AR, you got your mic on. Or S, you got your mic on. Say that in English.
What you say about my mama?
What'd you say about my mama, yes?
This thing is going to give me my entry, damn it.
You said I don't have a chance with Jenny. Ah. I am very focused. I think I got good shit out of it. I'm gonna mute him. I got good shit out of it. Did you already mute him? I did. I love Asian people. The first girl I ever kissed was Asian. And the first girl I ever had a massage from was Asian. It cost me $200.
This year, Carvana is one of the most volatile things that you could see. I mean, it was down 99% from its highs at one point, and it has just surged back here. Now it's once again approaching its 52-week highs. You can see that on the way to that level there, those highs of 290, 284, the gap still has not quite been filled yet at that red line. So around 280 is a point many traders might have their eye on. We can also see that the high point after the gap down comes in near about 267 or so. So there's two very obvious potential resistance.
You didn't
points,
mute him. You just muted him so he could talk,
need to be
right?
surpassed for the continuation of this bullish
Funky.
trend here. But for now,
Go ahead and unmute him. I muted him. Oh, okay. I muted him then.
You muted him for a while. No, you didn't. Because I'm still hearing that.
Oh, really? Can everybody else hear him?
Yeah, I think there's a setting in Discord where you can just auto-mute the channel unless you give them permission to speak.
Okay, so mute soundboard? Or which one do I mute here?
I don't think it's a soundboard. I don't know. It may not be better at it than me. I just know that's the way they have it over.
Mute server. Mute server? Yeah. Which one do I mute? Room.
I don't think it would be channel-wide, like the room live setting.
Mute soundboard. Open the modular view. Mute, do I server mute?
Let me do a little research real quick.
Does anybody know? You got to be you, Jim. It's got to be you. But what do I click? Server mute?
So, to mute everyone in a Discord channel by default and only allow specific users to speak, you need to adjust the channel's permissions. You can do this by denying the everyone role of the speak permission in the channel.
I'm going to give it.
And manually granting it to specific users.
Let me see if anybody on YouTube knows.
So if you go to the Discord server.
Oh, shit.
And the channel.
Josh.
Right click on your room live and see if you have something that says channel settings. Oh shit, there's no 60-degree tab.
Well, I don't know what one to mute. Mute soundboard.
No. It's in the channel settings. You're the Discord server manager or admin.
User settings. App settings, user settings, voice and video.
Okay, here's your orb touch. That's the orb and the 200 right there. Damn. She's hitting hard. Hey, let her run.
Yeah, I did. I used the 3 dots. And I pressed mute, but y'all can still hear him.
Here's your dip, Jim.
I know it. Damn it.
That's the 21 on the 5.
I'm going to mute server.
Yeah, I'm gonna dip. Oh my god. Alright, our size episode here.
Let me get to SPX. I'm going to message him.
I'm looking at the 5700s. 230.
So we're at the 200 SMA right here. So if we're bullish, let me look at the SPX. Oh, I don't get that one up yet. So you ready? Lotto. Oh man, we got a lot of good choices here. The 5675s. At $4.90. We could go to the bottom of the orb, or we could hit right here. So I'm going to look at the 5675s. We got a 1, 2, 3, 4. We got a double bottom at 56.17. So let's go in one contract when I get ready here. This is on the 1 minute, so prepare. 56.75s. Lotto means same day. Is he still on? I hate to have to mute the server on him. I like this guy. He made a real nice compliment. He said I'm one of the best traders out there. Okay, get ready. I'm going to go in my first contract here at 4:30. 4:40. Now the other one, we're at the bottom of the orb. So I add the other one right here at 390. 370. I'm at 380. Now let's do this. Oh, shit. Wrong one. What a sell-off. Lifting U.S. equity futures. Well, they really took that to the bottom now. Can everybody hear that guy still? somebody say something that's got their mic on. I'm going to mute soundboard. If nobody says mute server. Server mute. Open in modular view. Click the three dots next to the name and press mute. I've done that. I'll just go ahead and unmute him here and see if I can hear him. No one else. I'm going to... Okay, I muted the server. He ain't responded. I muted him now. But I want to know if he can still hear me.
I can hear
You can't hear him though, right?
you.
Yeah. Are you unmuted him? Go ahead.
Sitting here in shock.
I need a good breakout right here.
Yeah, I can hear you now.
Now, it said patience paid off on that. I didn't think we'd have a pullback like that, but like I said, we're into pow. So, and what is that? Is that a megaphone that I called out right there? Yeah, see, that's the bottom of the megaphone. Look how beautiful that is. I mean, jeez. Come on, you bitch. So I got 2 contracts, and I'm going to get 2 more here. That'll give me 4. I think that's all I want to throw in this thing. There it is, 330. I was going to get 340. I got a total of 4. This is risky. So I got .70 average. I hope I hit the right server on him. I want to know if he's listening. So, anybody know how to speak Asian? I know how to cook 2 pan hot lai hully hully. I'll tell my little story about Mrs. Leong when I get done with this trade. It'll be peace in the valley for Bobo. Come on, Jimmy. Let's do it. I need some big bucks. Asian, can you hear me? I sent a private message to you. Come on now. Let's... It's a different S on Discord. I'm going to pump this out on SPX. I'll be a winner chicken dinner on this one. Come on, baby. It's either if you cost average down with me, you get out even if you want, but it's kind of risky. Now where's the megaphone? I'm fairly confident. Damn, I got a booger in my nose. Just feels like a bug crawling in there. God, darn it. The average trader would be scared to death right now, but I recognize that megaphone. We got two megaphones, actually. This one right here. And that big one. And we got another, well, no, that's not a megaphone. I'm gonna have me I think I'm gonna have a hamburger after this is done. We're getting ready to squeeze. I didn't want to remove that. Cancel left extension. 561167. I get out even right here if I want to get out of the trade, but I don't. I think we're going to bounce up some. Oh, there's a double bottom right here. This might be good. I think we're still good. We're going to find out. Get out now if you want. That's a triple bottom right here. Now, we're not losing much money on this dip, which is a good sign. Unless we're just a slow reaction on. I'm down $80 here. So I'm not. Now I'm down a little more. Shit. Come on, you. God. It's not a triple no more. It's a double. Okay. Down $200. Nancy, will you bring me a shot of vodka and a Valium?
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
I don't know what we missed, but I'm back to almost even again. Let me see if there's anything on the SPY. Oh, I could be looking at the news here. Let me look at the news, see if I see anything in their news. Who advised Trump on crypto? Press release, TNL megaphone pursues. Huh? So what time did this happen? This happened right at 9:47. Trump may lower China tariff 60%. Bill Ackman proposed gradual China tariff. Asia markets gain. I don't see nothing in here. Let me ask Vegas. Anybody have a reason for the drop? She's not ugly. She's beautiful. Let's turn on TV here and see what Schwab has to say.
On the opposing side of the spectrum, I'm actually going to take a bit of a bearish shot here.
Weeks, and to not change our guidance for the year.
Richard, we've been watching sort of this import surge that's happened in this country as a lot of sectors tried to get...
Break it.
So this is definitely not out of the
We're back at resistance.
I said it's a very
I could have scalped him 320s to 360.
Options to the downside.
Okay, so not out of the realm of possibility, but Rick, what do you see though when you look at the chart?
Caterpillar's been stuck for a few days. The past few sessions kind of blocked at our red line on our chart, which represents a key area, a repeated series of lows that price stopped at near about 325. You can see that also lines up with our orange 63-day exponential moving average. So this gives us a pretty convenient confluence of indicators to keep an eye on here. You can see that just recently as well, that was where the downfall began from the tariff-related news inflow here. We can see, though, that if we were to kind of talk a little bit more closely, 311 Pretty close to Don's strike price. That's our yellow 21-day exponential moving average. That would, a bit above that as well, be the level of our trend line too. So that would be kind of the point where traders might be looking for a break to the downside. Then the next potential support area is that green line, 307. That marks a notable low, August 5th, from which seemed like an exceptional low at the time for many stocks.
I might start lunch and hold on to this trade.
But 307, that would be another downside supportive area to watch if things start to go south.
Okay, 307, downside supportive area to watch. Don, final thoughts on Caterpillar before we move on to your final trade.
Yeah, once again, this one is, to me, it's somewhat less about Caterpillar. I think the S&P 500 is going to have a lot to do with this. So if we start seeing more sell-side,
This probably scared a lot of people right here.
Caterpillar is going to be accentuating some of those moves. But again, the volatility inside of Caterpillar. I mean, there's a lot of underlines you would think of.
I've got to run to the bank too.
Is just striking in some of the most recent moves, and again, well situated here.
Can't believe I haven't got a phone call yet. Knock on wood.
Level seems very viable.
Okay, and Don, let's talk about your final trade. You've got TLT on your list. That's that Treasury bond, the 20-year Treasury bond ETF. How much of this hinges on today's Fed moves?
100% of it. 100%. This is taking a shot in and around the Fed announcement. I mean, that's the intent of this next trade here on the TLT. So this is obviously
Also wanted to mention the front lobby lights.
This is, again, what I termed
that left side is out.
So
I tried to replace the bulbs.
Aware of some of the political situation right now involving Jerome Powell, and at this point, you know, you could look at like the PCE data and say like, oh, you can't cut rates. You could look at GDP and say, I can't make an argument, or jobs report, I can't make an argument for it. But I got to tell you, the uncertainty in tariffs alone is enough to make an argument, okay, for literally cuts to be coming. He's not going to cut today, but again, turning a little bit more dovish or
you might want to double check.
Is probably in those cards. So this trade is just buying a call. Why? You want to buy a call because you think interest rates might go back down. So I'm just going to go out and buy a May 9th call. Now, if you look at the calendar, that's just 2 days away. It's a Friday expiration. I'm just going to be buying the 87.50 call for around a 70-cent debit. So just taking a shot, if you will, to the upside on the idea that Jerome Powell goes double down dove.
Okay, that's the goal there, I suppose, with this trade, double down dove. All right, Rick, take us through what the chart looks like for TLT.
Downtrending off of the highs near 101.64, and recently we saw a bit of a false breakout above that trend line there that gave us a gap level to keep an eye on. 92.82 is the low point before we had our big gap down that brought us below our purple 252-day exponential moving average. Notice that during these low points, especially when we bottomed out near that 85 level, the green dashed line there was very heavy volume. You can see the volume spikes on our lower part of our chart there. Volume at least 50% above the 50-day simple moving average of volume here. But for now, price below our moving averages, below our trend line here. Not making new lows, and the level that Don picked, that's pretty close once again to our yellow 21-day EMA. So
I would have handled the tariff deal totally different, Trump.
Many people follow it. If we were to get some sort of push, the trend line that we're seeing here that lines up with another moving average, the 63-day EMA, that would be the next stop. So 89. Those are some notable upside levels, and like I said, the green line near 85, double bottom, that's a key one to watch as well.
All right, Don, I'll yield the floor back to you. Any final thoughts on TLT, Caterpillar, or Nike?
Yeah, the overall marketplace, one thing I would say is volatility is still far from dead. And I've been reiterating this week in and week out right here on Schwab TV is we're still in a volatility backwardation. Do not forget that. It looks quiet, it feels quiet. There's still instability, there's still low liquidity. And overall, that backwardation still screams duck and cover.
All right, that's Don Kaufman, Theo Trade, and our very own Rick Ducat, lead market technician here on Schwab Network. Thank you both. Coming up next, we're going to Spotlight Xometry. We're going to talk to the CEO of the company off the back of their latest earnings, the online AI-powered marketplace top earnings estimates. We'll be right back. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs.
Well, heck, we got a Head and Shoulders.
And track market trends with up-to-the-minute news and insights. Trade brilliantly.
Okay, this is where we got to pay attention to. We got a Head and Shoulders here. And I'm going to draw the trend line, and then we came back to the right shoulder the second time. So this is it. It has to move now and break out, or I'm just going to go ahead and get out of this trade when I get back to even. But I'm still in it. We've hit the left shoulder twice, and we've hit the right shoulder twice. So this is where it needs to go ahead and break this resistance level. 10-4. Come on, man.
A month basis.
See, I think we've consolidated too long. We need to do something.
Customers grew over 40% year over year. So we're seeing great growth overall. As you mentioned, 27% marketplace growth this last quarter, but we're seeing even faster growth with our large customers. And these are customers that have vast supply chains. They're dealing with hundreds, sometimes thousands of manufacturers. So the ability for them to come to the Xometry marketplace and consolidate that spend and make it easier, reduce friction, that's very compelling for them.
And then, Randy, I'm curious to know, obviously, given that you all are so digital focused, how important is cybersecurity and where are you all with, say, any certifications around that?
Yeah, it's super important. And, particularly, we're doing work in aerospace and defense, across lots of verticals, medical and industrial. But cybersecurity is critical, and we have some of the highest designations that are out there to protect the data security. And you hit on it. In today's world, traditional manufacturing, you didn't really think too much about giving your CAD files or your proprietary drawings to a single manufacturer. Now there's a lot of scrutiny on that, and Xometry is able to provide customers with that surety and that security that they're looking for to protect their IP. And we can do that digitally, and we've got an extensive set of measures and procedures in place to make sure that happens.
And then, Randy, given your guidance that you all expect to achieve, what are the underlying assumptions, especially since that indicates double-digit growth?
Yeah, so here's the good news. We're really not expecting any sort of pull forward from what's happening with the tariffs. It's just sort of business as usual. And we saw, last year we got it in 24. We said that 25 was going to be a year of stronger growth than we even had in 24. And 24 was a good year for growth. We thought even more growth in 25. And that's just because we've been investing in the technology, investing in the buyer and the supplier networks to remove friction for our customers, make it easier, give them more choices. And so they're just embracing that. And so our guidance is just reflective of the trends that we're seeing today and even being conservative and understanding where the macro is.
What potential risks do you see that could impact that guidance?
I think right now the trends seem very strong. Again, our guidance reflects what we're seeing in the business and the investments we've made in technology and in our networks and in our AI algorithms. So, I think we're feeling very good about it.
Feeling good.
What you want to leave us with off the back of your latest quarterly numbers?
No, we're just excited that more and more customers, over 71,000 are embracing our AI-powered marketplace. And clearly, again, this shift to the digital makes a lot of sense. You've seen it in so many other industries. It makes sense it's going to be happening in manufacturing as well.
All right. That's Randy Altshuler, CEO of Xometry. Thank you so much for joining us today off the back of their latest quarterly results. Coming up next, the disruptor, as George Sillis joins us to take a look at AMD after it topped earnings estimates. So take us through the numbers and give us an example trade. Plus, we've got a look at Supermicro. Those shares are under pressure. We'll have details next on Trading 360.
We got a megaphone at the bottom on the SPY. Okay, let me go start my burger. I love them things so much, I guess I gotta have another one. I have some soup, I could have it. Be a little bit more healthier, but I'm still in this trade. I'm going to hold on to it. As long as we stay here, I'm going to stay in it. I really don't want it to dip. And we got an inverse head and shoulders at the bottom on the SPY. And that's our third dip down on the SPY. So we got to break to 63 and get back to the VWAP. And I'm gonna hold on to it. I think we're gonna. Powell's not going to say anything bad. we could have a nice recovery into the pow-pow speech.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast
So I'm still holding
right
it.
for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out
You
there.
better do it.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Trade 360. I'm Diane King Hall live from the New York Stock Exchange with some breaking news. Shares of Google right now down 6%. This has to do with a potential pivot in the search universe. Apple may redesign Safari around AI search. Apple, this according to details coming out from the antitrust trial that's happening right now. DOJ's antitrust trial against Google is centers around this deal that makes essentially Google the default search engine in Safari. So Apple is actively exploring an overhaul of Safari, and that would integrate AI-powered search.
Well, that's the
engine.
200.
Essentially, again, signals this pivot away from this heavy reliance we've seen on Google's search. So it's a story that we're continuing to watch. Again, shares of Google falling under pressure right now off the back of this news coming out of the trial. It's an ongoing story we'll continue to follow.
We're
seeing
back
also
to
shares of
even.
Apple under some pressure now. For a look at some other stocks that are on the move, I want to bring in Caroline Wood, Senior Markets Correspondent here on Schwab Network. We're looking at Supermicro. It is under pressure. We kind of knew some of this was coming, but it feels like it's worse than we expected.
And that's clearly the case based on the stock reaction. Supermicro, one of the worst performers in the S&P 500, although Alphabet share is doing worse than Supermicro right now. Shares of Supermicro down about 5%, so still technically positive year to date, up about 2% year to date, but it's been a volatile. Really
God damn it, that's a 63.
About 60% over the past 1 year, down almost 70% from the highs. So, it's been a roller coaster for Supermicro shares, and it continues today following disappointing earnings, disappointing revenue, and also disappointing guidance as well. So if you want to run through the numbers, EPS of 31 cents, far short of what analysts were looking for. Well, actually, it depends on
some adjustments.
It depends on the estimates as well. If you look here, it could be a cent better than expected, but the estimates were really ranging there. Revenue of $4.6 billion. Technically came in line with some estimates, but I saw estimates as high as $5.4 billion. So it really depends on the ones that you're looking for. Guidance for the quarter was also shy of estimates. Q3 revenue of $4.6 billion. Analysts were looking for somewhere around $5 billion. CEO Charles Liang said some customers delayed making platform decisions in the quarter. Sounds like he expects those to come later in the year, in the June and September quarters, but he did warn that economic uncertainty and tariff impacts may have a short-term impact. So, the commentary a bit cautious. They did also cut their full year outlook now. Supermicro now expects fiscal 2025 revenue to be between $21.8 and $22.6 billion. That's down from prior estimates of $23.5 to $25 billion. And when you take a look at the analyst estimate there, it was around for $23.6 billion. So also fell short of analyst expectations on that front. We've seen several price target cuts in response. The majority of analysts were already on the sidelines. More than 50% have a hold rating on Supermicro. We've seen analysts from all over
We're at 380 now.
The sell and the buy cut their price targets. Take a look. Barclays reiterated an equal weight rating, but cut to 29 from 34, which is actually below where it's currently trading right now. And we expect investors to more closely scrutinize forward guidance for the June quarter. Supermicro guided revenue in line with
She's hiding that freckle.
at the midpoint. However, gross margin guide of 10% was below their expectations, with Supermicro citing conservatism, competition, and tariff impact.
Sorry, honey, but I got to mute you for a second. The SPX is at the 200 EMA. George, would you like to have a burger with me, buddy? Now see, we bounced off the right shoulder. We came back and touched it with a wick. Two wicks, actually. Okay, I know what I need right now. Oh, is that the F word? Dadgummit. Trader wage tariff news ahead of Fed decision, lifting the U.S. equities. I can't find any news that would cause the market to look like this. Just the Fed. The only thing I can think of. So I'm tempting to add 4 more here. Bring his price down a little bit better off these 3 black crows. I think that'd be a good idea. If it'd give me $3. If not, I'll just leave it alone. There it is. Come on. I can get 310 for sure. And see what the 3 black crows have to say here. That should have not dipped like that on that candle right there. It should have held. And it didn't give me 310. I didn't try, but I mean, I could have probably got it. We'll just wait. We're back at that support again for the 4th time now. This time it was a body. So 3 bodies, 1 wick. 2 wicks. 2 bodies, 2 wicks. There's 310. If I want it. Thinking about go get a haircut, but I got to go to the bank too. So I'm going to cook a hamburger. I can get to the bank here after close. I still got my burnt waffle. It's hard as rock. I don't want to break it. I'm going to paint it. Use that as a piece of art. I mean, this could be something. This thing could sell for hundreds of thousands of dollars. They did a banana. What did that banana sell for? Millions? Does anybody remember how much that banana sold for? Put a piece of tape over this waffle. Sold it for $5 million. Call it craffle art. Let's see how the lighting is on that. Man, this could really look nice if I paint it up right. You got to try to figure out what kind of colors I could sell it to the LGBTQEWAHF for D&I art object and put rainbow colors on it. This could be a new kind of dog biscuit. I might be onto something here. You could probably build a worm farm out of it. It might be great fertilizer. Charcoal waffles. Some of the best fertilizer in the world. I got some snake oil I'll sell you with it. We're back to 340. I'm not scared yet. I really think we hit a bottom here. When Powell comes out, we're going to get a beautiful run. Is anybody with me on this? Magnificent? You heard me. Put the poll. Put the poll up. Let's not get in a fight over politics. Put the poll up in here. Are we going to break out and hold this bottom, or are we going to sink below? Yes. Are we going to break out from the bottom here, or are we going to sink? up or down from here? And put, I think we're going to go up. Randy says up. I'm Sheba says up. I say up. Vegas says up. Okay, I got to think of a perfect song for right now. NVIDIA breaking out, according to Mannequin. So I'm going to come up with a song that I think is going to be fitting for right now. Oh, I got one. Stay a little longer. We're at the 200. I'm happy. I'm happy. 'cause I'm happy. I'm happy. Break the double top, baby. What you wanna do? Yeah. Happy, 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 happy. 'Cause I'm happy. This is the room. Happy. So I'm happy. Happy. I'm happy. 'Cause I'm happy. Oh, you feel like that's what you wanna do. Yeah. Yeah. I just don't want us fighting about politics because it can get pretty opinionated. And I'm in a good mood because I'm happy. But I use politics in my trading. Can you still hear me? You couldn't hear my music? Well, not now, but there was. Francisca, did you hear me singing happy, baby? Okay. Well, she loves it. She wrote heart instead of herd. That could be funny, right? My heart. See, you know what you just wrote? Your heart. You love me. Subliminally, you love me. This is very unprofessional. I'm really wanting this thing to break out, man, because I want to make some ton of money here. I should have bought him at $3 when we were down there. That would have been a heck of a deal. 310 and 370's what? I'd have 8 of them. I could have got in at 3 divided by 2 is 340. So I'd be up 8 times 30 right now. Or 8 times 40. 8 times 50. 340. No, that's right. Times 40. Come on, baby, break. $4. Yeah. We got to break the 200. You can do it. We're at 410, baby. Dang it. They just are making it hard for me. I could have got 410. Just tells you how strong that 200 is. Now that we did have a break, it kind of gives me a little bit of anchoring to be sure to add on. We're at the orb, Funky. What's your /ES saying? We're at the orb. Funky's gone. You didn't like my music? You had to go get a haircut? Okay. I was going to say, don't piss me off. Not say goodbye to me. I have to do some slapping. I see it now. No haircut for you.
Nothing for you.
Now I'm going to go cook my burger. I'm getting a little bit of, okay, this is what I'm thinking. This is where I usually freak out and sell. But the higher lows, called these 3 black crows right here, and we bounced off the 3 black crows and had 3 white soldiers. See what I'm saying right there? That's an inverted hammer, and that's a spinning top into 3 white soldiers. So it's kind of telling me that we could be a little bullish here. And the last of the last have exited the trade. And I called that 200 EMA out, but I held on. And I had a chance to add on at 310, and I didn't do it. Because if I did, I'd be up 40 times 8 right now. And for that, I'd almost sell it. But I'm going to wait. I'm going to do an experiment here. I don't have a lot invested in this trade. Or I could get out even. But I've been in this long enough, too long to sell it. So I'm going to go into the kitchen and cook my burger. Oh, there we're at 4 again. So I'm up $120. Let's break the 200 this time, bitch. Beast. Sorry, ladies. Sorry, Jesus. Jim, you must read a Bible verse. Hell, a place and condition of eternal punishment for those who reject Jesus. Francisca, did you enter the poll? We're at 410. Somewhere over the rainbow, way up high, land that I dream of, once in a lullaby. I want you to break right now, pretty please. We're at 420, just watch it squeeze. We're at 420, I'm up. If you had any common sense, you would break out before I made my hamburger. Mr. Hickey is up.
Yeah. That's what's keeping it there. There's uncertainty out there, and that all adds to the picture where we find ourselves. So, some good news on tariffs overnight, and so hopefully that starts coming. Remember, the market is not a patient vehicle, Tom, and waiting for these announcements, they're starting to get a bit frustrated.
No, they're not.
Petulant child. That's what the market is, Cap. We know that.
Yes.
But KG, when you look at the Fed meeting that's going to be on tap, that might be a big nothing burger this afternoon if we don't hear anything different from Fed Chair Powell than what he gave at the University of Chicago talk. We're not supposed to expect anything as far as rate movement. But then you start looking at those weekend talks, and I know it's just an icebreaker with China moving forward. China threw more stimulus into their economy overnight also. Maybe that's a little bit of a warning shot that they need to start talking, because if all these other countries are talking and negotiating with the U.S., as the administration states, China cannot be left behind, so they need to start negotiating too.
They need to start China will not be left behind, so I don't think that they're... China's not going to be left behind, guys. I'm sorry. Look, it's the second largest economy in the world, and if anything, they're probably going to re-establish ties with other countries outside of the United States here. It's a mutually beneficial relationship at some point. We'll have to figure out what that plan is going to be, but it's not like we're going to be able to isolate China for too much longer. And actually, if you kind of look at it from a retail standpoint, a lot of these retailers need to put in their holiday orders by like mid-June in order to get those shelves ready. So a deal has to be made in the next couple of weeks, in my opinion, in order for us not to have any type of supply disruptions here. China is doing these stimulus measures, definitely, and they're going to probably prop themselves up as much as they possibly can. And I'm glad that we are seeing maybe some talks over the weekend. And I think the initial expectation probably coming out of this is
did you mute yourself?
Maybe not a full elimination, but maybe moving in 145% down to say 50% or something that's more realistic. I think the market's going to be okay with that. I am kind of noticing though, when we get these announcements coming from the White House around these trade deals, the pops are not holding up as much. If you X out the Google News, we were still kind of pulling back here. So that's something to be mindful of. I'm not sure if it's going to be a sell the news type of an event. And if you look at the daily chart on the S&P 500 and you look at MACD, or you're looking at stochastics or what have you, CCI, it's flashing a little bit of a pullback signal here. So interesting developments over the weekend. But once again, I think at some point we might have a sell the news type of event. I'm not sure if full market's really prepared for that.
Yep. S&P 500 is still down about 8% from those all-time highs, but it's rallied back about 16% from those lows that we saw in early April. So we'll continue to watch that with the Fed.
4:30, baby.
Today. All right, guys, let's take a quick break. When we come back, we're going to talk earnings. We're going to talk ARM Holdings, the semiconductor.
Jimmy nailed it. Jimmy nailed it. It's starting to make sense now. I unmuted what's his name. but now he's gone. Always make sure your mics aren't on when you come in, unless you want to say something in English. Ain't that right, Rob? I got Rob muted. He should have been able to hear me. I want to break you out now. Let's go. Let's break out to the upside. I'm going in the kitchen to cook me a hangers. Crickets.
It was, they sold off about 30%. The stock is down. And, or off its highs.
This is tough.
It's interesting. Remember, they get paid by royalties.
Yeah.
So they have a little more resilient of a business model than people might think. But it's a volatile name. It's not cheap in terms of valuation. But boy, they are, everyone should understand that the fact that NVIDIA is trying desperately to buy them tells you all you need to know about ARM Holdings and how good their software is that they license out and get paid via royalties, Tom.
Yeah, KG, to Kevin's point here, they're sometimes called the host chip inside AI computing systems, traffic controller, for other AI chips, so it's warranted, right? But between licenses and royalties, that's how they make about 98%, 99%
I'll be back.
Of their revenue, but it's like a needed commodity at this point.
Yeah, it's a needed commodity, but very volatile when you're looking at revenue flows. And I think last quarter really kind of exemplified that and their outlook moving forward. And so Kev's right. I mean, when you're kind of looking at the structure, they're around the design of these chips and these new products being brought to market here. But they are going to have some risk when it comes to tariffs. If we do see a little bit of a slowdown, do you also see the product cycles for a lot of these companies that leverage of their designs? Do you actually see them starting to expand out the R&D and trying to implement some of these these new products that ARM's actually producing here? And I think that's really a big question mark. And it's just once again, it's a very volatile company when it comes to those royalties, as well as that subscription revenue. You kind of call it subscription revenue, if you will. So the stock did see a decent little pullback here, but once again, this is one of the biggest wild cards when it comes to their guidance and the commentary moving forward, because it seems like every quarter is something new for this company, either negative or even positive for them. It's never a smooth trajectory on a quarter-over-quarter basis.
Yeah, and they do have those complaints with Qualcomm also, Qualcomm calling them anti-competitive. So that battle still continues, but the option market pricing it about a plus or minus $10 move either way, and the shares on this one going into results. KG with the stock trading about 120. How do you want to look at this one from an example trade?
Yeah, with the IV and the options premium, it's hard to sell premium both on the top or bottom here through head of direction. So I'm actually going to be going with a long put vertical spread here, a bearish call for this stock. Looking at the May 9th, 120, 110, put vertical going long the 120, selling the 110. Doing this for a debit of $3.70. Max loss on this trade at $370 with a break-even point of $116.30. Max profit up to $630, and that's if the stock is below 110 at the time of expiration. So taking a directional position for ARM, just given the volatility and the uncertainty when it comes to the markets that they serve, and also having this as risk-defying. So if you do have a surprise to the upside, you could actually see, you can manage the trade.
Yep. All right. Really short-term positioning here on this example trade KG brought for us. Let's walk through it. May 9th, weekly options, just 2 days to expiration. Buying that at the money 120 strike put, selling, offset some of the risks on this bearish put purchase. Sell the 110 strike put, $10 wide, paying $370. As KG mentioned, there's your risk, $370. And that break even, 116.30. That's just less than 3% below the current share price. So Kevin, the break even within that one standard deviation move on this, bearish example.
I didn't get the second strike, Tom, because our sound went out for a second. I know you bought the 120 put. Did he sell the 115?
No, but buying the 120 put, selling the 110 put for $370 debit.
Okay, so a $10 put vertical. Now, this is something we talk about a lot on this show, right? This needs a move to be successful, but if you're right and you get that move, you're a multiple winner on this. The opposite of the short put vertical, where the probabilities might be high, but the risk out is bigger on the risk side. So, yeah, this is one that you need a move for this to be profitable. You can't stay here at 120, but if you get that move down to 110, this is a multiple winner, Tom.
Yeah, KG, you mentioned as far as trade management on something like this goes, you've only got a couple days until expiration on this one. It's a pure earnings type play, but it does give you a little bit of flexibility if you get the move that you want immediately, and maybe the market's open where you can maybe offset some of those risks, or close a portion of this trade, right?
Yeah, definitely. Now, obviously, this is going to expire, on this Friday, so you have to be able to manage it correctly. But if you are profitable and you do believe that maybe the stock is going to be stalled out at around 115 or even 112 or so, you can manage the trade as you see fit. You got to give Kev props here. He gets one leg, you tell him the other leg, he's calculating it, and he knows exactly what's happening with this trade here. So that's the old floor mentality, and this is one that you got to have a move, but once again, it's a little bit more risk-defying. If you kind of look at the wings and try to sell premium, Kevin and Tom, there's not a lot of juice there to make the risk-reward something that's attractive right now. So it seems like you have to go directionally long in order to really get a decent risk-reward profile, at least for right now, how the market's pricing this out.
Yeah, you bring up a good point, I think, because typically when we're talking about going into earnings, we expect those IV percentile ranks to be at or near 52-week highs. And this one, the IV percentile ranks under 40% at this point. And that the reason is because of the fact that we had so much implied volatility over the month of April as everything was selling off. So IV levels don't look maybe as big as they normally do during a normal earnings cycle. Yeah, this one, you know, when implied volatility levels are down, this is going to cost you less. You're going to have less risk on a trade like this. So that's a good key point to bring up. All right, great stuff. As always, thanks to Kevin Green, Senior Markets Correspondent here on the network, joining us. But coming up after the break, we're going to be joined by Landon Swan from Lightfolio for a look at sentiment data in Shopify, the e-commerce fintech stock, up over 50% over the last 12 months into their earnings tomorrow morning. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Dang, it's pulling back more. It's not cool.
What's up, Carl Nation? It's your number one broker with the best full service. What?
I had, you know, the more I think about it, I wish I'd have bought that 390 there at 310. And I'd have got out of that at 430 at least. It hit 440. And I kind of wish I'd have sold it there, but then it didn't hold them crows. I'm almost back to even again. I'm going to set an alert here, just in case. If it hits that, I'll buy more. Finally got one. Always clean janitorial, may I help you? This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. You're now being recorded on YouTube. May I help you? That's what I thought. Take me off your call list. That's one today. Maybe they're getting a message. Let's see if I get another one here. I'm back to even. I'm still going to hold this. I count to 4. I've got to make a little bit more. It's real choppy. prison guys up.
It's really important to see where that
Shop.
comes in. Now, there's been, some questions about the minimus exemption. If you're bringing in, I think it's $800 or less from China, then there's no tariff.
Expansion patterns all day long.
Big for Shopify and its clients. So hopefully for the investors, that does come into effect. But I think it's going to be really important on the call to hear what do they say about tariffs? How are they affecting them so far? And what do they see moving forward? I will tell you, though, that this company has executed extremely well. We're very bullish on them. And we believe that this pullback is a good buying opportunity, even though, again, they're up, they're 2x since August, but they're down 30%. So I've decided to see that as a buying opportunity.
Yeah, Landon, when you look at this, it's the ease of use, right? Because if you buy something, you have a Shopify account, it immediately just fills everything in for you immediately. But when you look at the competitive landscape within here, it seems like Shopify is outperforming Amazon, some of these other names within the space. How are they doing that? Is it just adoption that people just can't get off that platform when you're going to purchase something again and it just pops up and it fills in everything? Or is it that they're actually expanding their footprint more and they have more of a base to go off of than maybe some of the bigger players in this space?
I think it's both. So they're unique. I mean, if you compare them to Amazon, you can pretty much get anything normal at Amazon. Like most products, you can go to Amazon and get it. Obviously, when you log into Amazon, they know where you live, they know how to ship it, they know your payment method. It's very simple checkout. Shopify is competing by going around that, right? Instead of creating this giant website where you can get anything, they're saying, you know what, there are millions of websites out there that sell all kinds of products, and they're competing against Amazon. Let's help them. Let's integrate a really seamless, fast, simple checkout process, Shop Pay, and that way that profile that you have with Shopify follows you from merchant A to merchant B to merchant C. Even though those merchants have no relationship with each other, Shopify is the hub there. And so for people that shop on, I'll say random websites, non-Amazon websites, it makes the checkout experience like Amazon. So now, instead of saying, as a consumer, instead of saying, I need to go to Amazon because I'll know I'll get it in a day or two, and it's a quick checkout and it's simple, now they can say, I'll go wherever I want to get the product that I want, and maybe some of the products on other websites are actually better or better priced than Amazon, and it's still a very easy experience. So now merchants are competing with Amazon on a quality and price basis, and they're level playing field when it comes to accessibility and ease of use and convenience. So Amazon has kind of lost that edge because of what Shopify has done, and I think that's why they're winning.
Yeah, and you know what, Landon, I think the big thing and the big unknown out there is the impact of tariffs. Now, a lot of the results from this quarter aren't going to have anything to do with tariffs. So is this going to be more of a guidance looking forward type of quarter for this company where they could just come out and say, hey, we're pulling fiscal year 25 guidance moving forward just because we don't know the impact? And, you mentioned that de minimis. That's going away. I mean, thank goodness it's going away, but was that a big component within maybe some of the results previously?
Yeah, so this is where I'm a little bit bummed, right? I mean, with Folio data, we have a huge edge on the quarter that's being reported because we saw the website business, we saw the app usage. We're pretty sure that they had a great quarter. However, I think that when it comes to the investors' reaction to this earnings report, yes, they're very interested to see how well they've done this quarter, but more than anything, they want to hear the CEO talk about how they expect tariffs to impact the future of the growth. That's it. And so, if they slightly beat this quarter, but he says tariffs are going to kill us, then the quarter beat doesn't matter at all. Our data is going off of what we know or what our data says is a great quarter. But really, it's going to come down to that unknown as to how this is impacting their customers, the merchants, and of course the customers that shop at the merchants, the second level customers. So that's really, really important. All we can do going into it is look at our data and know whether or not they had or hint at whether or not they had a great quarter. We believe they have had a great quarter, but yeah, it's tricky. I mean, at least you know, you've got that tariffs kind of hanging out there. That conversation has to happen. It's all about the guidance. But at least we have going into it that we're pretty sure that they had a great quarter. It's better that they had a bad quarter and have to spin it with tariff talk. So at least we got that small edge going into it. But yeah, it's really going to come down to what they say as far as the impact of all of this going forward on their merchants.
Yeah. What's your earnings score? You guys are pretty bullish on this one, right?
Yeah, we got a plus 54 going into this, so pretty bullish, and we've been bullish for a while, right? I mean, again, this has been one of our core companies that we've been pounding the table with our hedge fund clients for quite a while. But yeah, going into this trade, we're plus 54, looking for ways to minimize downside risk, you know, take a safe bet, if you will, have some controlled risk and make some money if they do pop. And of course, we'll be listening to see what they talk about with tariffs, but we're expecting good numbers.
All right, setting me up for a home run here on our example trade. Great stuff as always, Landon. Have a good day. Thanks. That's Landon Swan, co-founder of Lifefolio, breaking down the data here on Shopify. They're pretty bullish on it, but as we mentioned, stock's down about 26% from those multi-year highs that we hit in February. So it's pulled back quite a bit at this point. So let's get into an example trade here in Shopify. Option market pricing in about a plus or minus $10 move either way in the shares. And if you've looked at over this stock over the last year or so, the past earnings events have been pretty volatile, whether to the upside or the downside. So you got to keep that in mind and maybe staying risk defined, maybe in the wheelhouse there. But looking at Shopify, going out to the main site, which is just 2 days to expiration, really short term.
460.
Event tomorrow morning. We're going to sell it out of the money, neutral to bullish put vertical. And we're selling the May 9th weekly 85 strike put. And because we want to stay risk defined, we're going to buy the 80 strike put. So a short $5 wide, neutral to bullish put vertical. You're going to collect roughly about 90-cent credit, right? That's what you can make. $90 per spread on this trade. You've got quite a bit of risk, right? $410 per spread on it, below $80 a share. Now, if you collect 90 cents, that's what you can make. Takes your break even down to $84.10. Now, when you start looking at trade-offs on strategies like this, like why am I only collecting 90 cents and I've got $410? Then you start looking at probabilities of success, right? You can profit in this strategy if the stock goes higher, stock stays where it is. Stock goes lower but remains above 84.10. You can be profitable on this short-term position. But on that 85 strike put, you've got a 76% probability of that strike finishing out of the money, which is what you want. You want that higher probability of success, and 76% is pretty good on this one. Now, it doesn't mean you don't have any risk on it. As I mentioned, you got $410 on risk if this thing goes lower. But that 85 strike put is about that one standard deviation that the option market's pricing in at this point to the downside. So conservative, neutral to bullish, short $5 put vertical as an example here. If you think the stock's going to go higher, stay where it is, or go lower, but remain above that 85 strike that you sold in this strategy. So good look at that, taking advantage of the higher implied volatility levels and the higher probability of success on that example trade. Now, let's take another quick break. When we come back, we're going to talk more earnings. AppLovin, they report the ad tech stock is up over 200% over the last 12 months into their earnings after the close. Stick around.
Yeah. How about I just have this gut feeling we're going to go a lot higher, but I don't know. This is a spot to get out if you're in it. You're up $100 a contract. I don't mess around, you understand? Jim, why do you eat so many hamburgers? Because I love hamburgers. It's the most healthiest hamburger that you'll ever eat your whole entire life. $4.80. That Washboardjim's an incredible trader. That is correct. Did you see that magnificent? I eat burgers. $4.90. Time to take profit if you want. $5. $5. What time is it? Yeah, we still got a little bit of time. We're almost big profit here. Just hit my resistance. Them things are so good. $560, baby. Up $200 a contract. $570. Woo! $200 a contract. Yay! What do you think about that, Randy? Are we best friends? I'll make you best man at Francesca's and I wedding. No regrets. I'm going to buy the dip. Don't need no slip, because I'm going to buy the dip. Oh man, I feel good. We hit the top of the orb. We broke the top of the orb. We broke the top of the orb. Oh, excuse me. Those are some of the best burping hamburgers I ever had in my life. I usually don't burp, but these hamburgers, I do. And the aroma is just wonderful. Oh, screech. That was bad. It's the most wonderful burger of the year. It's called a Kraffle burger. Protein with cottage cheese. and 5 bread and butter pickles. We pulled back to the orb. We're consolidating above the orb. I think we're going to go higher, Randy. I might buy another contract, my dear. They're at 550. 540. You won't have as many as you had before, but I don't care. She just slammed the door. We're holding up to 9. 5:30. Jenny, we had a debate in the room. You're going to turn me down.
I will say that while we know Jerome Powell to typically be somewhat of a friend, we could see at different tones. We'll have to see which Jerome Powell we get today, of course. But for the next hour, we'll step away from some of that conversation. We will focus in on some of these earnings we got out this morning and yesterday after the close. We'll also be diving into previews of Carvana and AppLovin, talk about 2 names that are no stranger to volatility as those charts are ridiculous. So we'll dive into the technicals ahead of those reports due out this afternoon. Also have Shopify tomorrow morning to look at. We see shares modestly higher today, just over 1%. So Shopify.
I want to have a hot chocolate now.
Some strength. We'll also discuss the latest with Apple and Google's AI regarding some of their various web browsers, as well as the outlook for ride-sharing delivery.
That hamburger's so good, I want to lick the plate.
Lyft tomorrow morning. And we'll close things out with a Fed preview with George Tillis. So a jam-packed show for today.
As it usually is, and I'm excited to get George's thoughts on what the Fed might be. But before that, we got plenty of names to get through. And the first one on our list is Disney. This, to me, is the mover of the day.
It is. I mean, this name pretty much at this point 2-month highs, a 11% move, and honestly, I haven't looked in the last 10 or so minutes, so it's only continued to accelerate here. But stock soaring after the company did beat the earnings targets, as well as unveiled this plan to build a new theme park in Abu Dhabi. We did see revenue for their experiences segment, which does include those theme parks, rose 6% from a year ago, beating street forecasts. Also, what I think is assuring about this is we're seeing this whole sentiment regarding travel and vacation and consumer spend really take it on the chin, frankly, as of the last couple of months. But this sentiment was so different from what we've heard from various airlines and hotels. So I think that was encouraging in itself. Though, when we look at the Abu Dhabi plan, this would be 7th park around the world overall. It's first in the Middle East. They did groundbreaking in terms of a new frontier for their theme park development, and say they're just beginning to scratch the surface when it comes to Middle East. So I think what has been hugely encouraging is, Bob Iger even mentioned, you look at some of their parks, say in China or in France, and they've done quite well, not only in attendance, but also in building that brand loyalty to some of their streaming and to their films. So I think that that's the goal, to now pioneer this frontier in the Middle East, and Abu Dhabi is a place I would love to go first of all, but I can imagine it will be top of the line because they've already said state-of-the-art technology will be used to build this new park. No timeline given, but that's, I think, a huge part of the momentum today.
Sounds like a name that's playing a little bit of offense in what they keep being described by the street as a defensive, posture with all this tariff and consumer pullback. Nothing that Disney said makes you think consumer pullback. Better than expected guidance for cash flow from operations. Better than expected guidance on EPS. And then you have these kind of ancillary businesses that are important to the long-term success, things like sports, things like Disney Plus that showed signs of strength alongside the core parks business. this was a situation where I think the street was just a little bit more pessimistic than reality, and Disney's numbers are pretty strong, and they're being rewarded for it. Let's talk Uber. Uber was down a lot more than it is right now, closer to, let's call it 7% at the worst of it. I would almost call this unchanged now, down 2%. This is a nice little comeback for Uber intraday.
I know, 2% feels like nothing given, of course, where we were set to open this morning on what was a pretty mixed first quarter report from the company. Revenue rose 14%, that figure did miss. Earnings did top expectations, but gross bookings rose 14%. However, that figure at $42.8 billion did also slightly miss what the street had been expecting. Trips increased 18%, and we did see the ride-hailing service guided for gross bookings in the second quarter between around $45.75 billion and $47.25 billion, on adjusted EBITDA of around $2 to $2.12 billion. One day before the report, they did announce acquiring this 85% controlling stake in an online meal and grocery delivery service that's based in Turkey. The roughly $700 million deal, though, that does come at a time when they're trying to continue to expand in the food delivery market. And we've heard pretty stellar results from at least DoorDash. It's closely related here, but both names not seeing
$5.60.
because both of them are spending right now to build. And
we held the 9,
which is necessary to continue to grow, is being met with some resistance in terms of the price, but definitely not a sign of non-healthy or a lack of growth story from Uber.
Oh, definitely not. Both mobility and delivery are still growing at a healthy double-digit percentage, sort of the mid-teens. And if anything, I would argue the delivery was the brighter spot. So we think of Uber as mobility first, but it's kind of split pretty equal now. 21.1, 20.3. When you look at sort of the billions in delivery from those two gross bookings, pretty equal. Freight still kind of the weak spot, but it's so much smaller that you don't really put a lot of attention there. But I look at this and I thought this was an impressive report from Uber. That said, wasn't impressive enough. The street seems to be toying with that and wrestling with it a little bit, because this stock's up 30% over the last 3 months. It's up 28 of that 30% in the last month alone, and it's back towards its highs. So you can understand how the bar wasn't really set for an in-line-ish report, and I would argue this was sort of in-line-ish, but not necessarily anything here that's super worrisome either, and I think that's why the dip was bought. Next one here on our list is AMD. AMD is a tough one, right? Because the street hasn't been as positive about this space recently, and it certainly hasn't been as positive about AMD for what seems like over a year now. And this is a really, really quiet response. So, and we looked at both Uber and AMD for example trades. Example trade in Uber wouldn't have worked, right? We were looking for an upside move. It's down a little bit. But we were looking for a move to $100 exactly, and I just happened to look. AMD is $99.35. That's pretty much exactly what that example trade was looking for.
Yeah, that was a pretty solid example trade. So kudos to you there.
Wonderful time of the year.
Where a lot of that pressure was bought. This unfortunately rallied initially 7%, and a lot of that momentum was then sold because, well, we are still higher today, not the same extent that we were. And much of this was, we saw, again, a 7% pop, and then we saw shares lose a lot of that momentum after their CFO did say export controls will continue to cost the company. They said $1.5 billion in revenue this year. For the March quarter, revenue in their data center segment, though, rose by 57%. And in April, we know that they disclosed they could take a charge of up to $800 million for inventory and purchase commitments that are related to these tighter export control license restrictions to China. So this was expected. I think that the huge thing about AMD was they offered a pretty robust outlook for the sales range between around 7.4 at the midpoint. Street had been expecting around 7.2 billion at the midpoint. So better than expected guidance is a huge, huge upside for enabling AMD, which frankly earnings have not been kind to this stock.
Yeah, and it has, changed the mix a little bit from like a 3-to-1 overseas revenue to closer to 2-to-1 now. But it's still 2 to every 1 overseas as of the end of last year for revenue. So a little bit more exposed than some of its peers, which...
That would be a surprise, Randy. Because none of these fat cats think he's going to cut it. And then but if he does it, they're going to say he's political. And I don't know if he wants that. I don't know if he wants that. If he waits till the next quarter, I can see it happening. I'm going to get my chocolate. It's the most wonderful time of the year. We broke the orb. And we're going to check something out. Disney. Yeah, we can go up higher on SPX. Might buy the dip. For sure. So right now I'm having my hot chocolate. There's not a thing you can do about it. Hope I didn't use a dirty spoon. That really pissed me off. Oh my gosh. Raw sugar is still sugar, but it's raw. Why is it brown? Josh. It's not bleached? Oh. You gotta spoil everything. I thought I was onto something. I'm tempted to put a raw sugar pack in my chocolate. They're at $5.90. They're at $6. Randy. It's the most wonderful time of the year. I think that song's going to stick in your head. We're working on a double top. We got a Head and Shoulders. We just hit the Head and Shoulder line. I think I'm going to clean this up. Jim, how many times did you trade that today? Well, 3, the SPX. I think I'm going to clean up the chart. Hey, Sarah, you gotta come. Hey, Sarah, you gotta come over and listen to this guy in this chat room. He's got a real sexy voice, and he's so beautiful. And I want to give him an A, but I'm kind of shy right now. I run all the ladies off. Magnificent. except Michelle. I run all the ladies off, Michelle. It's not the singing. How dare you? Your hubby thinks I'm funny. Him and I get along real good. We're at the shoulder line of the inverse head and shoulders. Oh, I got to show you a picture that I took the other day. And after I took it, I realized something about it. Randy, you'll like this one. It's so funny. I thought it was the funniest thing. So I'm sitting here messaging my sister. And I said, damn it, I knew it couldn't last forever. And I'm going to show you this picture here that I took of the sky. I've been bitching about the rain that we've had. I mean, just consistent rain. So I looked up in the sky and I took this picture of the clouds. And then when I looked at it, I said, what? I said, it can't be. And here's the picture. I'm getting ready to buy this here. This frickin', I was making, I said, look at that face. I took the picture, I was just looking at the clouds, and once I looked at it, I said, man, that's a face looking down at me, laughing at me. So what the heck is this? Don't you think that's kind of funny? Okay, we're getting down here. Definitely looks creepy. Let's see if we can get this at the 63. We've got a support line right here. Randy, did you sell them? Get ready. Prepare ye in the name of the Lord. Right there. $4.30. I'm going to raise them up. I'm going to get some volume here. So I'm going to the 56.60s. And I'm going to buy one contract. Prepare ye in the name of the Lord. So this is what I do. I want to look for the call I want to get in, and I want to look for the put that I want to buy. And right now, it would be the 55.85s. So I make a decision which one I want to buy during the POW speech. That'll be the 56.60 call and the 55.85 put. And I got the call at $7. And now we're just hitting the top of the orb. And I should sell it here at $7.50. $7.70. Okay, right about now. $7.80. And I'm going to go over $7.90, and I'm going to go over to the put. There's $8. $8.10. That's $110, so I'm going to sell it here at $8.10. $8.60. Shit. How dare you? And I'm going to get that, clean that up, and go straight to the put. And the put's at $6. So the SPX put, the 55.85 Lotto at $6. This is risky, the put. It's the most wonderful trade of the year. La 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 la. Who gets the A plus, Joshua? You can't till your garden until the weekend. Everybody. I object. I object. Hickory dickory dock, the mouse ran up the clock. We need you to drop as we go into FOMAC here. You can do it. Oh, is he speaking yet? Oh, there's Caroline. I'm glad you're hiding that freckle. Because I can't concentrate when you show that freckle.
Analysts rated as buy. So Wall Street is bullish. Investors seem upbeat heading into the report. As you
I
can
am.
see, shares higher today, off earlier highs, but still up about 1.6%.
Tried to tell you.
What Shopify has to say.
You
about,
wouldn't listen.
Obviously,
They're now at
the
690.
e-commerce world, but also specifically about tariffs.
They're now at 710. Okay, here you take profit.
It's overseas numbers look like, because I do feel like that has
You
been
take profit.
one of the mixed pictures. Some companies, it actually offers a lifeboat to
They can drop more.
In other companies, we haven't really seen that read through, so we'll be definitely watching these numbers, of course, as they
It's the
release.
most wonderful time. Give me 710.
Tomorrow, once we get that report, but we so appreciate it.
There it is.
Caroline
Come on.
Woods, of course, senior markets correspondent for the network, and so as we look at this name, Alex, this is one that for so long was like, as Caroline mentioned,
There it is.
some
Got
sort
it.
of analysts do have a buy or buy equal rating. I feel like this was a Wall Street darling for quite some time. Hasn't really been the same extent of, I'd say, maybe like a leader, or maybe I just don't see it as much in terms of like everything else going on in the market. But Shopify does give a great read on so many key aspects of what the consumer is facing, as well as like what we're seeing macro.
Oh, yeah.
Yeah, it filled a really, really important role in that kind of post-pandemic.
Did you all see that?
But so much growth was pulled forward, so much demand was pulled forward, and it's almost like you can see the natural transition where if you're trying to build an e-commerce, market, you maybe start with something small like an Etsy, you work your way to a Shopify backed, website, and then eventually you could go on beyond that. But when I look at a name like Shopify, I have to wonder, are companies that are building their websites with a Shopify brand, they're more sort of small to medium-sized enterprises, are these going to be the ones that are the more impacted by kind of trade uncertainty, as their supply chains might not be as robust as a company like Apple that can kind of do things, move things around. Shift has the scale and billions of dollars of cash. Well, if you're a upstart company, that's sourced things from a particular place, you might not have the contacts and the resources and the preparations in place to make those quick pivots. And so I do wonder if that's going to influence their ability to keep prices at certain levels, and that'll increase that uncertainty and bring down gross merchandise volume on a platform like Shopify. So I looked at a bearish strategy here, Jenny, but I think that this is going to be one where even if you don't trade it, you should tune in, because I think we're going to get a pretty good read on generally this type of business and how they're making changes.
Yeah, and that's also a really good point as well. And I think what will be an interesting read for them, we still have a good portion of tech.
750.
Reported yet. So Shopify, are they able to fare this tech volatility storm we've seen post earnings better than some of their peers? We will find out tomorrow morning. But when we look at this name, of course, for trading purposes, for example wise, what are you thinking?
Yeah, like I said, it's a bearish strategy, and so again, I think that there's a wide variety of outcomes that could happen. But if you're kind of a buyer of that sort of more pessimistic outlook that we could get from a company like Shopify, do you see guidance pulled, something like that happen in a name like this? Does that lead to a sell-off? If it does, this is a name that could capitalize, or this is an example that could capitalize on that with Shopify's earnings here due out. I looked at an 85 put calendar, selling Friday, buying next Friday. So it's the May 9th, May 16th, 85 put calendar, 60-cent debit. So most importantly, this is risk defined and relatively, compared to some of the other examples that we look at on a daily basis, a smaller notional value at risk. And so limited to that $60, but you need some market help. Another way of saying that is you got to be right. You need that move to be lower, and you need that move to be close to 85 by the end of the week for this one to work out. And that's why you see that risk profile looks sort of like a mountain. It peaks out at the strike, but then it also, if it moves too far to the downside, actually can start working against you even in a bearish move. So there's the downside of this type of strategy, but the upside being, of course, if you're right, you can make some money, but beyond that, if you're wrong, you're limited to that debit spent, which in this case is 60 cents or $60 per spread.
Yeah, and I think well put here. And Shopify today up about 1.5%, so still seeing some enthusiasm as it does feel like we're seeing some degree of markets waning a bit from the highs we saw to kick off the show. We'll leave it there though for FOMO. Now coming up next, time to discuss Alphabet. Stock is sinking in mid-session here. We're down now 7.6%. On some news of an Apple testimony about its falling search queries. We'll also be discussing the ride-sharing space, recapping Uber as well as DoorDash, and looking ahead to Lyft earnings out tomorrow morning.
Here we go. God darn it. Pretty much 840. Woo! Nailed it. Looking at calls again.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York
Nicole.
Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free.
5760s at 650.
Welcome back to Next Gen Investing. It's now time to discuss Alphabet here, which in real time is seeing some selling that's only steepening as we discuss here, looking at the stock in real time. So now Alphabet shares down 7.8% on some search-related news regarding an Apple testimony. Joining us now to shed some color on the story is Dan King Hall, host of Morning Movers. We decided a necessary break from all of the tariff coverage you've been giving us to talk, of course, the ongoing drama with Alphabet and its various search engines. So walk us through the story, Dan.
Talk about pivot. I mean, right now we're seeing shares of Alphabet, Google under pressure, as you mentioned, down nearly 8% at the moment. This comes on news coming from the trial, the antitrust trial, news that Apple actively exploring an overhaul of Safari to integrate AI-powered search engines. And this essentially suggests a pivot away from its heavy reliance on Google search. And coming up in the trial was testimony that there was already AI taking market share from traditional search. So this discussion came up in the antitrust trial that's against Google. It's centered around that multi-billion-dollar deal that essentially makes Google the default search engine for Safari.
We will rock you.
Now, what came up in the trial is news that the search traffic had dropped for the first time.
Summer's here, and with the new Toyota, you can go from here all the way to here. Ain't it?
Tiny bubbles in the wine make me happy, make me money all the time. Tiny bubbles make me warm all over. The reason I'm gonna love you till the end of time.
So here's to the golden moon, and here's to the silver spoon, and mostly here's to me and me.
Tiny bubble in the wine, make me happy, make me feel fine. Tiny bubble, make me warm all over. Even now I'm gonna love you till the end of time. Me, Mickey Mocky, Mickey Loco. Tiny bubbles make me warm all over. The feeling that I'm gonna love you till the end of time. Where's my kiss, Richard? I'm gonna love you, love you. End of time. Thank you very much. Thank you, thank you, thank you. Might have to put a stop in this if this doesn't want to bounce. He got to 690, but that wasn't enough. Because we can drop to the top of the orb. Did you like that, Chris? That puts a smile on my face. Randy. Shame on you. Bad, bad boy. No treats for you tonight. Because it's not bleached. Mannequin says the same thing too. So YouTube, did you like that song? Tell me yes. Come on, calls. You are now back to 670. Let's have a breakout. I kind of want to go back and listen to myself. Robert loved it. I'm a good singer, Jim. Are you saying that just to make me happy? So I won't kick you out? Oh, boy. I think franchise would let me sing to his army buddies. There we go. We're at 680. Give me a little more.
Bodes well for its smaller peer that is trying so hard to continue to compete.
Yeah, I tend to agree with you, Alex. What you want to keep in mind with Lyft is they remain the laggard and the second player in the rideshare market. They may actually end up being more valuable as a takeout target than a standalone platform. Now, my fair value is 15, and I know it trades below that, and perhaps this suggests some deep value potential, but it's a really risky setup. I don't think they have an economic moat. They don't have the core user base growth. In fact, Uber added the equivalent of almost the entire Lyft platform just last year. And engagement growth isn't there. They have half the engagement of Uber. The bull case here, like I was alluding to,
$6.80.
It's if someone like Zoox, which is Amazon's
There's $6.90
subsidiary, maybe pays a premium, a 20%, 30% premium for them. I think that's the surest way to, if you're a shareholder, get some value in return for the shares you hold. But the bear case here, and I think we're
Who is this guy?
is a negative feedback loop that you start to see with network affect economies. So if there's less me and you, less demand on the platform, that creates a lower incentive for supply, which are your drivers, to be on the platform. And if there's less supply, that should translate into longer wait times. With longer wait times, you should see depreciating performance.
I mean, he's a good talker, that's for sure. Not as good as me.
Yeah, and I mean, even I will say, even just from a consumer standpoint, I noticed it. I'm now definitely more leaning towards the Uber loyal side of things because Lyft just frankly takes too long. It's gotten more expensive. So that definitely drives a huge portion of just even my own habits. So great insight here, especially ahead of those Lyft results.
$6.90.
We so appreciate you.
There it is, Randy.
Today. Breaking down
Blink it.
two names that actually, DoorDash and Uber at least, have really outperformed.
$7.10.
Rally of Morningstar. But now coming up next, it's time to discuss the Fed, of course, as we are about 10 minutes away from that critical Fed announcement. George Tillis will have more color on what we can expect from Jerome Powell coming up next.
So let's talk about this for a second. 720. So Jimmy spotted what I call a head and shoulders. You got to remember this. When you get to that shoulder line, that's a resistance. I'm going to get out of these calls. But you got to remember that. That's almost a possibility of a reversal. And then I called it down here at the 200 twice. And then we hit the 21. So 640 to 710. And it hit 720. Belch. Elvis is just a Frank Zappa. I know him. pullback, 9 minutes.
Round. But what would your baseline expectations be?
Boom, knife.
From sort of the messaging from Jerome Powell and team be this time around?
So the Fed obviously is not going to be in the business of surprising us. They're not going to cut rates.
I'm looking at the calls now off the top of the orb. The 5660s. Prepare ye in the name of the Lord, 570. I've been lucky all day today. I know my luck's going to run out here sooner or later. We're at the top of the orb. These are the 5660s at $5.70. Man, 55.85 puts are at 1360. Golly. Triggered my alert. Jim's getting on you.
And also, again, potentially, as we move into this quarter with some potential supply shortages and a little bit higher inflation, if he addresses those versus being a little bit more hawkish, I think this market may not react negatively. I'm not saying it won't because I don't know, but I think that being hawkish right now is probably the bad move, or would be a bad move for the Fed. I do think that if you do consider the tightness right now of the federal funds rate, it is tight. If you look at it, I'm around up to 4.4%. If you look at 2-year yields at around 3.8%, that suggests that the Fed, because they do follow the 2-year yield, is still too high by about 50 basis points. So they do have flexibility to lower rates. And keep in mind that even at 3.8%, if they bring it closer towards that 2-year treasury, which again they may allude to as they go forward, not necessarily this meeting, they would still be restrictive. Because if you look at CPI, both in core PCE as well as core CPI, splitting the difference around 2.75%, they would still be restricted even if they cut rates by 50 basis points in the near months.
George Tillis, we appreciate the insights as always. The setup here, we're due to get the news in about 5 minutes, so we got to wait 30 till Jerome Powell makes some more headlines. Have a great rest of your day. I'm sure you got plenty to unpack and explore over the next hour or so. George Tillis, always a pleasure. Jenny, we leave the market at exactly unchanged. NASDAQ's red.
Whoa.
This is pretty common for a Fed day to walk.
Uh-oh.
During the Fed chair press at 2:30 p.m. will the radio silent.
Robert? Rob.
Line, please. Once again.
Your mic's on. Okay. No, it's still on.
The trade exchange swap.
Still on. Come on, baby. I'm back to even here. I need a bounce to the upside. It's kind of risky, I think, but we'll see here. Boom, baby. We got to break past the orb. That orb's a pretty tough booger to break. If we break it, we'll go flying. There's a pretty big spread on this thing. There we go. What the heck? That was a whole $1 spread on the puts. Oh, Nicole has something to say.
p.m. Eastern time, and as we await here on the corner of Wall and Broad for the Fed's decision, the two-day meeting has been underway, and now traders are waiting anxiously as this decision is.
There's no waiting here, baby.
In the meantime, here we're seeing stocks higher right now. The Dow's up 210 points.
She's showing cleavage again.
About 6 points. Gold's at 33.92. I'm taking all these numbers in here, and you can see the small caps also up 1/4%. We await to hear what Jay Powell has to say. Traders now noting, and we have to wait for confirmation. No change, but that is likely the definite outcome here because nobody expected for the Fed to change rates today. The cuts are really due, for the most part, in July, in September, in December. So there you have it. So we have confirmation. It is, in fact, unchanged. And at 2:30 p.m. Eastern time, we'll hear from Jay Powell himself in the press conference, and that, too,
unchanged.
could always be a market-moving event. We have you covered in this special edition here on the watch list on Fed Day throughout this hour to see how markets move as the statement starts to come out and we hear from our Fed Chair Jay Powell what the Federal Open Market Committee has on their mind pertaining to inflation and unemployment and more.
There we go.
Kevin Hayes,
They're not moving
co-host of
much.
Fast Markets.
We're at 640. Oh, darn. I get ready to sell it, and it's back to 6. Man, there's too much volatility in this price action. I don't like it. I'm going to get out of them even. I don't like this.
Eastern Time press conference where we'll get much more color from Jerome Powell, who, unless I'm wrong, the last time he spoke was at the Economic Club of Chicago. That sent the markets tumbling down about 1,000 points in the Dow. We'll see how he presents where he sees the economy and interest rates going in the future. So, yeah,
I'm
so
out.
far, no news. No move from the Fed, and we sit and wait.
I just don't like the action.
Stocks are, the S&P's up slightly, and with the Google Alphabet news and Apple, the Nasdaq is down slightly, Nicole.
And here you go, another gift from Jay Powell, just like last time. First statement, risks of higher unemployment and higher inflation have risen. There you have it. So let me check this out. The Dow is still moving higher, though. Maybe
I voted down.
That he was going to be making some of these same statements. That the tariffs provided uncertainty. They caused risk for inflation and unemployment. And this is what he said a couple of weeks ago, and that's what crushed the markets. Today, maybe the market will be a little resilient because they already heard this story.
Yeah, exactly right. The statement that he put out, he's only reiterating what he said 2 weeks ago, so maybe it's just not as big of a surprise to the markets as it was a couple weeks ago, because let's face it, what he's really saying is he doesn't know, right? He's trying
never
to speculate on
knows.
what he sees could happen, and that's if...
Hickey, this guy's always behind the curve. You know that. I know it. Just say it.
And the China conversations that are going to start this weekend in Switzerland. The news out this morning that the...
If I had Pal's job, I'd be cutting the rates frickin' today. And I'd surprise all these fat cats. That's what I'd be doing.
Rather than have tariffs.
It's like he's purposely wanting to keep this market down at high interest rates.
Territory. He didn't say that. He's actually noting some of the trade being skewing some of the data.
Yeah, maybe he's going to give a more balanced view of the market and acknowledge that when, that when imports jump by 41%, remember that takes away from GDP, that there may be a slight ding to GDP that will probably has a good chance to be revised higher in the coming months. So, yeah, at least he's acknowledging the realities, right? Rather than the rampant speculation when the GDP number came out that this was causing, that all the problems would cause, when really it was almost considered a one-off event because of imports and pulling those in before the tariffs.
Yeah. Kevin Hanks, great to see you. Thank you so much. We want to continue to take a look at the markets in a big picture way. Chuck Lieberman's with us, co-founder, chief investment officer at Advisors Capital Management. Some of your thoughts as we start to get some of the language. Quantitative tightening will continue. Higher unemployment, higher inflation. These are some of the elevated risks now. The swing in X.
Woo, look at that knife.
Remains somewhat elevated. These are some of the highlights of things that are coming in now. Some of your thoughts, Chuck?
He's not saying anything that should catch the market by surprise in the slightest. We know that
Man, the
coming.
puts that I had are $17.
They will be.
$18.
Impose very large numbers, but then suspended a lot of it, all pending the negotiation with foreign
Get ready for the
countries.
calls.
And we know those are going on actively behind the scenes.
The 5630s.
Close to a deal with Europe. We might also be close to a deal with the UK and probably others. So we really don't know how large the tariffs are going to be. We do know that if there are any tariffs, they are likely to lift inflation, but probably just temporarily. But the Fed knows that too. And so it appreciates that inflation news is going to be less favorable.
$6.
At the same time, growth will also be a little weaker. And that push-pull leaves them smack in the middle, which means undecided. They've got to see which way things break and require a movement by policymakers.
I think it's interesting the language says prepared to adjust monetary policy as appropriate. And that seems like a basic statement, but it's not as needed. So he's not alluding to the fact that we need a rate cut right now. Am I reading too much into the language?
Tempting to go out for a walk.
But I don't think
Get some
we're gonna
fresh air.
need a rate cut to protect the economy on the downside. You know, a lot of people jump to the conclusion that with those tariffs, the U.S. inevitably was going to go into recession, and I strongly disagree with that. I think moderation in growth is likely. There will be some adverse effect, but there are also some positive effects. So parts of the economy are going to hold up quite well. I don't see a recession on the horizon. And so once again, we have an inverted yield curve that I think is the market expecting a recession or price for a recession unrealistically. We were wrong for 3 years in a row where the market was. There was no recession. We're back to an inverted curve. We'll be wrong again.
So what do you do? What do you know, when you're trying to decide a portfolio, what do you tell investors here in this current environment?
Well, I think the outlook for the economy is quite acceptable. We're going to continue to have decent growth. If I had a ballpark it, I'd say 1.5 to 2%. That's more than enough to generate solid earnings gains. Valuations are attractive. I think you have to differentiate between the Mag 7 and the rest of the market. The Mag 7 has high PE multiples, but they also have high growth. And so each one of those companies is debatable. You can make a case for them, or you can make a case against them. I think the rest of the market is actually reasonably valued. And there are lots of great values in the market.
I'm in them.
It sold off
I'm going to give this a second.
after the announcement of the tariffs more than a month ago.
I'm going to go for a walk.
We're coming back because the underlying fundamentals are actually solid. So I see lots of opportunities in, for example, the financial sector and the banks. The money center banks are all cheap. All the regional banks are cheap. The insurance companies are cheap. A lot of housing-related stocks are cheap. The list goes on. So I think there are plenty of opportunities, and I would be much more comfortable playing from the long side rather than the short side.
So that's interesting. So you're looking at valuations and saying some of these things have been brought down, some were up off the lows, but that you think that you could find some good deals here in
Come on, baby, break.
in the financial sector, in also insurance and housing.
I'm going to walk up and down the street.
Well, tech is a much more contentious one. So there's no doubt that valuations are high, but at the same time, these are companies that are growing very rapidly. The hard part comes in trying to figure out how long they can sustain that rapid growth. If the growth peters out quickly, then they're expensive. And if the growth lasts longer than we expect and the market thinks, then they're cheap. And they are difficult
I'm
to
even.
evaluate. So
I should have added one, but I didn't.
We like some of
I'm
them.
done.
We own Meta. We own.
I'm just playing now.
Some Nvidia. We own some Amazon. Those are attractive companies in our judgment, but we would not be.
This thing could go to 10
of any of them.
to a grand.
On the other hand, there are lots of great values elsewhere, and we would be much more comfortable in being aggressive in other parts of the market.
I'd like to note that I made the point when he said the first thing that came out, one of the headlines, was that the risks of higher unemployment and higher inflation have risen. This was the language he was using at the Economic Forum recently.
$6.10.
Really turned the market to the downside. And I will say that we're seeing that a bit here as well, because the Dow was up 212 points right before the announcement, and now is at just up 44 points. The S&P was up and is now negative. So the comments from the Fed are pushing the markets lower. Your thoughts?
Hardly a surprise. I mean, I didn't hear anything out of Powell that was surprising, even in the slightest. The Fed is unsure of how to play this. They know the tariffs are going to push inflation a little higher. They know higher inflation will probably depress consumer spending a little bit. Companies will be a little more cautious because of the tariffs. So growth is likely to be a little weaker. They want more data. They need more data to figure out if and when they need to do something with policy. And so they're going to play this in an agnostic way and really wait for the data to push them one direction or another. The market is making a strong presumption that rates are going to come down some more and the economy is going to be weak. And I think that presumption is excessive.
Yeah, and he actually said economic activity expanded at a solid pace. He didn't say economic activity is slowing greatly, and I'm so concerned and may cut rates. On the contrary, right, he said that unemployment had stabilized, the economy continues to expand, inflation remains somewhat elevated, but it's that question mark of more inflation, more unemployment, and that's what's spooking folks. Chuck Lieberman, co-founder, Chief Investment Officer, Advisors Capital Management. Thank you so much. Coming up, we continue to follow all the news, the breaking news from the Fed decision, which was in fact unanimous. They left rates unchanged. The bets were on the Fed funds tool that we'll see those cuts in July, September, December. You're more likely to see cuts then than you are today. But now it's all about the language, which happens at 2:30 p.m. Eastern Time. Jerome Powell's press conference. We will have that live for you right here on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pettin-Ladies. We're live on the floor of the New York Stock Exchange, where traders got very quiet as they waited for that imminent decision from the Fed to hear the unchanged. Unchanged. It's exactly what we expected, but you never know what the Fed may do. In this case, it was a unanimous decision to leave rates unchanged. Now everybody is waiting to hear what's next in this press conference. We're already getting some of the language, and I want to continue to talk about this. I'm speaking now with Joe Hegener of Asterazoa to see your thoughts, your CIO there, some of your thoughts on some of the breaking news here.
Yeah, thanks for having me. Conviction macro theme bars the last few months actually is, there's been somewhat of a contradiction in financial markets between equity and risk assets and what the yield curve and kind of SOFR futures interest rates are implying. We're looking at equity markets and stocks and kind of riskier junk bonds rallying back towards all-time highs. And at the same time, the market's pricing in 3 cuts by the end of 2025. And that sort of dichotomy doesn't make a ton of sense to us, right? It's sort of our belief currently that in order for the Fed to be able to justify cutting interest rates substantially on a going forward basis, things would need to really deteriorate and things would need to get really, really bad. So on the one hand, we have risk assets sort of looking at markets fairly optimistically, and then the yield curve is expressing an entirely different assumption. And so we're sort of battening down the hatches, so to speak. We're using some of these rallies to de-risk within our portfolios and look for a little bit more certainty as we sort of navigate and the rest of the markets navigate incredibly uncertain markets and times right now as it relates to fiscal and monetary policy.
Are you surprised to see the market has sold off? We saw the Dow and the S&P come down. The S&P went into negative territory, had been up 5 points, now it's down 22 points. The Dow was up over 200 points, now is up just a few. To speak of, gold went higher, the VIX went higher, oil came down. I mean, all of these moves are the pull back, risk off, right?
Yeah, absolutely. We're not terribly surprised, at the reaction after this decision necessarily. Our bias really is that we're probably going to see new lows in equity markets over the next handful of months. And we're just really kind of in early innings here as we wait for the macroeconomic data to start playing out as a result of some of the new tariff policies and some of these fiscal policies that we're really in early innings on.
So when you hear from Jay Powell and he's saying things like economic activity expended at a solid pace and that unemployment had stabilized, I mean, there's this certain sense of calm that everything is just right where it is, but he has to throw in that wild card of could be inflation, could be unemployment. I mean, stagflation is something that he's spoken of. I'm just looking through to see if he mentioned it here, but that's another worry, right?
Absolutely. And I think we need to bifurcate between financial markets and risk asset pricing and Main Street economy, right? On the Main Street economy currently on a backward-looking basis looks fine, right? We have pretty much full employment. Macroeconomic data is pretty robust, and with the lens of looking at that kind of backward-looking data, there really is no justification for cutting interest rates, right? But on a going forward basis, the amount of uncertainty that we have as it relates to the potential for macroeconomic deterioration is creating all of these worries and all this uncertainty around the trajectory of interest rates on a going forward basis. And risk assets are just a function of what interest rates effectively are implying in our view, right? Whether it be credit spreads or equity risk premium.
So I'm looking as the headlines were crossing here. So now what do you tell investors to do here in this kind of market? I mean, are you buying dips, selling rips, and trying to be a little less committal at this moment?
Yeah, we're selling rips, so to speak, and we're looking at really kind of battening down the hatches. There's a tremendous amount of uncertainty out there, and particularly as it relates to equity multiples, right? Valuations are very, very stretched in any sort of context, especially when you look at the amount of uncertainty that currently exists as it relates to what our world is going to look like in 6 to 12 months from now. We believe it's really prudent to take a hard look at what our exposures are and what kind of we're exposed to as it relates to trade policy or financial markets effectively repricing in all this tremendous uncertainty from a 21 times forward earnings maybe back down to a longer term average of 18 times, which would imply a pretty significant pullback from here. At the same time, there are some really interesting opportunities in fixed income. There's a lot of uncertainty, right? And we can move up the capital stack, take less risk, and clip high single digit, low double digit, much more creditworthy investments. Okay? So that's what we're really trying to focus on now is de-risking where we're exposed and kind of locking in some of these, a little bit less risky credit opportunities that still, with a long-term view, offer really attractive risk return.
It's interesting, people did move to Bitcoin today on a day where we're starting to see some risk off. Bitcoin has now become something different, right? I don't want to say it's a safe haven because I can't confirm that. But it's interesting when the market shows a risk-off sign, right, where stocks are selling off and things like that. People are still in on Bitcoin. Traders are still positioning for 3 rate cuts this year, right? I think it's 5 for the whole cycle, 3 this year and 2 next year. Does that seem appropriate? Even if, what if we get deals? What if we get deals from many countries? What if we get some good possibilities from China?
That's a really great point, honestly. And I think that's one of the main reasons why the Fed has to hold currently today, and I think even maybe next month. Because if we start to see some trade deals and some certainty priced into markets, we have to think about the other 2 legs of this administration's economic agenda. And there is potential for inflationary pressures, right? If we get some trade wins and we get deregulation and tax cuts, that's very stimulative for the economy, and therefore, I'm not sure we want to be cutting interest rates right before sort of an economic boom, right? That's very akin or very parallel actually to the 1970s, where we cut interest rates sort of prematurely and declared mission accomplished against inflation, only for several years later for inflation to reaccelerate. And then, Paul Volcker had to be installed, and we all know how that turned out.
And I will say, and I've heard this today already, but now I'm seeing some headlines that former Vice Chairman Rich Clarida, speaking on Bloomberg TV, Clarida saying that markets are already pricing in 40-50% chance of a recession. So that won't come as a surprise to the markets so forward looking. It's great to chat with you, Joe Hagener of Asterozoa. Thank you very much.
Thank you.
All right, friends, we're seeing the markets coming up off the big moves that they quickly made, right? So it went from positive to negative, or a really high to less high, but it's off the extremes now, but not too far off the unchanged line. At 2:30, we'll hear from our Fed chair. Until then, we're going to continue to evaluate some of the language and break this down very carefully so you can continue to watch your portfolio closely. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Go, baby.
I'm John White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab.
I'm at
is
6
now
to 1's
powered
at
by
7.
Ameritrade,
Damn it.
giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique
Got an A+.
You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started,
I tried to get out at
Charles
7:30.
Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can
I think I've seen Chris ask me a question here. Why fight the trend? Because trends reverse. Especially on FOMAC day. We got a flag right here. There's $7. Then we need to go up a little bit higher. $760. Yay. Are you shock critical? $790. Take out my
Negative for all countries involved, irrespective of placing tariffs or being a subject to tariffs.
The part that is interesting to me, I think the market always looks ahead, and we were just saying that market's pricing in 40 to 50% chance of a recession. Okay, but a lot of folks are thinking we're going to get a recession and we're going to get 3 rate cuts, and both of those things may not happen. And then what happens to the market?
Well, I think, just looking at this year, just in context, the earnings estimates for major corporations like, Microsoft were already coming down. The market was already ready for, a correction at the beginning of this year just based on valuations and earnings. And then you throw in the, exogenous factor of tariffs. So we saw an exaggerated move to the downside. But I look at it this way, the majority of participants will focus on the consumption side of interest rates. But consumers will consume contingent upon income. At the margin, they use interest from borrowing, but they need permanent income. I think higher interest rates speaks to there's still a lot of demand for investment spending. And if the tariffs end up creating a situation where domestic investment increases, interest rates may remain high, and at the same time, so will returns on investments, which is really what we invest in when we invest in stocks. But also, at the same time, you have to consider labor markets may stay relatively robust. So I think that is a good sign. And then also, tariffs. Tariffs are going to be pro profits for corporations. It really is a tax on consumption at the end of the day. So, right now, profits may be at the margin going down slightly because of some slowdown in consumption, but all this can change if China and the United States really come to something concrete, moving us to the upside, irrespective of the fact that the Fed, has remained still vigilant on rates. They're still relatively hawkish because the federal funds rate is about 1.5% above, inflation, which is around 2.8% using PCE and core midpoint levels. And so essentially, the markets may continue to move higher. Even though interest rates may remain high because the economy keeps moving along. As long as the economy is moving forward, labor, then of course the market and the profitability will move forward. And the only wild card is the unfortunate aspect of tariffs. We just don't know what could happen in that regard, which can create a pretty negative situation for the stock market.
And there are multiple reports now, though it's still unconfirmed, but multiple news media outlets now saying that President Trump said he's not willing to lower up. Here's Jay Powell at the podium in Washington, D.C.
Good afternoon.
Well, here he is.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and
So you're so full of shit.
benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position.
$9.30. God darn it.
Low, and the labor market is at or near maximum employment.
10.20.
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective.
10.20.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns.
Oh, get political, buddy.
And how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged up.
This guy's so full of shit.
Percent remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All
illegal immigration, I want to say it, but I ain't going to. Illegal. Say it.
If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in...
He thinks, okay, we get a fluctuation of 20 million illegal immigrants. Okay? I'm going to repeat. Illegal. And these fat cats are more concerned about cheaper wages than they are about the legality of coming into this country legally.
As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension.
Illegal immigrants are not Americans. Do you understand me?
Respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our five-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we'll look into new ideas. That's a 100% gain. And we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
I got a question for you.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened.
My name's Well, we'll see what Leisman's got to say.
Meanwhile, there's a bill advancing in Congress, and I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement.
See, fat cats think we're doomed, and we're not. We're not doomed.
So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal.
No one can say. And they've always been behind the curve. Always.
Implications for the economy, for growth, and for employment. I think it's too early to know that. So,
not when inflation's dropping, you dick.
To stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace.
Exactly.
The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape.
Exactly.
And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data.
Interest rates are still too high. Credit cards are at 18 to 19%. Think about it, you dingbat.
Chip problems naturally arrived around 2021 in supply shocks. But there are some who argue that the current situation has notable differences. Energy
rent is too damn high.
Housing imbalances look nothing like they did for.
I'm paying $300 more a month than I was 4 years ago on my rent. They do not plan on every single time lease comes up, they raise it, no matter what. That used to not be like that.
Of 2%, and we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is. I'm
going to move back to my property.
But there's just so much that we don't know. I think. And we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient. It is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing.
They're not low.
We'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week. And
so I'm telling you,
where tariffs.
if you get anything out of me, They've been arguing about this tariff deal for over a year now. And it's not affected. It's not affected. Nothing. Inflation has dropped. He said it, we're resilient. This pullback, it was necessary. We needed a pullback, inflation or not. Because we were way overbought, way overbought, way overbought. And we're still way overbought. But we've had a good enough correction now back to the 200. I mean, we're setting good.
Of what the path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession.
No,
and
God.
several are noting that it is.
I'm done with this.
Right, we're bumping our head against the 200 on the 2 and the 63 on the 5.
What's that?
We're bumping our head against the 200 on the 2 and the 63 on the 5 on the S.
Yep, I'm done with them. I mean, I've got in and out of this stock twice since his blabbermouth.
My predictions on the 2 minute 200.
Yeah, I get what you're saying.
I think he's about to dump it. If he's not about to dump it, it's on dump itself.
I don't know. I think we already had the dump. We'll see here. But, let me look at the SPX. We're at the orb, right? On the 1 minute.
We're not at the top of the orb yet.
At the bottom.
Oh, yeah, I'm sorry. We're at the bottom on the 1 minute, yeah.
And the 3 minute. I'd say we're at a pivot point area. A little bit below the pivot point. The pivot point was a little bit higher.
Yeah, and a resistance zone now.
If we break 56, 38, 48, we go higher.
Yeah, but you also have so even if we broke the 200 on the 2,
Yeah.
the orb is only
3 minute.
points away.
Look at the 3.
Oh, you want to go all the way up there.
Yeah. 56, 38, 86. And we'll look at the 2 minute. The 2 minute, same thing. A little bit less.
Basically, you just lost your orb on the 1 and 2.
Yeah. This is the head and shoulders right here. Well, I got a little carried away. Sorry about my reaction with this pow. I just always think he's behind the curve. Let's see if we reverse right here. I'm going to look at the calls. These things drop fast. They dropped at 50% right there. So 590. Recession. How dare you? Let's see. Come on, baby. Break out. I got 540.
Sorry about dropping that F-bomb over.
You dropped it?
Yeah. Yeah, I was trying to get him up there and freaking hit one of the casters with my freaking toe.
Oh.
You know, other rope was gonna just like fell off.
I got an ingrown toenail myself on my left foot. Come on now, don't be dropping on me. I'm going to add on here.
There's 21 on the 5.
Oh, really? We're lower than that, ain't we?
I've got my moment card up. I can tell you exactly where you are on all numbers.
The slashy yes on the 5 minute. But 21's at 56, 27, 72. EMA.
Sorry, I'm in that. Sorry.
Okay. And the 9's at 56, 22.
I got 9 at 56, 16, 42.
EMA or S?
EMA.
I don't know what to say. 5 minute, right? Something ain't right. I could have added on right there. I don't know why I didn't. I was concerned about that 9 EMA because I can't find it on the. There we go. I'll add on here. I don't even want to look at your face. God, he's on both channels. We got a tweezer bottom on the 5 minute. Show me you got your chart up. I want to see your 9 on the 5 minute.
Mm-hmm. Yeah, it's up. 5 minute is going to be the bottom right chart, and you can see the 9.
We're below it.
Bubble off to the side.
Yeah, we're below it.
Mm-hmm. Yeah.
Yeah. Okay.
But the number you were giving me didn't match up with my blue bubble right here.
Well, does your blue bubble match 5622? That blue line?
I mean, it didn't match what you were calling up that you had for 9.
This is what mine says right now. We got a inverted. Oop.
She'll push back down into that gold zone.
Yeah.
I'll take some calls if she does. Go ahead, actually, just freaking set itself on fire on stage to drop below that gold point. That's a major support zone.
I still doubt him.
I doubt myself, Jim.
That or Toss is messing with my charts. Okay, come on, baby. Let's get a bounce to the upside here. I got 360 added on to this one here at 540. I just doing a tweezer bottom on the 5 minute. Does your chart say that?
Mm-hmm.
Okay.
Yes, it do.
Right now I'm almost even. I'm back to 520 now. Almost up $200. There we go. 580. $6. Now take profit. We're almost at the top of that orb again. On the 5 minute, 630. And it could go higher. But I'm out. I really appreciate the orb. That's a whole new thing for me. I didn't even know what an orb was. But it's pretty reliable, like you said.
Mm-hmm.
And I just didn't look at the, I looked at them, but I didn't call it that. And I probably would have not looked at it now if I didn't have it on here this late in the day. There's $8. Dadgummit, I did it again.
Ran back up to the 200 on the 2 minute. That's where it seems to be holding.
Yep. Now we're seeing the same kind of average. I think you're wrong about the 9.
Alright, what do you have for the 9 right now on your 5 minute on the S?
Right now, I'll tell you. I have 56.26 area. 56.27.
56, 24, 17.
Oh, God. You're wrong. 1280. Look at that. Back to yeah. That's almost another 100%er. That's a 100% gain right there. 120, 130%. His is at 28. Josh's. Yep, that's where mine is. Maybe that cloud has something to do with it.
I mean, it's EMA, it's not EMA using close. Are you using something besides close?
Let me see. I got displace at 0. Look at your
average stop simple, cross close.
no, no, I don't say none of that. Close, yes, I'm using close.
And simple?
No, EMA, not SMA. Maybe that's the difference.
Yeah, it is.
You're using the S. Well, you get an F.
Yeah. F for me.
Simple would be different, definitely.
Yeah.
So we both win.
I realize that now. Oh, my cloud.
So what would happen if you changed it to the EMA?
I mean, I am changing it to the EMA because it's supposed to be the EMA.
Oh, okay.
The code got messed up on it.
I got you.
Alright, so now my EMA is going to be 562780.
Yep. Right on. You might be more accurate now.
God help us.
Simple is, simple, but EMA is more price action.
EMA is shorter.
Yeah.
Should have been included, it's what should have been included in there to start with.
I love trading with you. You're not a whiner like some of them I traded with.
No. I'm a software engineer. I know my own buttons. I mean, scripts.
Yeah. Well, a lot of traders have they have egos. You don't have an ego.
After a year, they don't. If they have an ego after a year, they've done something extremely wrong.
Yeah. No, that's when they build them up. That's once they start getting confident. That's when the ego comes in.
Well, down $130 for the day, so I'm not real confident right now.
Oh, okay. I'm not going to tell you how much I'm.
I took that nap earlier today before I went and got my haircut, and it just.
Oh shit! You mean you stayed in the trade while you were gone?
I didn't stay in the trade. I accidentally, I told you, got this bad habit of not changing my quantities. So I
Oh.
contracts instead of one.
Yeah.
It almost got back at even. But if I'd have just bought one contract, I'd probably have one day.
Yeah. And I'm gonna tell you right now, don't leave if you're in a trade unless you're in a swing.
Yeah, especially right after a nap.
Yeah. And on FOMAC day, you got to really be on top of it. Because someone asked me earlier why I went against the grain in here. And on FOMAC day is the best day to go against the grain because you got so many fat cats out there that are bearish. Like you heard, the questioning. Why ain't you calling drama in the market? Steve Leisman, and he's a genuine communist Russian. they want this market to pull back because they know it's overbought, but they're not going to tell you that.
Alright, there's a 200 pep on 1 minute. And it's at the top of the zone, so I think it might get lower.
I'd give it a little bit more time. Well, maybe you're at the 63 on the 5 minute. See, I'm switching back more to moving averages and time frames now with you. We're at the 9 on the 2 minute.
Run.
On the 1 minute, we're at the 200 with a tweezer bottom.
I got in at 55.40 when it had $4.
Very good.
I'm at 480. Nope. I'm on now.
We're post power hour 3 minutes. So you want to be a little careful here.
Yeah. I'll just take my profit at 450. That's $50 a minute. Now I'm only down 80 for the day. That ain't bad.
I hear your frustration.
I've been doing good for like 2 weeks. I haven't had a red day in 2 weeks. This is really starting to agitate me.
Yeah, well, don't let it. Just remember next FOMAC, you need to really be patient and be on your toes. I came out very bullish today, even no matter how bad of a dip we've had. The only thing on my mind right now is that China deal. And we've got big news coming out in a day or two. And that's going to cause the market to run. Whatever the news is. The 5630s, what I'm looking at 650. There's $8, so get out six there now. They're back down to 670 already.
Yeah, it only takes 5 seconds.
Yeah.
Do a $100 swing this someday.
Lot of volatility. I remember last year I was trading and I was switching up my moving averages a little bit. One chart I had the 9 set, or I had one of them set on one chart differently, the numbers, and then on another chart I had it different. They weren't the same, but I was thinking they were the same on my moving averages, and I was going, oh shit, man, this. And I'd take a trade off the 63, and it would actually be the 51. And I'm going, that ain't right. And it took me. I had so many charts up, it took me almost. I had to go through every chart and make sure that I had it set right. All the red lines were at 61.
Yeah, I'm gonna go through all my settings tonight. Now that we found that one, make sure I didn't screw up something else.
63, I mean. But I carried on for like 2 weeks like that, and it just messed my whole strategy up. And my 63 used to be a 51. Randy probably remembers that. Meta just had a double top from last night's close. I'm glad I took him off because he's really starting to frustrate me. J-Pow. I don't like him too much.
Yeah. Maybe one more 200 tap for me to take off, please. So I know you want to pay. I'm looking at you. God, honey, you dirty one.
Was it you that came in sometime last week and asked me what kind of mood I was in? About the market? No, you asked me, what do you think about the market?
Oh, yeah.
You should have asked me that today. Yeah. I wasn't an expert. I really didn't know what FOMAC was until I started trading with Vegas. And all of a sudden, it got very important in the market. Same as I didn't know what quad witching was.
Yeah, I don't even trade those days.
But now I can. Because exactly.
Our is ridiculous.
Yep. And even on the way to it. That whole week. Here's your pullback. Right now, you're at the orb. What time is this? We got time to trade this. The 5630s again. Here at 460, 450. You got the 63 on the orb. On the 1 minute.
Yeah, that's where I think it. If we lose the orb, I'll get out of it.
Yep. And we touched the 50 SMA with the wick. See, right there, $60, 450 to 610, right to the 200. There's $100.
Yep. CD. CD.
Now,
Coming in on the day.
now I'm gonna explain something to you. The 21 and the 9 is a squeeze. And if you can break that, it's getting ready to squeeze when you're between the 9 and the 21, with the 9 on top and the 21 on the bottom. So you can think to yourself, okay, that's a squeeze coming up. It's either going to go or break or drop. And there's $7 right there. I'm out.
Yep, that was 130 for me. So I went from 80 down to 50 up one trade. So.
Yep. Now you can sleep tonight.
Yeah. Now I won't go outside and start to kick a baby down a hill.
56.30, 450 to 7. And right when it breaks that 9, man, I jump out.
It just opened above the cloud on the 1.
Especially this late in the day. Did you see that? You got your orb set up, Randy? I like trading with that thing. Especially when I get a confirmation. Now, one of these days have a Funky set you up with it. I don't know, can I pass it on to him?
Yeah. I mean, I can just give him that code. It was just a snippet of code that you put in the office build a steady. Paste the code that I give you and then name it.
Yeah.
I can share my screen and walk him in how to create a study and all that.
Yeah, might do that here.
Matter of fact, I can just delete the study and I'll walk him through how to build it. I mean, how to do it.
Do it like you did me. That was easy.
Mm-hmm. Yeah. Once the trading day's over and you're done trading, everybody can just watch me build it. Anybody in calls that wants to watch me build it, just build it along with me.
There you go, room. Stick around after hours.
It's going to take literally all 3 to 4 minutes. Another pullback.
So there was 2 or 3 reasons there. We had 3 black crows, tweezer bottom, off the orb, off the 63, and off the 50 SMA. When you get that many confirmations, now we're having a double bottom with a higher low. See this candle here? It's a little bit higher than that one. See if it doesn't hold right there. There's the 63 again. What time is it? 2:17. We're still flush. But we're definitely at support here. 440, 450. Back at 450 again. No, I'll probably take, this has got gravity, so we're squeezing. There it is. 450 to 560. Bingo. See, I would have took that without the orb, but with that orb there, it just gives me another confirmation. And I get out right before everybody else even thinks about it.
There's a double bottom there. Looks like she wants to push down. I'm not getting in this one.
Seemed like we could have one more big leg down, but it's still maintaining the orb on the body.
Yeah. But if you draw your trend line across the top of those 1 minutes, I don't look good.
It's descending, maybe turned into a fallen wedge.
Try my luck with it a bit here.
Careful.
Yeah. Giving it time. I want to see it lose the orb first.
Bam, baby. This is like cakewalk. Yeah, $4 to $5.80 right there.
Yeah. I think it just broke that trend line.
That's 180, 110, and 250 in the last 8 minutes. $40 more minutes left. Critical, you ever traded Fomac much? I'm going to clean this up and show you his orbs. That red line and green line. Now see my orbs, which would be, I'd call this a Darvis box. I guess my orbs continue all day long also. If I'm looking at a channel right there at 56.32.52 all the way to 56.46 would be my channel. It'd be a little bit tighter.
Yeah, but particularly call it an opening range.
No. You call it a channel. My opening range would be...
All the orb does is tell you where the most transactions were done in the first 15 minutes.
Yep.
Where were the most contracts traded up top? Where were the most contracts traded down bottom?
2 to 30 minutes, right? Also 30 minutes, what that one
I
said.
think the program it for 30 minutes. This
Yeah.
This one's a 15-minute indicator.
10-4. by definition. Now, why does it start over here? Oh, well, no. That don't make sense. For some reason, the orbs start later in the day. Look at my look at my chart. Let mine start right at oh, never mind. Something funny here. I got rid of the night. What the hell happened? Real-time Chicago Central. I don't have pre-market on here. Oh, this is VX. Never mind. Shit. We're going back to the megaphone. Get ready. I'm going to movies up. What time is it? Yeah. I am going to 5610. $56.10's at 480, 440. Right here at support. $4. There's 490. Get it?
Mm-hmm.
Bingo. Let's hold on a little bit longer here.
Yeah, as soon as it pops out, I'm getting our traffic in. RSI's almost shown me over, so maybe another 3 or 4 minutes.
I should have sold a merit. Let's see if we hold this megaphone. Did you see that room where we started out this morning? Let's extend that all the way down. We're at 5, boom, baby. 520.
Yeah, she was just taking a breath, though.
I'll probably have to use a market on this because it didn't sell my $5.
You are almost, I don't know if that's a head and shoulders or not. On that 1 minute.
Yeah,
Did you say it's 5612 level on these?
it's a right shoulder. It's a right shoulder, but not a true head and shoulders. Triple bottom. There we go. 3 black crows with a long leg doji. There's a lot of volatility in this trade right now. A little risky. I'm watching the tape too. I want to make sure we still got a lot of green going on. I'm looking at the SPY, you idiot. I'm trading SPX with the SPY.
Robin Hood is closed. Put it down and then give me my comments. Still by the end of the day. Sounds like a plan. Anyway, I'll go with some of the best calls.
There's 480. Got an ascending triangle here out of this flag. It's higher lows. Add two more. $250. I don't know if I've got this right or not. I got two, now I got three. There's 150. $4 I'm getting out. $4. Thank you very much. $300. Now watch it fly. I took it at the bottom of that candle right there and added. There's 470. There's another $300. $520. Look at that, and it's been another $420. Robert comes in here late, nails it. $56.20s he took. The red and green doesn't mean nothing. You should be looking at the velocity of bid and ask movement. Yeah, on the. It doesn't really help when you're trading SPX. Level 2, Josh. I got the active trigger. That really don't help with the SPX. You got the SPY. You can't tell it on the SPX, so I'd have to be looking at the SPY. They don't move around so much. $19 more minutes left. Boom, Abe. Godly, $14. I sold them at $4. Unbelievable. That'd been $3,000. 2,400. Oh my gosh, 2,500. That'd have been $6,000. 29. Oh no. That'd been $7,500. On 3 contracts. $900. Can you believe that? Would you stay in them? $3,600. 39. 4. D2. 44. $4,400.
Bet it is.
My God. I sold them at $4. That'd been $12,000. Unbelievable. There's no way I'd have held them that long. I get a profit like that, I'd be out in 1,000. No way. The 5610s went from, never mind. You heard me. Oh. Jesus. These things went to 44.80. And I about bought another one, just one. Once it hit $1,000, that'd have been 3,000. And that 3 minutes, I mean, that went by 2 minutes went by so fast. It was like 50 seconds. Oh, yeah. Jesus. I should have kept one runner. Randy said he wasn't overly confident in that play. You take them words back? Randy? I've been bullish all day today. Every pullback I've almost took advantage of. I wish I'd held on to them things. That'd been 12 grand. I mean, look at that. 8 minutes, $12,000. A little longer than that because I got in them right here. Good 11 minutes. No. 3, 6, 9, 10, 11, 12, 13, 14, 15, 16 minutes. 15 minutes. I got 10 minutes left. I ain't gonna trade no more. But if we're at a support here coming up. Let me see. The 5620s. I'll go for it. 5620s at 220. Dadgummit. They were up. There's 350. 410. $450, $480. There's $490. I'm getting out. $580. Thank you very much. $740. There we go again. What's it be? 30,000 trade now. 810. 9 thuck. 950. They're $11. Head and Shoulders. They're at $8.40. Well, that's good enough for me. It's $3.60, 360 a contract times 3. That's 1,000. Yeah, that last part of the day. I haven't had a red trade today at all. I love Fomax. Tempting to go out and have dinner tonight. I'm really not that hungry. Them hamburgers at lunch, I just can't beat them. I never thought how important the bun was to a hamburger. Never crossed my mind. I probably ate, I don't know. I'd say 3 hamburgers on average for my whole lifetime. a week. 2 of them. Something like here lately, it's been 5 or 6 a week. Since Vegas got me that waffle cooker. Did I do what? I'm about ready to give him a reprimand instead of yellow color. But he's working, so I'm letting him off. At least that better be his excuse. See if that works. Well, I've got the yellow pushed. How about pink? Let's see if that shows up. Yellow. No. There's your yellow. He's yellow now, but that ain't doing it too good. He's yellow now. What a day. What a good day. What a fun day. Now, I came in here bullish this morning. I made that first point to let everybody know I'm no matter what. Because to me, earnings have been great. Inflation's down. And all the fat cats can worry about is the tariffs, which haven't hurt anything yet. Employment numbers were great. Earnings were excellent. Fat cats are, I think, I'm not, I call myself kind of a psychic. But I know they've been crying about these government jobs. To me, we're saving money. Our country said, I haven't even looked at the debt clock yet. But in my opinion, less government jobs, the better off. And they worry about the immigration, that we don't have any more illegals coming up from the border. Human trafficking. So I think the opposite of a lot of these fat cats. I heard one this morning says, I ain't trading this market on CNBC. It's too much uncertainty. I'm not going to trade. I can't trade this market. I could, if I was trading hour to hour, there's no way I could do it. And I'm going, what? We sit here every day and trade it from hour to hour, and we make a ton of money. To me, the best time to be trading, the best time to be active is right now. None of them have mentioned we come close to the 200. Let's put the SPY up, or the SPX here on the weekly. Not a one of them have mentioned the 200 at all. And look at how much we bounced already. From 4,800 all the way to 57, almost 900 points. We're almost halfway back to the top. And they're saying they wouldn't trade this market. We hit the 50 SMA. Last week I said this week, if we can't break the 50, and you can go back and watch it on my video, earnings video, that we're going to have some resistance. But we're not going to pull back down here again. So these people that said they can't trade the market, they've missed out on a heck of a run. So I don't understand them. It just continues. Steve Leisman gets on there and asks Powell. You know, it's like they're looking, they want to crash. Or they're waiting for something. And I'm not waiting for nothing. I'm not behind the curve like these guys are. They keep bringing up recession. We haven't had a recession since Obama took office. And I've already called out 2 recessions since then. COVID and then the Biden. And they wouldn't call out the recession we had under Biden for a year, when we had 3 months of detraction in supply chain. And the market sold off 40%. They didn't mention recession once. As long as them government employees were still working, they were happy. Okay, well, they averaged 60,000 a year plus. I don't feel a recession. I don't even think about it. Not when the unemployment numbers are great, not when inflation's dropping. So it's like they're teaming up on Trump when it's actually been better than it ever has been. Earnings have been a blowout. That's right. They changed the definition of recession on Google. The recession is when you have 3 consecutive quarters of unemployment going down. That's the way we used to call them. But the Biden administration printed so many government jobs, 47,000 a month for 2 years, that we couldn't afford. And they spent $14 trillion doing it. And we can't spend money like that we don't have. They didn't care about the private sector. And to me, the private sector is what creates the jobs, small businesses. The real jobs. And they've been at a steady rise. So I look at, I just don't understand. I can't stand like these guys, these fat cats, these rich I had Bob Iger on this morning. I could take 5 minutes of him. I knew we were going to bounce. You go back and listen to my video when we were down here at the bottom. We hit that 3-year COVID low. I said, this is a strong buy, and we're up $20. And we're about at resistance now. But this thing will run all the way up to the 200 again. And their earnings were blowout. Disney Plus wasn't too hot, but everything else was. And they're opening up a new park somewhere, I heard. Disney cruises are really if you're into Disney, the Disney cruise is, I heard, one of the best. If you're really into that kind of stuff, I'd probably go, but I'm a little bit more sophisticated than that, but I'd still probably enjoy myself. I'd rather be at a resort and be relaxed and not be bunched up with a bunch of comedians. I don't think I'd take a voyage cruise, Virgin, whatever it is. I don't think I could handle that. But I'm feeling very bullish. After everything that we've had, these earnings, I've been watching earnings real closely. And most of them, all in all, been good. But they haven't been given any guidance. I don't understand. They have great earnings, but they don't want to give guidance. I think they take Trump a little bit too serious. And they play right into his hand. I take him serious, but I know how to make a deal. Here another month or so, after we get through China, we'll be back at the all-time highs. All he wants to do is get rid of the fentanyl. It seems like these fat cats want more fentanyl, the better. with the human trafficking and everything else that goes along with it. But, I think closing the borders is a good thing. It seems like they don't. So I just think the opposite of them. I'm very bullish right now. I've been bullish for the last month. Any dip to me is a buy. I got stuck there. I've been stuck in 3 bad trades in the past month. Very seldom do I do that, but I cost average a lot. If I'm in a trade, and it drops 50 cents, I'm going to jump in it because I think I'm at a good spot. But I'm really excited about, I really took this very, there's something coming out. Trump said some big news is coming. Now, I don't think he would mean to say that unless he really meant it. To me, he's trying to tell the market something, but not actually saying, so he won't get in trouble like he did last time. When he said something, the market's getting ready to rebound and all the fat cats got in there, and we had that day where the options went from $7 all the way up to $120, $140. That day I would have made over 250 grand if I just didn't play the getting in and out of these things like I do, like tonight, getting in 3 contracts for $3.50 and they run up to $44. That'd have been $12,000 in less than 12 minutes. To me, we're going to have one of them big days coming up here in a day or two, or maybe by Monday. I'm feeling it. But that's me. Yep, FOMAC is too political. I agree. And they're not supposed to be. What was that, Smell and Yellen? She was very political. And she gave China hell. And you didn't hear nothing about that. I complained about it. So what is she saying? What is she doing? And Trump's doing exactly what the politicians have been wanting to do forever. Tariffs. Now he's doing it. They're totally against it. So I'm going to wait. He's going to come out with the news and they're all going to go after him saying, well, he's pumping the market. And I think that's what he's going. I think that's exactly what's going to happen. He's going to say something good where the market's going to start rebounding. He doesn't want this market down. It's the opposition that wants it down. So let's have a good day. I come in here this morning very, 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 very bullish, and I traded it like that. It was a scalping day. Definitely. There's too much volatility. And someone asked me today, why are you going against the market, the will of the market? And we were going down, we were selling off there. It was a fast sell-off, and we bounced up real fast back. That's why I got in it. Buy its support, sell at resistance. I'm in another room calling these calls out, and they're going, what? And then they break out, and they, damn, Jim. How'd you do that? because they've been listening to all the riffraff that the market makers are saying, and all they're trading it. I guarantee it, they're trading it. Warren Buffett comes out and says he's worried. He's sitting on $350 billion in cash, afraid to trade the market. And look what he's missed out on. I guarantee he bought puts. I caught him doing that one time. I didn't know he traded puts. I thought always he was like, hold and wait kind of guy. But no, he got puts in there too. And that was years ago, but he probably still does. So I'm going to get out of here. I got to go buy some tape, two-sided tape. Then I'm going to come home and relax. We got to go to the bank. But today was a real fun day, real profitable. Scalping days, you can get in and out, in and out, in and out. Look at these up and downs here. Well, from that support line. Nailed that double bottom, nailed that, nailed that, nailed that. Nailed all these up to the 200. Double top. It's a beautiful day. Playing that side channel. Let them keep downplaying the market. So I'm going to get out of here. Hope we all had a good day. Don't get caught up in the riffraff. Trade it day by day. I'll catch you all later, YouTubers. Hit that like button. Thank you, S.